morning, everyone, and welcome. Well, I should say good morning or good afternoon or good evening, wherever you are in the world. Welcome to day 2 of the Traders Conference. We are going to be having another great day of education. We're excited that you're here. Hopefully you were able to attend yesterday and see some of the awesome content that we had provided. We're looking forward to another great day. Just in case you're not, this is your first time here, we are MetaStock. We are purveyors of technical analysis and charting software. Just to kick things off while we have a few minutes, I'm just going to show you a quick video and then I'll be right back with you.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat. Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Okay, everybody, thank you so much. It looks like we are going to
MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter?
Okay, sorry about that. We were playing a video on the other side and it crossed over. So apologies for that. We should be good to go. We're getting started here in about 2 minutes. Let me just take a second here and introduce you to what's going on today. So we've got a great lineup of speakers coming up here. So if you go to, I put it in the chat link, metastock.com/traders-conference. If you click on that link, it will actually take you, let me pull it up here. Let's see, no. Well, that doesn't want to show very well here. Let me see if I can get it to load here. Apologies for that. Looks like we're just trying to get the technical glitches out this morning before we get started here. Okay, so if you go to that link, metastock.com/traders-conference, it will take you to this page, and this page will give you an overview of all the speakers today, what they'll be talking about, and the schedule. And here you can also register for prizes. So just in a few minutes, we're going to be getting started with Vince Vora. Vince always does a great analysis of the markets, so stay tuned for that. And then you can just see the full lineup of speakers that we have here. We have a great lineup ready to go for today's session. So go ahead and then scroll down to the bottom, fill out this form down here, and you will be registered for the prizes as well. So
Gibby. We're going to be kicking today off day 2 of our online conference. I hope you're doing well. Thanks for joining us, and it's good to see you. Let's go ahead and get started. I'm going to go ahead and read. I'm going to go ahead and make the lawyers happy. Let's do that first. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Hope you enjoyed that. We do have a really, really good lineup of speakers today, and I hope you're here. I hope you enjoy it. I'm really, really looking forward to it. Hope you were here yesterday. We had a great lineup yesterday as well. So before we get started, I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been making trading magazines since 1982. It's a great magazine. I get it every week, month, every month. And they do a good job. And we really appreciate their sponsorship of the events. They've been sponsoring us forever. The other sponsor I want to thank this morning is CMT Association. CMT Association is an organization with a huge reputation that's designed to help traders with risk management, quantitative systems development. One of the things we always have Tyler Wood come in from CMT, and he's going to come in a little bit later in the week. But one of the things that's really eye-opening to me is how much a CMT accreditation can help you. Having those CMT letters after your name, if you're looking to work in the financial industry, manage money, or if you're managing money and you want to increase your money under management, a CMT designation actually helps quite a bit with that. And they have a hugely good reputation. We're proud to be associated with them. If you want to find out more for yourself, go to cmtassociation.org. So there you go. Those are the sponsors of the event. Of course, we're MetaStock. You can see it on my shirt. If you're not familiar with MetaStock, maybe you just came across the channel today or tomorrow or in the future sometime, and you're just kind of watching this. MetaStock's been rated #1 in its price category. This year was the 30th year straight. We're going to talk a lot about how it can scan markets for you, test ideas, do forecasting. We're going to talk a lot about kind of how much value MetaStock can do in your trading. But that's who we are. We're doing an extended trial as part of our Welcome to MetaStock event conference this week. Or if you do want to subscribe to MetaStock and see why it's rated #1 for 30 years, if you pay for a month, we'll actually give you a second and third month for free. So you can find out more about that. Again, we're going to be talking about it all day. MetaStock.com/conf promo, MetaStock.com/sales chat if you ever have any questions, or 800-882-3040. There are a few questions that we get all the time. The biggest one is, where do I get the replay? Our replay for D2 is going to be up on our YouTube channel. If you're watching on YouTube, that's the same place you're already at. If you're watching in GoToWebinar, though, here is the link. What we will do is automatically send that link out to you on Friday for the whole week. We don't have a way to automatically send it out every day, but on Friday we'll automatically send it out. I will be pasting this link up quite a bit today as people ask about the recordings and that kind of stuff. So with that being said, let me know if you can hear me. I've been talking for a minute. That's usually the first question that I ask. I assume since everybody isn't saying I can't hear you, that you can hear me, but let me know how you're doing. Say hi in the comments. It's good to see you. Vincenzo, it's good to see you. OWE, it's good to see you. DT, it's good to see you. All of you guys here in YouTube. Start saying hello, you guys, and GoToWebinar. Let me know everything's going well. Our first presenter today is a good friend of mine, Vince Vora. Vince, I love how he can take very complex subjects and talk very simply. I love kind of the strategies that he employs. I love kind of like the way he likes to talk about money management. He's one of our best speakers. He's definitely a great system designer. Hello, Pierre. Hello, Santosh. It's good to see you. He's going to come in and talk a little bit about kind of like the markets, and he does a great job. So, Vince, let's go ahead and get you in here. How are you doing today?
I'm great, Jeff. Good morning. Thanks for having me in here. How are you?
Good. Let me go ahead and see oh boy, where are we? There it is. Okay. Got lost in the interface for a second. Let me go ahead and make you the presenter.
Sure. That'd be great.
Yeah. I'll let you know that we can see you. So if you guys have questions as we go, whether or not you're on GoTo or on YouTube, chat them in, and I will make sure that Vince sees them, time permitting. Vince, I can see your screen. I'm going to get out of the way. It's your turn.
Okay. Thank you again. Thank you, Jeff, and everyone else at MetaStock. Great partners of ours. We've been working together for years, and I'm glad to be back today. There are a couple of things I want to talk about today. The main one being our Victory trading system that we put together with the help of Jeff and his team a few years ago now. I guess it was just before the pandemic hit, and I had developed the system because I wasn't anticipating a more volatile marketplace, but I had no idea what was coming at the time. But I'm very glad we did put this together. It's worked very well for us. So I want to share that with you. And I especially want to talk about the volatile markets we're in now and share with you how I like to trade those markets. As always, we want to make this as interactive as possible. So I see a few of you already typing in here, and that's great. Hello to everyone this morning. Oh, it looks like we have people from all over the place, including Antigua in the Caribbean. Welcome. Thank you for joining us. By all means, enter symbols that you want me to pull up on my chart, and we'll see together exactly how victory would have worked out with it. Any questions you have, by all means, we'll try to answer as many as we can as we go through here. Again, my name is Vince Vora. I am the head trader at Trading Winds. I've been in this business for a very, very long time, over 3 decades now. Throughout that, we've put together several strategies and trading systems, but the victory method really is my baby, and it's what I'm solely trading with now. My focus over the last several years, about 7 or 8 now, is coaching students. So I'm very happy to do that. And we have a great membership group at Trading Winds, some great traders, and we get together 3 times a week. I'll tell you a bit more about that later. Let me just remind you quickly that trading can be very risky. So please don't trade with real money until you are completely comfortable with the system you're using. Now, having said that, that is the end of the slideshow. I am not going to show any more slides. We're going to get directly into the charts here. And what you're seeing here is a chart of SPY, the ETF for the S&P 500 on a weekly time frame. That is the time frame that I look at to judge the direction of the market overall. If you're more of an investor, you want to focus more on the monthly chart. But if you are more of a swing trader, you want to trade off the daily time frame, but still take your overall market direction from the weekly. We'll talk more about this as we go through. Let me just quickly explain what you're seeing on this chart. All these arrows and circles and this blue line here. This is our victory indicator. So whenever you see an arrow, it'll be either green or red. Green obviously indicates a long setup, a long trade. Red would be a short trade setup. These circles that you see in green and red are basically the same thing. The only reason that they're circles and not additional arrows is because we're already in a trade. So if you look at this example here, signifying a long position here, we're already in that trade, but the same criteria that came together here to create this arrow has come together again. And so since we're already in a trade, we call this a long re-entry. So if you're already long, you can feel free to add to your position at that point, or stand pat with your original and just, use it as further confirmation that you should remain in that trade for now. If you missed the initial entry, then you have another opportunity to enter this trade on every subsequent green dot along the way. And now, I do want to say the intent here of this add-on, this victory add-on, the intent is not to take every single trade setup. I will explain exactly which ones we prefer to trade with. And if you decide to use this add-on, there will be a couple of training classes that will come with this add-on that will explain exactly which ones you should be taking and which ones you should not. But I will break it down for you very simply today. So, as an example, if you're in here and you get a red arrow, such as this, you want to exit that long trade. You don't necessarily want to go short. I'll explain the criteria for short in a second, but you definitely want to exit that position, okay? Sometimes the system will switch from long to short immediately. Other times, it'll give you an exit and a yellow bar or a couple of yellow bars. The yellow bars mean there is no trade, not long, not short. You should just sit on the fence and wait. And then it'll give you the next direction of the trade. One thing that Jeff and his team did that make this very easy to follow is once the system identifies a direction, a trend. So in other words, this one here, the green, every single bar will be painted green until there's some sort of change, either an exit or a switch in direction, etc. So it's very easy to remain disciplined and stay in that trade for the life of that trade. Okay, so if it's a long trade, all bars will be green until you get a change in direction or an exit. And if it's a short trade, they will all remain red. This blue line that you see, this is, and you'll see that I'm hovering over it, it is the 20 period simple moving average based on the close. You can change this to whatever you want, but our testing was extensive, and we found that the 20 period simple moving average works best. Now, the way we use this is to judge momentum. What we want to do is, first of all, clearly identify a trend, and then make sure that there is momentum behind that trend. When you are trading with trend and momentum on your side, half the battle's already won before you even enter the trade. It makes life so much easier for you as a trader if you're going with the flow. So how do we identify trend and momentum? There are many ways you can do it with technical analysis, but Victory basically does it for you with these arrows and circles. And for the 20 period simple moving average, what you want to do is make sure that it is sloping in the direction of your trade. In other words, if you are considering entering a long position, you want that 20 to be sloping lower. Now, the slope could be, just a minor slope in that direction, or it could be a very significant slope in that direction. The higher the degree of slope, the better. It means more momentum. So the sharper that slope, the better. And those are the trades that you want to focus on. About a 45-degree angle, such as this, is what I would consider significant. And anything greater than that, such as this stretch here, it is really, it's exactly what you want to see, what you're hoping for. And these are the type of entries you want. You can see that recently, the 20 has been sloping lower here. And there were some very nice entries and re-entries along the way. And now the slope has just turned higher. But, again, can we say there's a real strong trend here? There is not. And that's what we have to use the weekly for and judge. So here, in a nutshell, is what we want to look for with Victory, both long and short setups. And then we're going to go through several charts, all different types of markets, different time frames, and I'll show you exactly how it works. So if you are looking for a long trade, what you want to see is you want to see a setup, meaning either a green arrow or a green circle here, come together along an upsloping 20, okay? And the closer that bar, that setup bar, is to the 20 period moving average, the better, okay? When price pulls away from the 20, it tends to snap back at some point. So you will find entries that happen when the bars are further away from the 20. I would stay away from those because you're at risk of getting in and then having it snap right back towards the 20. So the closer it is to the 20, the more conservative that entry is, and the higher the probability of success you will have on that trade. All right. And so you only want to focus on the ones with slope. Let me go back to the daily time frame so we can find areas where there's a bit more choppiness here. So, for example, this area. See how the 20 is more or less flat in here? And this is where traders lose a lot of money. They get chopped around. In other words, if you were to get in here on this green arrow, see the 20 is even slightly sloping lower, which is the opposite of what we want to see for a long, right? If you got in here, you'd immediately get stopped out. You get short, you get stopped out. You get long, you get stopped out. And that's what you want to avoid, okay? So you want to use the 20-period moving average as a confirming, as a confirming indicator, meaning you see this red dot here and it's telling you to go short. You look at the price action and yes, it's been trending short. That looks great. But if the 20 was flat here, you'd want to avoid that trade. But since it is sloping, and in this case, sloping significantly, then yes, you want to jump on that trade, okay? So long trades, you want a green arrow or a green dot along a upsloping 20, and the closer the setup is to the 20, the better. The opposite is true for short trades. You want a red or a red arrow or a red circle along a downsloping 20, and the closer it is to the 20, the better it is, okay? It is that simple. So when you look at any chart, we can go back and look, and obviously, did we have upward slope on the 20 here? Yes. Green arrow near the 20. Did the trade work out? Yes, it did. Here a little further away, and that's the risk. It snaps back. Now, not every trade is going to be a winner. I don't want to, put false hope in your head and make you believe that this is 100% accurate. It is not. It is highly accurate. If you follow what I'm telling you today, not only will you have more winners than losers, but your winners will be much greater than your losers. The reason being, you'll notice as I go through the charts that as soon as this starts going in the opposite direction, you will either get a red arrow or an exit flag. Okay, it is a very conservative system, and it was designed that way intentionally because I myself am extremely conservative. I hate risk. I absolutely despise risk, and I do everything possible to eliminate risk from my trading. So the slightest bit it goes against me, I want it to get me out of there. I have no problem getting out and back in. I have no problem with that. Commissions these days are insignificant. They don't bother me at all. But you want to follow these rules to a T. You want to trade with trend and with momentum on your side. Don't worry about trades you miss. A lot of times, for example, this one here, this short, look at the 20, it's flat, right? We can look back with hindsight and say, wow, that would have been a great trade to take. I missed that, right? Who cares? It's about the ones that you do get. 9 times out of 10, you take this setup here with a flat 20 and you will lose money. You will get chopped around, okay? So don't worry about picking tops or picking bottoms. That is not how you make money in this business, okay? Consider losses a cost of doing business. They will happen. Your goal as a trader is to keep them to a minimum, all right? Keep them to a minimum and allow your winning trades to run. I know you've heard this many times and it's a lot easier said than done, but this is one of the things that Victory does very well for you, okay? So let me just see if there's quickly any questions. Then we're going to get to several examples here. Let's see. Dana was saying the uptrend and arrows are easy to see and follow. Tell us about what to do on the right side of the graph with the choppy down. Okay, I'm sorry. Was it this chart, Dana, the daily chart we're looking at, or was it the weekly chart? Because you bring up a good point. And this is one of the main things I want to talk about today is how to trade in a volatile, choppy market versus a nice, slow but steady, trending market. See, this was a nice bull market after that pandemic drop. This is about the easiest kind of market you will ever trade in. And if you follow these rules, you will have winner after winner after winner, not a problem. The problem is trading in this volatile market. So let me show you before I show you more examples of what Victory can do. Let me explain how I trade these markets. And, you don't need to have a ton of experience with technical analysis to know when you are in a volatile environment versus a slow, steady trend. Look at the price bars throughout here. They're almost all equal in size, right? It's just every day a little gain, a little gain, a little gain, right? This is a fantastic environment to trade in. The amount of risk in here is very, very little compared to this. You look at these bars, and they're much bigger in range from low to high, right? Compared to these. They're almost double, sometimes triple in size in daily range, back and forth, or weekly range, and this is the weekly chart, right? And so a lot of times you'll get, a big up day, then a big down day, a big up day, big down day. That's how you get chopped around as a trader. So what you want to do in an environment like that is do your homework and find slow, steady, trending markets like this rather than this. Now, this is an index. This is the S&P 500. It's 500 of the largest companies traded in the US. So it's a great overall indicator of what the overall market is like. But regardless of this, there will be companies that trend very cleanly throughout an environment like this. I think one of them that comes to mind is Crocs. Let me go back to that chart and have a look. Yeah, you see Crocs? Look how steady this is all the time. Just nice and clean, right? So there are standouts like this that do their own thing in the market. They don't necessarily follow what every other stock is doing. Yes, if there's a major news event, this could be impacted as well. But for the most part, this beats to its own drum. And so you want to create a watch list of stocks that are like this. Now, will it take some homework? Will you have to go through a few charts to find these? Yes. But once you do, you put them on your watch list and you just wait for the next setups. Look how clean this is. Going back to victory, would I have taken this trade here? I'm telling you, with 100% confidence, I would not have taken this trade. Why is that? The 20 is sloping against me. There is no trend at this point. If you look from here to here, from left to right throughout this whole area, we're just kind of bouncing around within a range. There is no clean trend. Once the 20 is sloping in our direction, now there's a clean trend. So you enter here, you add here, you add here, you add here, and then you're out here. Now, you can tweak this to your style as a trader. Every trader is different. Every trader can be a little more conservative than others, can be much more aggressive than others. So along this way, feel free to be taking profits along the way. Scale out, your money management. You need a money management plan along with your trading plan. Just selecting entries and exits is not enough. So briefly, money management. If you have a pen, you want to write this down. What I do is first of all, only put half of my balance to work at any one point. So let's say I have 100,000 in my account. I'm never going to have more than 50,000 of that money actively invested in the market. And the reason why I do this is because we never know when there could be another black swan event, like a 9/11, for example. You just don't know. So for me, like I said, I'm extremely conservative. I only put half my money to work that way. It's still plenty to make a good living at this. You don't need a lot, but you only want to put half. And then out of that half that you have, all right, you do not want to put any more than 5% of your balance in any one trade. And your goal should be to reduce that over time. So as you grow your account, you go down to 4.5%, to 4%, 3.5%, 3% exact, etc. Because as your balance grows, even though it's a small percentage, it's still going to be a big chunk of money you're putting into each trade. If you can get to the point where you are only investing 1% of your overall account balance in any one trade, you are doing very well in this business. The trade can completely blow up on you. Completely. You can lose it all and you're only down 1%. That's the point you want to get to, okay? But again, in here, where there really isn't a strong slope, you want to ignore these setups, okay? You do not want to go short here, even though it looked like a good trade. It looked like it afterwards anyway. Slope was higher. You do not want to take this one. Slope was against us. You definitely want to take these, okay? This one, no, I wouldn't. Usually there's some sort of pullback and we get an opportunity to get in. Here we did not. That's okay. Now it's turned, and now any one of these, we had slope and we're making money again, okay? Now, the other thing you can do in these volatile markets is look at ETFs. First of all, ETFs do not have earnings releases, right? A lot of times on stocks, you get an earnings release and there's a big gap one way or the other. You have to be aware of that. I try to avoid those. You don't have to worry about that with ETFs. But with ETFs, there are ETFs on just about any market. So you can look at an ETF on an index. So, the SPY, which we looked at, is an ETF on the S&P 500. The QQQ here, is an ETF on the NASDAQ 100, for example. But there are ETFs on gold, on oil, on wheat, on anything, right? Bonds and any market. And there's hundreds of them out there these days. So once you identify a trending market, and for example, the bond market has been trending very cleanly for the longest time throughout this crazy volatile market. And so you get some real nice moves on the bond market. BND, the Vanguard total bond market here, ETF, you get some great trades along the way. Why? Look at the price action, very orderly compared to what you're seeing on the S&P or on the Qs right now, right? And there's several of these that you can look for, and you can just Google bond ETFs, for example. There's some great ETF related websites out there that you can use, but just a simple Google search will give you several of these. And there are ETFs on just about everything. This is a mega cap, right? There's medium cap, small cap, you name it. But if you look at these trades where you have slope in your favor, in the direction that you're trading, that's what matters. So again, would I take this one? No. Why? The odds are not in my favor of a successful trade. So looking back, it would have worked out great, but the odds are not on my side because of the flat 20. Here, the odds are on my side and it moves up, right? Here, the slope is on my side and it moves up. Re-entry here and it moves up. Re-entry here and it moves up. So again, look, do I take this short? No. Why? The 20 is not sloping downward. When it pulls back, now it is sloping downwards. Now I get in here and it works out nicely, right? You get in here and it works out. There will be some that don't, like this little red arrow here. We were out the very next day. Very small loss compared to much bigger wins. That's what you want, okay? By focusing on the slope on that 20, you not only reduce the number of trades that you take, you eliminate many, many losers, okay? So following that one rule, you will have way more winners than losers, and that's what you're looking for, okay? Now, during the couple of training videos that we send you with the add-on, we will talk about things such as support and resistance, for example. So, for example, if I was going to consider taking this entry here, I would look to my left to see how much prior activity was there at that price level. And if we're near an all-time high, for example, that is the best case scenario. There's no resistance overhead. We have a clean trend. We have strong momentum on our side. That slope is significant. There's nothing preventing this from going higher. That is the best case scenario. Those are the ones I really want to focus on, right? If we had a ton of prior activity here that was going to act as resistance, then I want to pass on that trade. So we're going to show you things like that. We're also going to show you how to identify certain chart patterns that you can incorporate with the add-on to increase, again, your odds of success. So, but getting back to Victor, you can trade this on any time frame, any market. So far, I've shown you a few ETFs. I've shown you a stock or two or an equity index. Let's look at something like gold futures market, for example. Okay. It's not going to be any different as far as the add-on is concerned. You look at the exact same thing. You're looking for a green arrow or a green circle with the 20 sloping upward. Okay. Or you're looking for a red arrow or a red circle with the 20 sloping downward. It really is that simple, but it is very effective. Again, here, that one works out. That one to some extent. Sometimes, if you're staying in right till the end where you're getting that exit, sometimes there will be news or one bad day where it completely wipes out your profits. It happens. It's going to happen. But for the most part, you're going to look at trades like this. And again, the degree of slope matters. This area here, look at the 20. Look at this chop fest. Green, red, green, red, green, green, red, green. You could lose a ton of money by trading in here. That is what you want to avoid. Okay? You definitely do not want to look at something below the 20 to go long. That should not happen. But let's go from a weekly time frame all the way to like a 1 minute chart. Okay? Here it is on the gold futures, 1 minute chart. Okay? Now, let me see if I can refresh this. I think there we go. So you always want to look at a chart and ask yourself, is it trending? Is it a nice, slow, steady move? Or is it this kind of action? Because if it's this, you want to stay away. Look at the size of these bars from high to low compared to the size of the bars here or here, right? This is the kind of market you want. Right? This is the kind of market you want. You want to stay away from this stuff. So whether it's a 1 minute chart, a daily chart, a weekly chart, you want to look for, and I'm not quite sure why this looks odd right now. The 20 is mixed up. Let's go to a different market here. Let's look at TLT. There we go. That looks a little better. So again, TLT is the bond ETF. Look how clean this is. Look at the size of the bars. All pretty much the same, aren't they? Right? All pretty much the same. There really is no volatility here. That's exactly what you want to trade. And look at these, how easy it is to not only get in on these. There's only two things to look for, right? A red or green arrow or dot, and whether or not the blue line is sloping in the direction of the trade. It can't get any simpler than that. It really can't. But the reason why it's so effective, see, sometimes as traders, we sabotage ourselves because we have an impression of how complicated or how difficult trading can be when, it's hard, especially for technicians, to believe, I'm looking at some kind of squiggly line here and I'm supposed to believe that this is going to help me make money. It's a lot more than that. It's a lot more complicated than that, but it can be simplified into using just a couple of little indicators like this, okay? Because it's what these represent that matters, okay? Overall, what a chart is telling you is what is actually happening out there as far as buys and sells. What you see on the chart, these are not opinions. These are actual orders. This is money being transacted. So if you see a lot of red like this, and you see the same size bars day after day going lower, 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 there is a ton of selling going on. You don't care who it is, whether it's one big player selling a huge position, whether it's 100 million people around the world, each selling 100 shares, it doesn't matter to you. Don't ask why, just ask what is happening. And once you figure that out, you go with the flow. That is how you want to trade any market. Let me try to answer a few questions here before we run out of time. Oh, Raj has a great question. When do the signals get printed? So you have to look at the time frame because, for example, this is a daily chart. So the most recent candle that you're seeing here, this is today's. Now, obviously, between 9:30 a.m. and 4 p.m., this bar is going to fluctuate back and forth. It could go lower, it could go higher. Anything can happen throughout the day. So depending on the algorithm behind here, you may see an arrow at some point during that day and then disappear in the same candle during the same day. But once that candle closes, if there's an arrow or a dot, when that candle closes, it will remain there for life. This does not repaint. I'm sure you've seen many other indicators repaint. It does not repaint. It's just when the bar is live and the price is fluctuating, you know, the algorithm behind it to create that sell or buy order can change. Same with a 1 minute chart. During that 1 minute, things can change. But once that 1 minute bar is closed, that print is there for life. So if you want to back test this, what you see here, these arrows, they will never change. They are what they are. Great question. Dana says, you know, based on what I said, I trade mostly on indexes and so on. No, I only do that during volatile markets. When the actual stock market, meaning the SPY, the Qs, the Dow Jones are trading nice and smoothly, then I focus on individual stocks. I'll give you an example. And it's in both directions. So we look at DraftKings. All right. Oops. Let me try this again. And I think I've eliminated the lines now, but here, this is the weekly chart of DraftKings. So as I mentioned earlier, we have a great membership group, and we get together live with our members 3 times a week, Mondays, Wednesdays, and Fridays. And throughout it, all we do in that hour is I answer questions about technical analysis, but I also review hundreds of charts together looking for trade opportunities, and we mark them up. Now, I cleared off all the lines for the presentation, but with DraftKings, we follow DraftKings all the way down here along the way, as well as on the way up. And we had key levels, support and resistance levels, that we were looking at as targets along the way. And each one was hit beautifully along the way. But since it got down here and started chopping, we have not traded this at all. What we have been waiting for is for it to clear this high here, right? So we're getting very, very close. On Friday, during our live chat, I mentioned to one of our members who was actively trading this to keep an eye on this line because we're getting very close to now switching and trading this back up. Should we cross this line and should we have a slope upward on the 20 and get a signal, then we will go long. But we trade individual stocks all the time. ARK, now this is another ETF. Yes, it is. We traded this one actively all the way down here as well. And look at these entries when it's trending strongly. That's what you want. But we can look at anything. Costco, for example. You know, some great setups along the way. But look at recently, right? Look at recently. Do you want to trade Costco here? You do not, right? It's in a range. When you can draw a line across highs and draw a line across lows like that, you know you're in a range, you're in a channel. Now, here's the thing. These, a lot of people just want to avoid them completely. These, to me, are very exciting. You want to monitor these. You do not want to trade in here. If you're more aggressive, you might want to trade, when it bounces off the bottom line for a move here and then short it for a move back, etc. I am not aggressive at all. I'm the opposite of that. So, but what I will do is follow this for an eventual breakout. Whether it breaks out to the top or the bottom, then I look to my left, look at, any support resistance in the way and judge the entry that way. But keep something in mind. When you see a channel, the longer it lasts, the bigger the opportunity, because once it breaks out, whether it's to the upside or to the downside, you are likely to see a move of the same size, similar to what the channel was. I'll give you a brief example. In here, there was a little channel in here. So, and stocks tend to do this a lot, especially if they had a big downtrend. This one didn't in this case, but if there's a big downtrend, then they turn around, they get back above the 20, they trend for a little while, then they'll take a pause, they'll go sideways, and then they'll break out again. But if you measure the length of the channel, what you can do is just draw that line, take a similar size line, and look for a size of a move in that direction. And there it is. And it works like magic. So, when I see something like this on Costco, I'm like, I wish this would carry on for, 6 months, a year, year and a half, because when it eventually breaks out, it's going to be a monster move. And I want to jump all over that. Right? So let's see what time. We're almost running out of time. Let me get to a couple more questions here. And Jeff, let me know if any of the people on YouTube have questions. Let's see. On a run like that, would you use a trailing stop? That's from Priscilla. Great question. I don't generally use trailing stops. What I do is have targets in mind. So based on support and resistance, which is something we'll go through in those training classes. So, for example, if there was activity at a prior high up here, I know there isn't on this chart, but if I was getting in here and there was a bunch of activity at this level, right? As we approach that level, I'm taking some profits. Not all, some, and then I'll hold some for a move through there. What you can do if you're looking at trailing stops is look at the individual candles and hold it until you get a close, not a trade, but a close below a prior candle low. Okay. And it's vice versa for a short position. All right. That's a very simple and tight way to manage your stops.
Hey, Vince.
Yes.
We do have a couple things coming in from YouTube that I thought I promised I'd talk about.
Sure.
Option Lee IO wants to look at Tesla if you have a chance.
Of course.
And then Vince, a guy with a name that you might like, Vince, in YouTube wants to know, do the weeklies or dailies help you make your decisions? Or do you use the weeklies or dailies to make your decisions?
Great question. So let me start with Tesla. And I'm looking at the weekly here. What I do, I'll try to answer both at the same time here. So basically, I use weekly for a good overall direction, but I take most of my trades off the daily. Okay. So if I were to see that we are in a nice strong trend here, so once we got this green arrow here on the weekly time frame on Tesla, it matches our criteria. Why? We have a green arrow, we have a slope upward on the 20 MA, and the price bar that goes along with that arrow is right near the 20. I also look to my left and I see that the only prior activity above there was just this little bit here. In other words, above this high, we'd be into new all-time high territory, right? So this is a fantastic entry. This is textbook. Not only, do you have momentum behind the trade, you have very little overhead resistance to prevent this from going higher. So we enter the trade and off it runs. It takes a bit of a breather. We get a re-entry. It continues to go. But this is the weekly time frame. Now, I have two choices here. I can open an option position because I mostly trade options based off the weekly time frame, which means I would buy an expiry that's at least 6 months out, if not longer. Or I have the option to switch to a daily time frame and look for an entry there. So now this is going back to 2020. Yeah, this was the pandemic low, 2020. So let's go back to the daily time frame. And let's scroll back, see if we can find that February. Here it is. So right along here, right? So you see how many re-entries opportunities there were, and this carries on. This was also part of that. So along the way, you have the overall direction on the weekly, right? As confirmation that this thing is going higher. You just switch back to the daily and you take your setups off the daily. If you're more of a day trader, for example, and you use like the 1 minute or the 5 minute chart, you want to go to a slightly higher time frame, like the hourly, for example, to look for overall direction, then go back to your lower time frame and take your trade from there. If you're more of an investor, right, you want to stick to the monthly chart and just go with that. Okay. And so on something like Tesla here, you see this long-winded consolidation. How exciting is that? Now, you would have had to wait several years to take a trade. This was where we got in on that trade on the weekly that I talked about. But the second you broke all the highs from this consolidation, this started to run. So you can just take your horizontal line and just mark it at the absolute high of that range, which is somewhere around here. Here's your breakout. Okay. Even though the arrow was back here, once you broke through all resistance, you're at all-time high. The 20 slightly sloping, you're near the 20. You can feel free to get in, right? And there you go. Or even if you just waited all this time and got in here, you still had a great move. All right. But yeah, no, I don't solely trade off the weekly. I trade mostly off the daily, but I use the weekly for overall, trend. Louise is saying, what about the green dots below the 20? Honestly, just because there's a green dot below, it's where the candle closes here. I know a couple times we saw green dots and the candles below the 20. That shouldn't happen. That's just a glitch with my system here for some reason. But this is what you want to see. This here, again, think of the criteria you're looking for. A green arrow or a green dot, slope on the 20, and the more significant the slope, the better, right? So fantastic. And the candle that goes along with that dot is very close to the 20. This is textbook. You look to your left, nothing but blank space, no resistance overhead. Boom. This is not a small move, right? This went from about 166 or so, 167, to a high of over 380. It more than doubled, right? Like that's the kind of move you're looking for. Now, I'm running late here, and I don't have a lot of time, so I apologize. If there's any other questions, you can contact the support team at MetaStock. They're very familiar with this, and they can help you out. Let me just explain a couple other parts that come with this add-on, and then I'll hand it over to Jeff, and he can show you how to grab a copy for yourself. But if you go up here to the top left of your MetaStock platform and click on View, down here, there's expert commentary. If you click on that, you'll get this little box here that tells you a bit about myself and trading wins, etc., and the victory system. But you'll notice that to the far right, the most recent candle, it always defaults there. There's a little triangle here. You can move that by clicking above any bar, okay, or by using these arrows up here in the box. Now, this is meant to be a guide to sort of hold your hand through the life of the trade. So, for example, if there is no trade, if we're in one of these yellow bars, there will be a blank space between these paragraphs. There will be nothing. But the second we move above a spot where there's a potential trade setup, you're going to get some added text here. And it'll be green if it has to do with a long setup, or it'll be red for a short setup. So here, it's telling you that the Victor system is currently signaling a short sell opportunity. All right. And then it'll go along and sort of guide you on what type of option you might want to consider if you're considering taking that short. And then as more candles are created and it moves to the next candle, it's going to update a price level that you can use as a stop level. So going back to the question about trailing stops, you can use the expert commentary as your guide. You'll see here it says if we get a close above 276.33, you should exit that position. Now we move to the next candle, and you can see now it's 274.94, etc. It changes along the way. Now it's 269. So it will trail it and give you a new stop. The reason why we did this mainly is I know some of you work full-time, have families to take care of, etc. You want to enter your trade, put your stop loss in, close the laptop, and move on with your day. And that way you have a price level to target, okay? So great tool. The other thing is there's a scanner that goes along with this to help you find trade opportunities. So I'll just quickly run one. If you go to your power console, the P on the top left here of your platform, then go down to the third box on your left, the Explorer tab. And you're going to have to scroll all the way to the bottom. These are all the systems that you can search for. They're in alphabetical order. So the Vora setups are down here. Or you can set it as favorites, and you can put yours as favorites. Now, the ones you want to look for are Vora Victory Filtered and Vora Victory Re-entry Filter. And the reason why you want to do that is the filtered means we filter out the ones with no slope, right? So Jeff did this fantastic improvement to this add-on. We're only looking for setups that have slope in our favor, right? Once you select those, you come down here and you select the markets that you want to trade. Now, normally I trade all of the US, the optionable stocks, which is 5,800 of them. I'm not going to do that now. And oh boy, I should actually just pass it over to Jeff here. Let me find a small group here that I can target quickly. Okay, the index constituents. Let me just look at the NASDAQ 100 maybe and see here and see if there's any. Then you go to the right, you select your time frame. You can search 1 minute, 5 minute, daily, weekly, whatever. Let's do daily. Okay, this will confirm what you're searching for. You click start and you'll get this little panel here, and you'll notice we selected 102 items. It's already searched through 60 or so, and there we go. It's done. Now, unfortunately, on there is nothing right now, but when there is, you'll get columns here. One of them will be the slope column, and it'll give you a number, positive for long setups, negative for short setups, and you want to look for anything over 5. But if you choose the filtered ones, they do that automatically for you. Okay, unfortunately, we couldn't find any setups on those 102 charts right now. But I'm out of time, unfortunately. I apologize. I'll pass it over to Jeff. He'll tell you how a bit more about this and how you can get a copy. Again, if there's more questions, I'm happy to stick around. Thank you very much. And with that, Jeff, I'll pass it back to you.
All right. Thank you, Vince. I actually ran a scan too, so I could show what that looks like.
Excellent.
And I will. Let's see. I was actually going to do the index constituents. Anyway, let me go ahead and I want to say before I kind of take over completely here, thanks for coming in. I really appreciate this. I really enjoyed working on the systems and the methods with you. They've been extremely popular, and it's just been a great relationship. I really appreciate all the work you've done.
Same here. Thank you very much for having me.
All right. Now let me grab control here, and here, I'll just turn this on. I'm going to go ahead and show my screen. Make presenter, show screen. Okay, cool. Now, Dana, thank you for all the questions too. A very, very good job again, Vince. Here's a scan that I ran. And one of the things I like about 18 is right here, I can just type in Vora, and it's just going to show me all the Vora scans that I've got installed here. So the Vora Victory, what that's going to do is, as Vince was showing, is it's going to find all of the entry or exit signals that are brand new. The filtered is actually kind of, because one of the things that Vince likes to talk about is slope. What we do is we're going to look for just the ones that have a +5 in slope and a long signal, or a -5 in slope that are sloping down and a sell signal. So that's kind of the difference between just the Vora Victory and the Vora Victory filtered. Here's the re-enter. Those will look for those kind of diamond dots on the chart for you. And then here is the re-enter. Okay, and so I just loaded those through the S&P 500, the NASDAQ 100. You can see the two that I selected right here. I've got them ready to show you. And and this is the thing I love about the simplicity of this method, because we went through 526 stocks looking for filtered entry signals. And out of those, if I'm looking at a long position and I just want to focus on the longs, instead of looking at 500 stocks, I can just look at Coors Beverage Company. It has a long position with a slope of 5.5. I could also look at Nextera. It has a short with a slope of -8.9. So it just makes it really, really easy because it's very, very straightforward. For me, I like to, well, when I'm at work, I like to work. And so I do like to also trade, and I usually can kind of get my trading in just by running a quick scan and kind of not spending a lot of time on it. So here are the filtered. So this would be the ones that had an initial entry, that they've gone up, maybe pulled back a little bit and signaled that re-entry opportunity. And if I wanted to kind of look at those, there's Copart and Lockheed Martin, and there's your sub 8.9, 7.4. So I kind of can get a visual understanding that if I open up this, that's going to have a sloping 20. The higher this number, the bigger that slope is going to be. It's just such a really, really good way to kind of, we talk about it all the time. And I talk about how much I like scanning all the time, but scanning like this really allows you to just ignore a lot of noise. And there's a ton of noise in the market, and just focus on kind of what the opportunity is. So there you go. We don't really have time to open up those charts, but there you go. Dana, you can backtest it. There is a backtester that's in there. Now, a lot of things that, there's a caveat that I like to talk about with system testing. When you go through the training that's included with Vince's stuff, it's going to specifically talk about, okay, I like to look for stocks that are breaking into new all-time highs, or I like to look for stocks that are breaking out of resistance and stuff like that. When you're backtesting, it's just going to say, I got a buy signal, I'm going to buy. I got a sell signal, I'm going to sell. So generally speaking, if you go through the training that's included, you'll be able to do additional filtering on the signals that Vince gives you based on the sub calculations and all that kind of stuff. But yes, you can actually backtest it. Michael, slope was a number that we worked on forever. Michael's asking how is slope calculated. Oh my gosh, we came up with like quite a few different ways between Vince and me in terms of how to actually calculate that. And well, it came down to, like, I don't remember the exact calculation. I remember we did about 50 different versions of it, and we came up with something that we like. But the best way I can describe it without kind of going into the semantics of it is it's a rise-run calculation. How much has it gone up over the last X amount of days? And we kind of calculate that to kind of come up with that slope value. So there you go. Okay. So Vince does a really good job about talking about the victory method. It is one of MetaStock's best-selling add-ons. I love the fact that Vince is so detailed in the commentaries, and he shows you exactly kind of where the slope is and kind of how to take advantage of the signals and what to do with them. And all that stuff is spelled out so well for you in English. It's also got expert advisor. You can set it up so that if you're interested in seeing maybe a re-entry form on a chart, you can get an alert for that. You can have it text you, or you can have it send you a message when that happens. Yeah, I just showed you very quickly the scanning. Yeah, that'll allow you to scan for triggers. It'll allow you to do the re-entries. It'll also allow you to scan for those filtered opportunities, which are the ones I love to run. And it does have the system testing. So it does a really, really good job. It's a very, very well-rounded offer. Now, this particular add-on is a one-time cost, which means you don't have to pay for it over and over and over again. You can pay for it one time. It's normally $19.97 here at the conference for our President's Day extravaganza, or whatever we want to call it. We're going to do $9.95. So that's also $9.95 with a 30-day money-back guarantee. So you can try it out. If it's something that works for you, if you like it as much as I do, you're going to keep it. But if you don't like it, if you don't think it provides value for you, you can return it. We'll give you a refund. If you don't have MetaStock, we're going to talk about MetaStock all day and why it's been rated #1 for 30 years in a row. But we'll even give you a trial to either MetaStock Real-Time or MetaStock DC. We'll include data. We'll give you everything that you need to kind of get up and running. In addition, as part of it, there's 2 bootcamp classes that we put together. Vince and I did. Vince talks about exactly what he looks for. Here's how you identify stocks that are breaking out. Here's where I like to look for stocks that are at all-time highs. Here's where I like to put in my stops. He did a really, really good job with those trainings. There's 2 of them. And then I also kind of talk about how to go in and run scans and kind of use MetaStock and really utilize the power of the program. So we're also throwing in, somebody asked about this earlier, membership. So Vince talked about how he likes to do video calls, and it's a service that he does that costs $97 per month. And it's awesome. They do 3 weekly calls. They're strategy sessions. It's something where he gets in a room, he kind of sends out trade ideas. Very, very cool stuff that's included. We're going to include a 1-year membership to that as part of your purchase. And the value of that membership would be $1,200, $1,197 total. So that's going to be included as part of it. And that by itself is worth it as part of the, it's even, normally that would be $1,197, you're paying $9.95, and you're also getting the add-on. So not only that, it's backed by a money-back guarantee. If you're not happy, if it doesn't help you, you're going to get a refund. So you should try this. You can do it by giving us a call at 800-882-3040, metastock.com/sales-chat, or metastock.com/comp-promo. Okay. Luis asks, can this method be used on another trading format? It is MetaStock. It works with MetaStock, Luis. It is something that we built for MetaStock. So thank you for that question. And if you don't have MetaStock, we'll give you a free trial to try that out too, and you can find out why the scanning is so awesome in MetaStock, or why it's been rated so highly for so long. So there you go. $9.95 here. It'll include that 1-year membership, as well as the boot camp, as well as the MetaStock training, everything that you need to kind of get started. $9.95. Your risk on that is a little bit of time. If you decide you don't like it, if it doesn't help pay for itself, you can get a refund. So give us a call, 800-882-3040, metastock.com/sales-chat, metastock.com/comp-promo. And these are scans that I run almost every day. You'll definitely want to take a look at them. 800-882-3040. So there you go. If you do have any questions, metastock.com/sales-chat. Let's go ahead and say thank you to our sponsor today, Stocks and Commodities Magazine. We really appreciate Stocks and Commodities. They do a great job. I appreciate their sponsor. If you take advantage of that that offer I just talked about, not only will you get a 1-year access to Vince's stuff, You'll also get 2 years of stocks and commodities that's provided by them. So we love stocks and commodities. We appreciate them sponsoring for a number of years, and they've done a great job. So our next guest today is Wendy Kirkland. Wendy is another good friend of mine. I really like her approach to trading, kind of the way that she kind of has the methods of looking at kind of different indicators to determine how profitable they can be, using ATR, measuring the trend, eliminating whipsaws. These are all very, very important aspects of the trading that she uses. Let's go ahead and bring her in here. Wendy, how are you doing today?
I'm doing great. I hope you are.
We're doing great. It's been like this whole thing has been going very, very well. Like I'm very happy with the way the conference has been going so far.
That is awesome. I'm glad to hear that. So are we ready to get started? Should I show my screen?
Yeah, I've got, so I just sent the presentation over to you. It should say, do you want to share your screen? And I'll make sure we can see it before I let you go. Okay. And I am seeing the non-expanded view of your PowerPoint.
Yeah, I was going to say, I guess I'm going to, in a sentence there, I was going to click you off. All right, there we go.
I can see you. You sound great. I can hear you really well. I think that's my cue to get out of the way. Your turn.
Well, I appreciate you very much. I'm so happy to be here. That some of you all know me. I've been around for a really long time, and to others I might be brand new. And so it's nice to meet you. That I'm Wendy Kirkland, and I have not always been a trader. That I came to trading via an accident, in a sense, that about 15 years ago, my husband and I had a gift shop in Asheville, North Carolina, and he was a decoy carver, and I did the painting, and I did some artwork and so on. And so that is what we had going for a number of years, about 15 years as well. And then there was this freak flood, and it wiped us out, and had no idea what was going to go from there. We were really in bad shape. Didn't have flood insurance because it doesn't flood in the mountains. It was just a really wild situation. And from there, I took a few option trading classes. It was like a class a week for 5 weeks. And it was a really good fit for me. And then I did a lot more studying and so on. But the point of all of this is I am just an everyday person. I'm somebody, I don't have a, financial degree, background in the stock market and so on. But I now have been trading for 15 years or so and teaching other people to trade. And part of that success and my ability to teach other people is the fact that I think I see things a little bit different. I almost see it like artwork as far as the patterns and so on. So I have written a number of different books and have advisory services and so on. But I want to really share with you what MetaStock and I have put together, and it just works really well, and it's easy to see. And so that is what I'm going to share with you today. And these patterns and all work with stocks or options or futures or Forex, and it pinpoints equities that have consistent moves. So we want to focus on the stocks or the equities that have a high percent move on average every day. Don't want to zero in on stocks that maybe have little tiny moves and that maybe they're going to move up today or maybe they don't. That we really want to focus on the ones with big moves. And then we are zeroing in on equities that are overbought or oversold, because when they're either overbought, they're likely to fall for a while, or if they're oversold, they're apt to rise for a while. and we find equities that have formed a top or a bottom, have reversed and are starting then the new trend. And then we enter trades that have given a confirmation signal. So I'm going to take this step by step, but what MetaStock has created for me is a service and a setup that pinpoints all of these things and shows it. And so that's what we're going to go through here. So for some people within this group might not even really know what an option is. And I kind of think of options as being like you're renting an equity for a period of time. So you might be, again, renting it for a month or 2 months. And if you're renting for 2 months versus a month, it's going to cost a little more and so on. So there's two types of options. There's call options, and that is what you would get into if you thought price was going up. And this gives you, the buyer, the right to require the grantor, the person that's selling, to sell the equity to you at an agreed upon price, at agreed upon time, no matter how high the price is when you decide to sell. And they must sell it to you at the agreed upon price, and you in turn sell it for the higher price and keep the difference. And the buy and sell happens behind the scenes for you when you decide to close the trade. And puts are, in a sense, the same concept, except this is an option that you would get into when you think price is going to drop. Maybe it's a stock equity has been rising for a number of weeks or a number of months, depending on what time frame you're looking at. But you think, oh my gosh, this is up so high, it's ready to pull back. I'm seeing the signs that it is getting tired and it's going to pull back for a while. And so put options give you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price, at the agreed upon time, no matter how low the price is when you decide to sell your option. They must buy it from you at the agreed upon price, and then you in turn buy it at the lower price and keep the difference. The sell and the buy happens behind the scenes for you when you close the trade. All right, so here's an example of option pricing. So if you purchased options on Bristol Myers, and their symbol is BMY, and that's the pharmacy company that we all know, and its stock price, say, is $72. And you're interested in contracts for the 75 strike. So it's $3 higher than its current price because you feel the price is ready to move up. And you pay $1.25 per share for the 100 share call contract that expires in 2 months. And so that is for the 100 shares at $1.25, that's $125 per contract. And you decide you're going to buy 4 contracts for $500. So in a sense, again, you can think of this as a way that you're renting stocks for that set period of time. And let's say the stock price goes up from $72 to $76. So that's up $4. And your premium now is worth $4.25 per share when you decide to sell. Your premium gained $3 of that $4 move. And again, the transaction happens behind the scene at the exchange. You paid $1.25 and you sell for $4.25. So you keep the difference, the $3 that it gained, and you have 400 shares because you bought 4 contracts. And so this means you realize a gain of $1,200 on your initial $500 investment. So that is a profit of 240% over that period of time. And this is the benefit, in a sense, of option trading, that had you bought 100 contracts at $72, that would be $7,200. And yet what you were able to do was to get in for the $500. So that is the benefit, in a sense, of option trading. So here we're going to get down to the basics involved here at with MetaStock, that we are going to focus on equities that have regular big moves. And so on this chart, I have an average true range indicator. And so this is telling me what its average move is per day. And so it moves on average over here $6.50. So that is a really high ATR. My focus, and for my list that I keep of equities that I am interested in, I like them to move 2% or higher per day. So if they're moving 2%, that is a nice move every single day. Well, here it works out that Salesforce, it moves 6.2% every day. So this is a really, really good equity for me to be able to focus on. All right. So from there, I am making a list of equities. So Salesforce might be on it, Walmart might be on it, and so on. And so you create this list that you could run through every single day and look for patterns, and we're going to get into that, but look for the ones that you are interested in trading and focusing and putting your attention toward. All right, so the next indicator is the Channel Commodity Index. The initials for it is CCI. And I have this funny term for it. I actually call the patterns that it makes fins. And it's not really, you can see it right here as a zero line. And so the zero line is right smack between this blue line and this blue line. And so that is the middle range, if you want us to say. And so to me, anything that is above the zero line is then bullish. And anything that is below the zero line is bearish. Well, you can see these where it breaks above the 100 line. To me, that looks like a shark fin, or down here, the lower fin. And so this is a very easy visual to be able to look at and see that as it rises above zero here, and goes up and creates this fin, that price is definitely bullish and has gone and created this higher peak. And then as it slopes down, that is kind of the opposite work. Okay, it's losing its energy now, dropping, and it creates this lower fin. All right, so again, CCI, Channel Commodity Index. We're going to start putting this all together. So the next indicator is the percentage price oscillator, or PPO. And so we still have the CCI here, but the PPO, we're looking at the crosses and touches of the lines. So you can see here it crossed down, definitely bearish, drop, drop, drop. You can see that's exactly what happened to price here. You can see it also on the CCI, that it was bullish right here, dropped below the zero line and came down and created this fin, and then kind of went sideways for a bit of a while, came up and touched the zero line again, and then dropped and just kind of flattened out. And so this went flat for a while and then finally crossed up bullish, rose a little bit, came down and tested that, and then headed up again. So the actual crosses show a new trend direction. And there are times that it just sits on, the lines sit right on top of each other. And that is because neither the bulls nor the bears really have it enough to take the price of the stock super high or super low, that they're kind of duking it out in a sense, you know, that it's just not happening here. There's not a whole lot going on. Again, we are keeping in mind that this is has a high ATR. It is a high percent moving stock equity. All right, we'll continue on here. So the next indicator is what is called the Kirkland oscillator. And this, you can see that there is a middle range line, this black line, and above that line is bullish, and down below the line is bearish. So I've circled some here. You can see this crossed down, bearish, price is going to drop. Can see this also on the PPO indicator, dropped about the same time, crossed down, and you can see on the CCI dropped below the zero line about the same time. This particular one worked out to be pretty close as far as those three confirming each other. It's not always that way, that you can maybe even this is a good example right here, that this is kind of flat, and yet here we crossed up and then it continued up, and so on. So that I use the Kirkland oscillator really for my entries and exits. And again, we're going to get into this more, but the other indicators help to confirm and to paint this total picture of what I would expect to happen in price, so that I can zero in on successful trades. And again, focusing on equities that have 2% higher move per day. All right. So this is kind of putting it all together, have shortened the time frame here a little bit, but can see that the Kirkland oscillator here was above, kind of sat here, and then started rising. Can see the same thing with the PPO, just kind of flat and then started rising. Up here, it rose above the zero line, that middle line area right here, and started heading up. So anywhere in this point would have been a good entry period. And then it rose nicely and would have been a very positive trade, going from maybe this would be about $55 up to 75-ish. Here's another example for a put. You can see that this crossed down. Here this stayed up above, up above, up above this whole time, rose this whole time here. Here it crossed down below. So this would be a put entry. Can see that this drop stayed down here. It touched, but it did not cross, going from bearish territory to bullish territory. Here the PPO did cross. Here this did cross up and over the zero line, didn't get up here above 100, but this stayed down below the 0 line on the Kirkland oscillator, which would have or could have kept you in the trade from where you got in here all the way. Now, this is not to say that you would have had an expiration that went from April to July. You might have bought out that many months. Maybe you would have bought 4 months, 6 months out, and it would have been an amazing trade going from 80s down to the 40s up here. 80, 85, down here to 43, but in the 40s. That would have been just an amazing trade. But maybe you only bought 2 months out. You could have gotten in here then when the lines crossed down and gone out 2 months. You could have sold anywhere along in here. And maybe when it started rising, you would say, I'm happy with what I've made. I'm gonna get out. You know, that I can see that the PPO looks like it's weakening. I don't know, you know, if this is going to cross. I'm just going to go ahead and take my profit. In the end, the Kirkland oscillator is, if you want to say, sensitive enough to really be able to gauge. And here it touched, but it did not actually cross and continued down. All right, so that one was Newmont Mining. Let's look at another here. That this is Lyft, and so we'll just start here at the top, and can see that this has been oversold, meaning that it is down below the blue line here. It has dropped, you know, for a good while. Here the PPO has crossed up. So in a sense, this is an alert. Maybe because the PPO has crossed up, it's now on my watch list, and I'm gonna wait and follow this and look for the period of time where the Kirkland oscillator actually crosses up and over the signal line here, the entry signal. And so here, this one on, this was May. It went on all the way to July and was suggesting that this a bullish move was building up. But Lord, had I gotten in here and stayed in all this time, I would have had a whole lot of time decay, and I might just have felt like, oh, I need to get out of this trade. It's not doing what I expected it to do if I was just trading the PPO. So the Kirkland oscillator, this will alert me, something's brewing, it's getting ready, and can see this rose touched right there, touched right here. So it's getting close and ready, but it just hasn't really happened yet. If you look up here at price, you can see here's a place where it rose a little bit, went up a couple dollars, and just flat. And so it's zeroing in, but it just hasn't happened yet. Okay, same chart, just a little more time. Here is where could have entered. And came up, rose, and then started heading down. You can see the PPO crossed. You can see this created the fin and started heading down. These would all be warning signals telling you that price is getting ready to start sloping down. Flattened out here, crossed down, got right here, started heading down. So this area could be where you might consider an exit. So this one would actually, I put the price in. So the price was $7, or price moved up, I guess it's saying $7 in 6 days. This is the peak that the CCI was doing, the fin, and then started heading down. The PPO is flattening out. And again, the Kirkland oscillator has created this peak, and this is the exit. Well, to have made $7 in 6 days on an equity that is about $14, that is pretty great. So we'll look at the specifics here. As a general rule, 2.5 to 4% equity price move often equates to a double in a weekly options premium. An 8 to 10% move often equates to a double in a monthly options premium. And so again, this points out as to why you want stocks that have that high ATR. It doesn't make any sense to really focus on trades that move a few pennies, a nickel, a dime. You want stocks that are going to have a really nice 2% or higher move on their price every single day. So for Lyft, we purchased calls after open on August 1st, when the Kirkland oscillator crossed through the touch zone for $1.15 a share, or $115 per contract, for the October 22 or the October 4th week 15 strike call. And let's say we bought 4 contracts for a total investment of $460. And then we sell after open on August 8th. So that was that 7 days. The call contract was then worth $4.75 a share, or $475 per contract, or $1,840 for the 4 contracts that we purchased. And this is a gain of $375 per contract, or a total of $1,500 for the 4 contracts, or a 313% profit. And when we entered the trade, the price was about $15, and when we sold it, it was $21.50. So that is a $6.50 change in price, and that's about 43% increase in the stock's price over that trading period, and yet the option increased 313%. That is the leverage that you have by trading options versus buying the stock outright. So for an investment of $460, we controlled $6,000 worth of stock. And had you placed that same investment in options, this is just to share that information, we could have purchased 52 contracts and earned $19,500 in profit. So this again is just an example about how you can spend less money trading options and gain a higher percent profit. All right. So here's another example. This is Goldman Sachs. And I have used a shorter time frame chart here, so it doesn't go out for months. It's just a couple months here. So can see that the CCI is rising, hasn't actually broken above the top, but it is above the 0 line, which means that it is bullish. You can see that the PPO has just crossed up, and the Kirkland oscillator is still down below the lines here, but it is rising, and this equity has a high average true range. So everything about this chart at the moment is saying, okay, it is time to start paying attention and to stay focused on what is happening with this chart. But my entry is not going to be until the Kirkland oscillator rises above the lines that are there. All right, so let's see what happens next. You can see now that the CCI, rather than go above the 100 line here and create a bullish fin, it came up here and touched it and then headed back down again. And so it's very close to the 0 line. Again, you can see the 0 line would be right between, there's a little line there, hard to see, but halfway between 50 and the minus 50. So it is heading down. The PPO is still up, and yet it has really priced it. It rose and then it started pulling back. So here the Kirkland oscillator is still down, and made note that that is a week later. You can see it came right up here and touched that upper line, and yet didn't cross up and over. And over this period of time, from say even the point that it crossed right here, each of these days it would have lost time decay. So price was dropping or flattened. It would not have gained any value, would have lost a little value. And then in addition to that, you would have lost time decay. Each day it has less value because there is less time for it to move up in the direction of the option. All right. So this was a point where CCI was still heading down. The PPO was up. Here it actually came down and touched the line. You can see here on the Kirkland oscillator that from I don't know, the 28th, 29th, here's the 5th, here's the 11th. It stayed right under those lines and then pulled back down again. This created one of the lower fins below the minus 100 line. PPO here, the lines are just laying right on top of each other. And so here finally, on the 18th of July, crossed up and over the Kirkland oscillator. Entry right here. But that kept us out of a trade for a really, really long time that would not have ever really profited or brought us any money. So here is the entry point. Price rose up here, and then this is where we would exit. So you can see how the Kirkland oscillator stayed up. And here the PPO, red line on top of blue, and it crossed down right here. The CCI gives an early kind of warning of saying that, things rose, were nice and high, and now it has crossed down below the 100 line. Time to exit. We don't need to wait for the Kirkland oscillator to cross all the way down. That at this point you would have made a nice profit. There isn't any reason, as you're seeing things weaken, to hang on until the very last minute where this crosses down. That is why we have these other indicators on here that, yes, maybe it creates a fin starting up early, and then this is happening a little bit early, and then the cross down is the final exit point. And so this is why we kind of have a combination of the indicators that I don't necessarily want the earliest possible entry like here, because I can lose money on time decay. I want a confirmed entry where I know my chance of making money is likely to happen. Ride that up, and then it's kind of the opposite. That at this point, if things are starting to weaken, I want to know it right away, a little bit ahead of time. I don't want to wait for this cross down and to lose a portion of what I have made. And so that is the combination of the indicators and the information that they are sharing. And it just works really, really well. It keeps you out of a trade from getting in and then losing time decay for days and weeks. And at the same time, it gives you a little bit early warning to get out of a trade before you have loss of value. All right, so this is the example that we just were looking at. Had you purchased calls after opening on July 18th when the Kirkland oscillator crossed through that touch zone for $10.50 a share, or $1,050 per contract for the October 21st expiration of the 300 strike call. And let's say we bought just the one contract because it was a more expensive equity for a total of $1,050. And we sell at the end of the day on the 18th. The call contract was then worth $35 or $3,500 total for the contract. That is a gain of $2,450 or 233% profit. Now, Goldman Sachs price when we entered the trade was about $300, and when we sold, it was about $350. So that was approximately a $50 change in price. And that is a really nice gain. That's 16.6% increase in the price stock over that trading period. And yet the option increased 233%. So again, for an investment of $1,050, we controlled $30,000 worth of Goldman Sachs stock. And oh my goodness, had you placed that same stock investment in options, you could have purchased 28 contracts and earned $68,000 in profit. Now, you know, that is unrealistic, but the point of that is to show you the leverage that options provides. Okay, so let's look at put contracts, because it's kind of a some people don't really, it's hard to wrap your brain around, but that you can actually make money when the price of an equity drops. And it is just saying, okay, I think price is going to drop, and so I am going to buy a put option. And if it does, then my put option is going to increase. And so here on the CCI, we can see that the CCI has dropped down here below the zero line, and the zero line is back here in the middle of this. It's actually dropped down below the 100 line, but the zero line was back here in the middle between these two lines. The PPO has crossed down, and the Kirkland oscillator has crossed down. So this is right here is our entry, that when it crosses down below, and had you been doing a call over here, would have been where you would have gotten in when it crossed up. So it's the exact opposite. When it crosses down below the Kirkland oscillator lines, that's where you would enter. And so that was back here when it crossed down. You can see that it dropped, and then it came and it touched right here, touched the Kirkland oscillator lines, and then dropped further. So the CCI came down here and created this fin, and then started to head up. And when it crossed the 100 line, that in a sense is saying, okay, we are done in a sense being bullish. Things are shifting. Hadn't yet crossed to be bullish, but rather than wait for that and lose this much, we go ahead and soon after this makes that fin. That is the period to exit. The PPO line has flattened out instead of strongly heading down. It has flattened, hasn't yet even crossed up. But again, why give the money away that you've made here? Better to, when you see this make this peak, go ahead and exit. Thank you very much, and move on to the next trade. The Kirkland oscillator, again, it has not crossed up over the line, but it is starting to head up, and this early warning, earlier signal is what we would use to exit. And I just would, this is Halliburton that we're looking at. And again, just point out that we would be focusing on stocks that have a average true range that is high above 2%. Okay, so here are the put trade results for Halliburton. Would have purchased puts after open on September 7th when the Kirkland oscillator crossed through that zone above the lines for $1.82 a share. For the 100 shares would be $182 per contract. For the November 18th, 27 strike put. And we'll just say that we bought 3 contracts for a total investment of $546. And we sell at the end of the day on September 27th. So that is going from the 18th no, it was the 7th, sorry, to the 27th. The put contracts were then worth $3.91, or a profit of $2.09. That's $209 per contract times the 3 contracts meant there was a gain of $627, or 115%. So again, it's awesome to be able to make money when you see the Kirkland oscillator rise and you're purchasing call contracts, and then when you see the Kirkland oscillator drop down, that then you are able to purchase put contracts, and you can make money going either way. So overall, the strategy finds equities that are ready to move, that the CCI and the PPO can give you kind of a heads up and then the Kirkland oscillator pinpoints the point of entry and exit. So first rule is that you want to consider stocks that have consistent big moves. You want to buy or focus, not buy yet, focus on equities that are overbought or oversold, meaning they have a ways to go in their recovery, have put in a bottom or a top and are reversing and beginning to start a new trend. And then you confirm the entry signal with the Kirkland oscillator. And this cuts out, as we saw on a lot of those charts, the false starts, the shakeouts, all the, equities hitting stops and so on. It cuts that out, and we are zeroing in on when the equity is really, really ready to take off. All right, so fortunately, true blessing that MetaStock has kind of simplified things. Now, admittedly, I like to look at all the indicators. To me, they create a story. They're like I said, it's almost like the artwork that I can see what is happening. They are creating patterns that talk to me, but that's not the way it is for everyone. And so MetaStock has simplified the chart, and it provides a scan to go through all the equities and pick out the ones that are getting ready to move. And so on the right side, we have lots of information about the company. It is telling you what its ATR is. It's telling you that the PPO is bullish, that the Kirkland oscillator is bullish, and then it gives you information about me and the trades and the services and so on. But here you can see this crossed up over the zero line. That would be a bullish entry. Here's another one, bullish entry. Here's another one. It's not marked on the chart, but another bullish entry right here. And so the cross is down. This could have been an entry for right in here for a put. Stayed down. Look at that. Down, down, down below the Kirkland oscillator. And here it finally kind of crossed up. So they have, again, simplified it, made this so easy, marking the bullish and bearish turns in the line. You can actually see the Kirkland oscillator. It is so clear. So here's where you could sell. Could buy a put right there. Drop, 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 drop. Have a choice where this started heading up to consider an exit. You can see that it's bearish here. It was kind of flat, but still just bearish for that whole period of time. And then there was another period right here where it dropped down. Again, buy a put right there. That would have been amazing trade. Can see right here, it came up and it touched it, did not cross, and then down it came again. This line, the Kirkland oscillator, is so sensitive in a sense, and so accurate in focusing on the moves that are real moves and not just the shakeouts, is what I call them, where market makers bring things up to shake the traders out of a trade, and then it rises more or drops more. That it's like, we'll get them out and get them into something else, and then down it goes. All right. For those who are more like me, that want to have a more intricate chart and to be able to see the picture and the story that is being told, this has the CCI on it. Again, has the breakdown here of it being in bullish or bearish territory. It has the PPO, has the Kirkland oscillator, and the average true range. So this is what I personally like to look at. I like to have it tell me the story, and so that I can see that the PPO has crossed up, that has risen here above the minus 100 line. In this particular case, it wasn't very long after the PPO crossed up that the Kirkland oscillator crossed up and over the zero lines. But it tells the tale. It gives you all of the information to see, okay, this is the buy signal. Price is going up, and as you can see, it did. It rose, it rose, it rose. All right. So in addition to the charts and the indicators and all, MetaStock does a scan, and it will run a scan and give you all of the equities that are moving that 2% or higher. And then you can focus on the ones that are having the bigger move. And so I'm gonna, I guess, call it an end here so that Jeff can share a little bit more as far as their service is concerned and what it actually offers and how it all plays out.
I have a couple, Wendy, great job. I have a couple questions, if you don't mind.
Sure.
Brad wanted to know earlier, what options class did you take when you first started out?
There was a local lady that lived in my neck of the woods that had learned to trade options. And so it was just her sharing what she had learned. And so it was very, I don't want to say basic, but it was just kind of one direction in what she had learned. And there was 4 or 5 ladies that got together and once a week for 5 weeks and initially learned what options were and then what maybe a PPO was and what the crosses were. It was just very, very basic information.
Cool. Let's see. Here's a comment, and I think I'll take the rest of the questions at this point after this. But Dana says WK's system works nicely. I picked it up in November to do the scans, and I further filter candidates with the further system and the scans. It hits 80 to 90% is what she has to say. So that's really cool.
That's awesome.
We always love to hear that. Brad wants to know, and he asked this, it was pretty funny, right before if there's a scanner available, and then the next slide was you showing the scanner. But I love scanning in MetaStock, and that's one of the things that I like to show off the most. I think one of the things we do best is being able to, like you can see it right there on the screen, we've rejected 99% of the stocks and allow you to focus on the ones that have that opportunity right now. So
right.
Ed wants to know, and I'm going to show this in the commentary. So I think with that there, Wendy, I want to say thank you for coming and spending an hour with us. It's always good to have you.
Thank you.
I want to thank you for your friendship over the years. Great job. Appreciate you.
Yes, I love coming. Thank you very much. Y'all have a great day.
Thank you, Wendy. All right, let me go ahead and do this. We'll go ahead and kind of take this, and I'm going to share my screen because one of the questions I actually wanted to talk about, and make me the presenter, share my screen, turn on the camera, move everything out of the way so I can kind of just show you. This is a stock you might have heard about. It used to be Facebook, now it's called MetaStock. Not to be confused with us, we're the original MetaStock. But I always actually just wanted to kind of show how this works. The question Ed says, is there a method to picking the entry price, such as a slightly in the money, etc.? And that's a really, really good question. And the reason I didn't have Wendy answer it as she already did in the software. So what I've done is I've actually applied the template, which gives you the CCI, it gives you the Kirkland price oscillator, the Kirkland oscillator, and the average true range. This is the full version of the template, if you would. But it also has the expert advisor, which is going to draw the trend ribbon down here and plot the buy and sell arrows on the chart. And you'll notice this gave a really nice buy back in November 15th. Back here in September 13th of last year, it gave a sell signal. When I attach the expert advisor, though, I'm going to call your attention right here to this triangle. This triangle basically tells you this is the day that we're looking at. So since we're not looking at a signal today, it's just going to kind of give you the CCI value, what the average true range looks like, whether the PPRO is bullish or bearish, and whether the Kirkland oscillator is bullish or bearish. But if I move that back, I'm going to move that triangle back to right here to this buy signal. And then that way I can kind of tell you the advice that she's kind of baked in here to kind of help you understand where your entry is and where your exit is. So here we've got the automatic swing trader is, so I've got the arrow right above this buy signal. So this is the day it's analyzing. And what's actually going to say the automatic swing trader is currently signaling a long buy opportunity. Now, what should I do with that as a trader? Well, funny you should ask. Traders interested in taking advantage of this opportunity should look at buying the stock, while option traders should consider intermediate term call options about 2 to 3 months out before expiration. So there you go. You can buy the stock, or you can look 2 to 3 months out. When based on a 60-minute chart, 2 to 3 weeks out when based on a 30-minute chart, and 1 to 2 weeks on 15 to 20. So actually, depending on what time frame you're looking at, is what kind of expiration that you should be looking for. Okay. For day trades, you can look 4 to 6 weeks out. So you'd be looking to a month and a half out for your expiration there on a daily trades. Option traders will typically look for call options that are at the money or out of the money with a delta, or one out of the money with a delta of 40. If you want to be more conservative, you could look at something with more intrinsic value, usually 1 to 2 strikes in the money with a delta of 60. So she's getting very, very specific about what type of options you'd want to be looking at based on how long the signal might last, what expiration date, what delta, what in the moneyness, how in the money or out of the money that you want to pick. Very, very good detailed. But she doesn't stop there. I kind of sound like an infomercial there, which made me laugh. But she doesn't stop there. She does talk about how you should look to exit the position, when you should be looking to get out. You should get out at least 2 weeks before the expiration, unless you're deep in the money and time decay is no longer an issue. Once the trade is open, you could look at a stop loss of this value, and gives you actually a couple things. I won't read them all out to you but quite a few things, 3 things to look at exactly when getting out of the thing. So very, very well done service. It does include the exploration, which is super easy to run. All of the templates. The thing that I like about this is it's very, very well balanced. So let's kind of go back into the PowerPoint real quick. It's going to help you use this average true range to help you find stocks that have a good average movement or high profit potential. Looks at for when those stocks are at a turning point, waits for the trend, and then protects you from the whipsaws. It's a very, very well-rounded system. Dana, thank you for using it. I'm glad you like it. And here we go. For it, it's going to include all the indicators, the PPO, the oscillator, the expert advisor, of course, scanning. The templates, there's 2 templates. Basically, the templates are just a collection of indicators, a very clean look, as well as kind of the full look that it puts all of the indicators up there for you. This is also a one-time cost. So it's only $499. That's a one-time cost. You don't have to pay for that over and over and over again. It's $399 here at the event today as a part of our conference special. If you need a copy of our award-winning MetaStock software program, we'll include that. We'll include data. We want to make this a low-risk opportunity for you. So we're going to include the MetaStock. We're going to include the data. If this is something that helps you identify better trades, if you're happy with it, if you like it, you're going to want to keep it. And so, but if it isn't, the risk for you is some time. Okay, so $399 is what we're going to do with that 30-day money-back guarantee. To do it, you can give us a call at 800-882-3040. You can chat with us at metastock.com/sales-chat, and you can also go to metastock.com/conf-promo, and I just put all those details in the links. So, Kelly behind me put them all in there. Bill says, Wendy has so many services and systems. Which one does she consider to be best? That would have been a good question to ask while Wendy was still here. I do like this particular add-on. I think all of the stuff Wendy does is very, very well respected. I don't think you can go wrong. This might be a good place to start, Bill, especially if you want to be able to do some scanning and testing and all that kind of stuff with it. So $399 here. 800-882-3040, metastock.com/sales-chat, or metastock.com/conf-promo. So there you go. Give it a go. It's $400. How many trades is that going to take to make you some money? Anyway, let's say I'm hearing a little bleed from the hello, Kelly. You're live. I don't know if you mean to be. Anyway. I don't think he means to be
muted. Unmuted.
Unmuted or muted for a second. I think
muted.
All right, there we go. Do want to say thank you to Stocks and Commodities Magazine for sponsoring our events today. They've done a great job of sponsoring us for a number of years. If you do buy Wendy Kirkland's thing, not only are you going to get a 30-day money-back guarantee and a free trial to our award-winning MetaStock software program, you're going to get a 2-year subscription for free from Stocks and Commodities. So they are a great sponsor. We love the magazine. They've done a great job of supporting us for the years and years and years. So, Kelly, let's do a prize drawing. Let's go ahead and turn on your mic.
Unmuted.
This time. All right. Let's go ahead and pick out a prize. Let's see. I should have maybe pre-selected one, but let's do one. You know what we're going to do this time? This is, we're going to give away Trend Radar from tradingindicators.com. So this is actually something that'll work inside of MetaStock. If you don't have MetaStock, we'll throw in a free trial as part of it. But it's $197 normally. It's going to allow you to get a bird's eye view of current trends, quickly gauge information from many time frames. It has a really cool heat map that's part of it, and it's going to be yours for free if you're feeling lucky and happen to have the same number that Kelly's going to pick. Are you ready to give me a number, Kelly?
I'm ready, Jeff.
All right. So I need a number between 1 and 11,905.
7,032.
Go. Okay. And that number is Randy A, who has a Gmail account that starts with safe. So Randy A, safe at Gmail, safe something at gmail.com. I have to say that I'm pretty proud of myself. I've not doxed anybody this whole conference. All right. Thanks, Kelly. Appreciate that. Okay. I was waiting for a response. All right. There you go. There you go. Congratulations, Randy. We're going to go ahead and I'll get in touch with you. I'll send your information over and we'll help you get that prize. So Mervyn says, I thought there was supposed to be another webinar that's starting at noon Eastern. We're going all day. Let's go ahead and get to it. Mervyn, thanks. The next person in line is Serge Berger, another really good presenter. Serge has been trading since 1998. He's done a financial analyst. He's going to be talking about selling options. He's created a number of trading methods, including a bunch in MetaStock. He does a great job. And we're going to say hello to him, and we're going to start him right now for you, Mervyn. Raj, yes, you should be into the prize drawing because you're in GoToWebinar. If you're watching on YouTube right now and you want to be in the prize drawing, you need to register. And MetaStock, Kelly behind me is going to actually put that link in there. Serge, how are you doing?
Hey, Jeffrey, how you doing?
Good. I'm glad I can hear you. For a second, I thought I might not be able to. Let me go ahead and get everything over to you. I'm going to go ahead and make you the presenter. I know we are starting you a little bit late. I don't want you, if you need to, I'm next, so I can actually make up some time if you need a little bit of extra time, but don't worry about it.
No problems. Let me know if you can
know.
Yeah, proper screen. I am going to turn the camera back off in a minute just so it doesn't distract. I'm in the mountains this week, so apologies for the non-professional background this week, but I will still, we're going to do the same presentation as scheduled, of course.
Well, no problem. You look great to me. And then I can see you, I can hear you, and I can see your presentation. So that's my cue to get out of the way. It's your turn.
Perfect. Thank you, Jeffrey. I appreciate it. So as advertised a second ago, I will turn the camera back off. I'd like to just quickly put it on so you guys know I'm here for real. And just largely so I don't get distracted, I'm going to turn it back off. So let me quickly do that, and then we are going to get started. I'm looking at the markets here today. Basically, what we're seeing right now in the markets is sort of this denial of further economic deterioration. We'll touch on this a little bit here, but if you look at economic cycles, you don't have interest rates go from 0.5% to 4.5%, 5% over the course of 19 months and not have ultimately credit problems in the economy. And so I just wanted to quickly preface the presentation with that. So we're kind of going through a bit of a denial right now in the markets. Bear market rallies are very much part of the deal. So just as quickly as a kind of a word of caution on all that. So let me hit the stop the webcam so I don't get distracted. I'm going to quickly open up the chat box as well so I can see all your questions. Let me just quickly do that. Here we go. And the chat box as well, just in case. And we are going to get started here. Let me see one more thing. Webcam stop. All right. All righty. So thank you again to Jeffrey and the team for putting on another great conference. I was listening in a little bit earlier today as well. You know, one of the things that we think is really important in the markets is a need for income. How many people in here have it as one of your goals to generate some sort of an income? If you guys want to type in yes in the chat box, or me, or whatever works for you, you know, do that. It's an exercise that I think is important for everyone to kind of be aware of themselves, whether that is one of your goals or not. For most people, it is one of their goals. And when I mean income, I mean it's some sort of a monthly or quarterly kind of more steady positive return. Maybe you're retired or soon to be retired, right? So if that's one of your goals, and it may not be your only goal, of course, right? We all want to build the portfolio over time. But if you're looking for something steadier, a lot of people, whether they're working part-time, full-time, maybe they're retired, maybe, how many people in here are retired or thinking about retiring at some point of the next 5 to 10 years, right? That's one of the things that's on a lot of people's minds. And what I would like to show you right now, and we're going to be very much to the point here walking through this, I'm going to show you how we're doing this, how we're doing this for our clients as well. And really what are the risks are of what most people use as strategies to try to do that. Because if you're looking to generate income, you have to use a very conservative strategy. You can't, I think, one can't swing for the fences. So, and I see a lot of people here saying that they're thinking about retiring or they are retired. So that's actually perfect. Or again, if you work in part-time, full-time, whatever, like if you're looking for, Vijay is actively retired. I like that. So let's get started. All right. So, and I don't want to get too much into Jeffrey's time either. So this is going to be right to the point. So if you guys want to grab another quick coffee, or hopefully you already have it next to you, let's get started right now. All right, let's go. So one of the things that I want to do is I want to quickly introduce you to my friend John. John actually is a real person. I did change his name here for compliance purposes. The compliance department said I need to use a fictitious name and someone that looks differently than John, although John does have a full set of hair still. But here's the deal with John. John had a pretty, I'm going to say, easy time, for the lack of a better term, to make money over the past 12 years or so, up until last year. But what started to happen is that the market changed. And essentially, he really kind of got his butt handed to himself last year, because the strategies that he had been deploying for the past 12 years up until last year essentially stopped working. So let me walk you guys through what this looked like for him last year. And the reason he made money for 12 years up until last year is largely because the broader market just went up. So maybe some of you have noticed that it's easier to make money when the market just goes up. Well, that happened to him, and he made good money, not because he did anything great. He just traded a bunch of chart breakouts that he was following with some hyperactive trade alerts, but that stopped working last year. And basically, this is what happened to him. This is his actual portfolio, and you can see he started last year at the zero mark, meaning the zero ground for his portfolio, not $0, but starting from scratch again. And he almost made $1 million by June. So what took him 6 months to make, so he almost made $1 million, but then he ended up essentially losing it all and then some in a matter of just a few weeks. And maybe some of you can relate to this kind of a P&L curve, not necessarily the magnitude of it or the dollar amounts, but just the fact that this can happen very quickly. And this is quite emblematic of people that use strategies that are made for one type of market. When that market stops working, they very quickly give up a lot of their gains. What we know is that we look at the markets, and it's a very different environment right now when we think returns have essentially been brought forward. In fact, our research, including data, for example, Morgan Stanley, points to low to maybe mid-single-digit returns for the S&P 500 for the next 5 to 10 years. So if you look at this chart here, and there's only one thing you need to focus on here, that's that 2.4 number. 2.4 is basically Morgan Stanley's forecast for the average annual return for the S&P 500 for the next 5 to 10 years. I don't know how many people in here can live with a 2.4% return in their portfolio for the next 5 to 10 years on any given year. It's usually a tough thing for people. A lot of people have to make at least 5, 10, 15% to just be able to kind of cover their living costs. And of course, if you have an inflation, you have to make a bit more of that. So what we want to be aware of is that we are not necessarily calling for just crazy volatility going forward. What we are really looking for, or not looking for, but we think is quite likely, is that we're going to see lower stock market returns going forward. And lower stock market returns are a problem for lots of people. So what we do, and this is what we're going to show you right now, is a specific strategy that takes almost no change to what you're probably already doing. It's just a bit of a different way of expressing it, and it's super simple. And it can be done with pretty much any portfolio in that sense, any size. It's not complicated, but it's something that very much goes against the grain of how people think about the markets. So if you look at the S&P 500 in any given year, it tends to have, good months. That's the chart here on the right, the graph, good months, bad months, and kind of anything in between. The problem is for those people that are looking for income, they're looking for something much more linear. But a lot of strategies, in fact, probably something like 85 to 90% of strategies that people deploy are directionally exposed to the market. And thus they are looking for some sort of linear return. Linear returns are a bit of a myth in the markets. They don't really exist. unless you have a really, really, really strong bull market with no volatility, and those usually don't last very long. So if you are the kind of person that's looking for an income in the portfolio, and you're, let's say, trading chart breakouts or, overbought or oversold, simplistic single factor models, that's a really, really difficult way of making money unless the market just goes in one direction with no problems in the world, no volatility, accommodative central banks, et cetera, Goldilocks, squared. But we're not in that environment right now. So for lots of people that are trying to generate an income, and again, by income, I mean some sort of steadier positive return on a monthly, quarterly basis, which is what we're trying to do with this, their P&L curve looks a little bit more like this mountain range, which is to say that they have a bunch of good trades. And then, like I showed you in John's portfolio a minute ago, they have a couple of bad ones and they start right back from the beginning. It looks like Neil just said that he's been there and done that. And I would probably argue that most people have done that before. I certainly have, and too much. And then they do it again. They work up that mountain. They have a bunch of good trades, and a couple of trades later, they're right back at the beginning. And of course, that's very frustrating because we're not making money, but it's also frustrating psychologically because we're spending a lot of time and effort and seeing basically no result. And so what we have found is that this loss of confidence that people end up getting from this kind of a strategy, from lack of progress, leads basically to lots of breaking rules and not sticking to proper risk management and so on and so forth. Remember, this gets us back to John. Remember John? Well, John, after he had a really bad experience last year, he reached out to us actually, and I was able to working with him, and I'm working with him right now on this very specific strategy so that he no longer has a P&L curve that looks like this, where again, he made a lot of money for a lot of years, and then last year crescendoed, making almost $1 million by June, and then lost a little more than $1 million in the course of just a number of weeks. Well, for John, what John is doing now is exactly what I'm going to show you right now, and that is a strategy that we consider to be, yes, it's high probability, it's low stress, everyone can say that, but it's really point number 3 here. It's very repeatable. And the repeatability, again, particularly for those people that are looking for something less hectic and less looking at the chart screens every day, all day long, it really is something that's made for that. And that's why we use it and have been using it for many, many years. And it really, at the core, has to do with a phenomena that I'm sure everyone's seen before when you look at these steep slopes that go vertical. And steep slopes that go vertical are a very natural phenomena in the markets, and they have a lot to do with exuberance in the markets. But at some point when a steep slope goes vertical, it tends to exhaust itself, at least for a period of time. The time frame we're looking for is usually about 2 weeks. That's all, just about 2 weeks to generate income. So we have the strategy that I'm going to show you right now that basically focuses on a 2-week period to generate income. It can also look for opportunities where something gets extremely oversold, like a stock falls apart and then it completely collapses. And then at some point it gets so oversold that it basically has a very small chance of continuing to go lower at that rate for the next 1 to 2 weeks. So that's just the very basic part of the chart pattern, if you will, that we're looking for. So this gets us to some option statistics that I just want to quickly go through, because lots of people are being taught these option statistics that are, quite frankly, wrong, and if they're believed, can lead to a lot of problems. I don't know. A lot of people may have found that using short-dated options is something they want to try. Well, it's also one of the quickest ways to basically not make money. So what we have found is that lots of people that are that are focused on generating income in the markets are being drawn to, as I said before, extremely risky strategies. And so they're being told that they need to sell options, because if they sell an option, they have a 75% chance of making money, and particularly if they use short-dated options and do the time decay, the theta game, that's their thing to do. Well, I can tell you, after now 24 years of experience in doing this, and empirically, one of my jobs in the past also was as a fund of hedge fund analyst. We would analyze these option strategies that basically sell options, particularly sell short-dated options. And it's really not a question of if, it's a question of when the strategies basically blow up. So that's an important part that we want to keep in mind, that using short-dated options here, which is an extremely risky strategy, is not what we want to do. What we are looking to do is the following 4 steps. And we're going to write these down, or maybe you guys can write these down if you have a piece of paper and a pen, or if you have a camera in front of you, maybe your phone, maybe take a picture of this. This is what we're going to do for the next couple minutes together. We're going to look for those steep slopes that have gone vertical. And then we are going to make sure we use very liquid options. And then we're going to use something called a far out of the money call, a put spread. But we're doing this in a very specific way. So if you think you've done this before, I can just about guarantee you that you've never done this before, because it's, again, goes completely against what people think works, which is probably why it works so well. So let me walk you guys through this. Again, we're looking for that steep slope that goes vertical. And at some point, the stock or ETF in question, or it could be another asset class, gets extremely tired and tends to basically stop going in one direction for a while. Same thing here on this particular stock. You can see the steep slope, it goes vertical, and then at some point it just becomes absolutely exhausted. So what we're looking for is we're looking at a strategy here, and we're going to look at Meta as an example, where we're able to take advantage of these almost irrational, exuberant moves. So let me show you what this looks like. So what we're looking at here is we're looking at a trend within Meta, that steady trend that I just said a minute ago. And you can see every once in a while, you get from that steep move, you get that really, really sharp move in one direction, in this case, to the upside. You guys can all see that, right? But what happens after the vertical move is that the asset in question, it's really almost not a question of if, it's just a question of when, will tend to stall in price. And I will show you in a minute how we find those spots. You can actually use this also on MetaStock. I'll talk about that in a minute. But you can see that after the vertical move, the asset tends to stall. And this is very much an institutional, there's a reason why this happens from an institutional fund flow perspective, and a whole bunch of other reasons as well. But let me walk you through a couple of historical examples first, and then we are going to look at this in real time right now at some opportunities that are happening right now or just happened over the past couple of weeks, so you guys can see some recent stuff. So this is on the daily chart. Now, this can also happen intraday. This works just as well intraday. But since we're looking to generate an income over a 2-week period and then continue to repeat that, we're looking at the daily charts here. So we're looking at daily charts. So same chart, and what you can see here is essentially a situation where the stock once again went vertical. And so when the stock goes vertical, there's a couple things that can happen. One thing that can happen is the stock can either go lower, but it could also go sideways. And of course, it can also go higher. A lot of people, when a stock gets really overbought, they will tend to start getting really giddy, and they will do something quite risky, which is, let's say, buy a put or even short the stock. I'm sure a lot of you have done that before, right? You do something called a directional trade. Now, there's nothing wrong with directional trades, except the fact that there's a really low probability of them making money. But even that's okay. It's just not okay if you're looking for income. if we're looking for income, which is our focus with this strategy, then doing a directional trade is really a low probability trade, which is why so many people struggle with making money, because again, they're looking at actually using a risky strategy for something that has to be very conservative. So in this particular case, when the stock had a very sharp move to the upside, instead of buying a put, we simply said we don't think the stock's going to go a lot higher. So what we did is we sold a call up here above the market, and we bought another call against it. And essentially what that means is we were able to receive a credit, money deposited in our broker account before, as we enter the trade. So we receive $1 credit, that's $100 deposit in our broker account per options leg or options contract. If I would have done this with, let's say, 10 options contracts, I would have received $10, 10 options contract, $1,000, excuse me, deposit in our broker account. Now, in this case, you can see a few days later, the stock actually went lower. And that spread was reduced down to 24 cents, which basically meant that I made an income of 76 cents, meaning $76 per contract, or $760 with 10 options contracts. Now, that's all and well, but the thing is, I made this money whether the stock went lower. In this case, it just even went sideways, but it could have even gone against me to a degree, you know, in this case, about 5% against me after being morbidly overbought. So this is an extremely high probability strategy through the lens of what we do, because we are not making a directional bet. However, here's the issue that a lot of people have. Lots of people would do something like this, but they will use very short-dated options. And using short-dated options is, again, it's one of the riskiest things we can do if we are looking to generate income. So let me give you an example why. So let's assume in this example, I would have used, in February, I would have used very short-dated February options, right? Like ones expiring next week, which through the lens of an income strategy is somewhat near the border of insanity. Because if the stock then goes against me, I basically am toast. I'm going to lose 3 wheels of my car. I'm done. I have really no way of making, I'm gambling basically is what I'm doing. But what if I used options that expire a bit further out? So I could use, instead of using a short-dated weekly option, what if I use an option that expires, let's say, 2.5 months out? In this case, you can see in February, we used April options. So instead of using short-dated options, if we use options expiring, let's say, between 55 and 85 days out, but only hold those options for about 2 weeks, and this is really important, we essentially, even if the trade goes against us, are quite likely to make money. So not only does the stock not have to go down, it can go down. In this case, I would make money, but it can go sideways. I make money, which is what happened here. And it could even go against us and we could make money, right? To a degree. That's really important, right? So this is really, really crucial to understand, right? So what we're looking for here is extremely overbought readings. And I'm going to show you how we're able to find this, among other things, on MetaStock. And this is actually something that I developed when I was working at JP Morgan. So when I was working at JP Morgan, I was working in something called the fixed income department as an investment banker. And what we were trying to find out is how can we find situations when something called a credit default swap, which is essentially a credit derivative, when that's extremely overbought and oversold. And I found over time that I can apply this just as well to the equity market or the ETF markets. And it actually works even better there, quite frankly. So this is something that I developed when I was at JP Morgan with a couple of our MDs, managing directors, and we were using this for our clients, among other things. Now, let me show you another couple of examples here, and then we're going to show you some stuff that recently just triggered, so you kind of get your head around this. This is, for example, Tesla, right? And what I did here in Tesla is we did a trade where the stock got extremely oversold. And instead of buying a call, we were just basically selling an out-of-the-money put, way out-of-the-money put. But instead of using short-dated options, you can see in February, instead of using February options in February or March or April or May options, we used June options. Why are we using June options in February? Well, because if the trade goes against us, we're going to lose almost no money if it's just done right by using options that far out. Now, in this particular case, you can see the stock did actually go higher. And because it went higher and we received $2,250 deposited in our broker account with, let's say, 10 options contracts as we open the trade. So we don't pay money when we do this trade. We actually receive money. Now, in this case, it took about 3-4 weeks later, and we closed this trade. So this we held a little bit longer. We held a little bit longer than our 2-week period, about a week more. We were able to close it for 43 cents. So we made an income of $182 per contract, or $1,820 per with 10 options contracts. But the crazy thing is, the stock did not have to go higher for us to make money. It could have just as well gone sideways or even lower to a degree. Think about that. If you're doing a trade, and what if you could make money whether the stock goes in your direction, whether it goes sideways, or even if it goes against you to a pretty decent degree? What if all of that was possible and you could still make money? Wouldn't that be a higher probability of you to make money? Now, again, this is not the kind of strategy you want to use if you are willing to take a lot of risk and you don't really care whether you make money on any given trade, or or whether you really care if you have a big account drawdown, or if you lose money even for 3, 4, 5 months. But if you are in the market to look to make a steadier positive return, which is our goal, our strategy, our goal, and this is what we have found works really, really, really well. So let me show you another. Here's our friend John again. Here's another example. This is the S&P 500, the SPY ETF. And this actually happened right during COVID. And during COVID, I remember walking into the office on March 16th, and the S&P 500, maybe some of you remember this as well, the S&P was down about 30% in just 3 weeks. And what we decided to do is we decided that buying the S&P at that point was quite risky. So we weren't willing to buy the S&P because it could have dropped lower. So what we did is we sold a put option way below the market. You can see like at the 190 level when the stock was trading closer to 230. And then we bought another put option against that. This is all being done with one simple spread order that you can just execute on a trading platform on your broker. And we actually received $105 per contract, or $1,050 with 10 option contracts deposited in our broker account. So again, we received money up front. Now, a few days later, in this case, 8 days later, the S&P went absolutely nowhere. I mean, it literally just went sideways. But in 8 days, we were able to make 11.4%. Now, imagine if one was able to put on trades where, as I said a minute ago, you don't have to be directionally correct. You don't have to be correct so much in terms of timing, nor in terms of magnitude of the move. Wouldn't that be nice? So that's what we do here. Are you guys starting to make sense of this? Can you see the value that this would provide? But again, this is really if you're looking to generate income. If you're looking to just kind of, put everything on red and you don't really care whether you make money or not, and you're just a chart breakout trader and you don't care, to doing a lower probability trade, this is probably not your thing. But if you're looking for income, again, if you're retired or you're thinking about retiring, or if you're working part-time, full-time, if you like just another source of income, this is something that we found works really, really well. So again, it's all about being probabilistically oriented. In fact, it's one of these things where the strategy works so well that it's really not about picking winners, right? For a lot of people that are excited about chart breakouts, and there's a time and a place for that. But if you're trading chart breakouts and all those kinds of things that are more risky, one also has to be aware that it's much lower probability. See, the objective here is really not to pick winners, but it's to get out of the trade once it goes against us. And that's why we structure the trade the way we do, and I'll cover more about that in a second again. But I do want to show you what this looks like in terms of the way we structure these trades. So for us, these credit spreads are something that we do at the beginning of every month or week, whatever the time frame is for our clients. And I also actually manage, I'm a portfolio manager, is my main job at our investment advisory firm. And we actually manage this portfolio exactly this way. So we're looking to generate an income, again, whether that's something that's a bit more short-term focused, monthly or quarterly, or even semi-annually. So we have that base income, so we don't have to worry and sweat so much about what the rest of our portfolio does over the course of 12 months or so. So that's really, really critical to understand. Let's see here. Let's move on. Okay, so what I'd like to show you right now, we're going to look at MetaStock here. And I'm going to just show you some examples of what this looks like, because what we needed to do when I developed this at JP Morgan is we needed to find an opportunity that showed us when a specific stock or ETF, and in our case at JP Morgan, again, we were looking at credit default swaps, is extremely oversold or extremely overbought. So in this particular case, you can look at United Airlines, for example. When that stock was extremely oversold, you can see in MetaStock, we got this buy arrow. Can you all see that up arrow, right? Well, we don't buy the stock there because that's a pretty low probability bet. We would simply sell this put spread way below the market, meaning we would make money whether the stock went higher, in this case it did, whether it went sideways, or even if it went against us to a degree. So the algorithm that we developed, if you will, the indicator, for lack of a better term, basically finds us extreme oversold situations like the one here on United Airlines, or extreme overbought situations, so that we are able to put on trades that give us the highest probability to generate an income over the course of about 2 weeks. It could be a little bit shorter, it could be 1 week, it could be even be a few days in some cases, or it can be a little bit longer, up to 3.5 weeks or so on the very maximum part. Let's look at another example here. This is I don't even know what the stock was, American Electric, and you can see the stock got very oversold. Now again, our bet is not that the stock rallies, although a lot of times it actually will rally, just as an FYI, but it stopped going lower, right? For at least 1 to 2 weeks. That's our only bet, is that the stock stalls. And by making a less directional bet, the probability of us making money is about 80% in any given trade. That's about our track record as well. So roughly 8 out of 10 trades are profitable. The trades that don't work out lose little money. So that we basically have a really high probability of generating that income, quarter over quarter, month over month, that kind of thing, whatever the time frame is. Here's another stock. This is just recently, a couple of months ago. This is F5 Networks, I think it is. And you can see how it got extremely overbought, right? And then the stock, this is a daily chart, and then the stock corrected, I think about 15% or so, or maybe even 20% over the course of the next couple of weeks. So all we did is when that arrow showed up is we sold a call spread way out of the money using the specific parameters I told you a minute ago, where we don't use short-dated options, but we use options expiring much further out, but only hold the trade for 1 to 2 weeks or so. Here's another one. This is Meta. Can you guys see those arrows? Again, you have the overbought arrows there that happened just a week and a half ago or something like that. And you have the oversold arrows a little bit before then. Well, when the stock got oversold, what we did there is we sold an out-of-the-money put spread way below the market. And then, of course, the stock rallied from like 90 to 190, $100. But again, we're not making a directional bet. I could have, but it's a lower probability bet. So we make a less directional bet for income. Well, a couple of weeks ago, we got an overbought signal at around 190, $200. So what we did here is we sold an out-of-the-money call spread, meaning that we would make money whether the stock went down, which it has, and we've now closed this trade profitably for income. We would also have made money whether the stock went sideways or even if it went against us to a degree. So we're looking to generate income every 2 weeks. That is the rhythm that we want to be in. Here's another one. This is an ETF. This is the dollar ETF, the UUP. Look how overbought that thing got at this point a couple of months ago. And look what happened to the dollar then had a really sharp collapse lower. So we would have just sold an out of the money call spread up there, generated the income, keep it on for 1 to 2 weeks, and then move on. Here's another one. This is IFF International Fragrances. This is a pretty popular stock. And you can see it just got really oversold just a few days ago. And the stock has been stalling, right? So we could have sold way out of money put spread, already would be making money, already would be generating income. Look at what happened last time. The stock got oversold, out of the money put spread. Literally a few days later, in this case, income was generated. It's as simple as that. Here's Nordstrom, JWN. You can see that JWN Nordstrom, you guys can pull up that chart as well in your charting platform or MetaStock. You see the stock got extremely overbought, extraordinarily overbought, and it then basically mean reverted. So all we did is sell an out of money call spread and keep that on for, in this case, it's just a few days. It happened very quickly, and just generate that income. So we're making a much less directional trade, much less directional bet. Here's Coinbase, for example, a few days ago. The stock got extremely overbought, right? And then we just sell an out of money call spread. So that way, we make money whether the stock goes sideways, whether it goes down, which in this case it did, or even it goes against us to a degree. And again, we're only holding this for 1 to 2 weeks max. That's kind of the time frame that we're focusing on. It's starting to make sense, right? It's really, really intuitive, and you'll see once you start using the strategy, then you get to the point where this really becomes second nature. And so this indicator, it's called the Vertical X Pro. I had a chat with Jeffrey, I think last year or so, and we got in touch. Someone had put us in touch, and it kind of dawned on us that we should make this available on MetaStock. It's available on a bunch of platforms, but it's now available also on MetaStock. So those of you guys that are using MetaStock, which I assume is a lot of you here, you can actually pull this up on MetaStock, and any given day, literally with one click, the scanner will find the extreme overbought and extreme oversold opportunities. Here's CMS Energy, extreme oversold, and look what happens a few days later. The stock rallies, or at least stops going lower, and we generate income just like that. What is this? GameStop. You guys remember GameStop? That was a fun one last year, or the year before. Extremely overbought, and right, that down arrow, and then the stock, in this case, it went lower, right? So all we would have done is sold the call spread out of the money, keep it on 1 to 2 weeks, and move on. So give me a quick yes, folks, if this is starting to make sense, right? And I think, and again, I will say this again, if you're the kind of person that doesn't really care whether you make money any given month or quarter, and you don't mind losing money, and it's largely entertainment based while you're in the markets, this is probably not your thing. But for those of us here that are looking for income, that are looking for something a bit steadier, you actually care about making money in the markets, this is something that I would highly encourage everyone to do, this kind of strategy. And again, we actually developed this indicator. I developed this indicator over at JP Morgan, and then I started using it myself. And then also what ended up happening is I got in touch with Jeffrey, and we now actually have this indicator, among other things, on MetaStock. So that's really cool, and I'm super happy with this. Here's gold, for example. It got overbought, and I'll show you what this looks like here. But I want to quickly talk about this. So if you like this kind of indicator, if you like the strategy, what you can do is you can use something called the options income seekers. You can see, as you guys can see here, this is a process that really works. It's been working for us for many, many, many years. And it's something that we use not only for ourselves, but also for our clients at our investment advisory firm to really try to generate an income on a steadier basis, or just make money on a steadier basis, right? This is really what this is all about. Let's see here. Let's see. Well, thank you, Denise. I appreciate it. It's not a calendar spread, Jerome. It's actually much easier and in my personal opinion, much higher probability. It's just a vertical credit spread, but again, it's done in a very, very specific way. So let me just quickly talk a little bit about how you can again, particularly, and actually really only those people here that are interested in steadier returns and steadier income, how you can get access to this. So I want to introduce you to the Options Income Secrets package. What this is for is exactly that. It's for those of you, those of us, I should say, that are looking to generate more steadier returns and income with a more conservative, if I dare use that word, strategy. Meaning the benefit is that we get a steadier and more regular income in our account. We don't have to second guess trades. We don't have to chart chase. We don't have to watch the flickering ticks all day. And with this package, which includes an options course on the specific strategy, what you'll learn is the way we use the strategy, not only, again, privately, but also for our clients at our investment advisory firm, Blue Marlin Advisors, which is where we manage these portfolios, and I'm the portfolio manager there for that. Trading is all about having a process, and I really can't emphasize that enough. So when you follow a cheat sheet, which I'll give you here as well, it's exactly for that, to follow a process. But as I said a minute ago, I also want to give you an edge in the market, and I want to also give you complete access to the indicator and the scanner as well, which I'll show you here in a second on MetaStock. So this is not only about education. So how does it work? Well, in essence, what makes this indicator so great is that it really gives us access to the highest probability, what I consider to be highest probability income trades, credit spreads. It does actually also work intraday. So for those people that are day traders here, I'm sure there's some of you actually can day trade with it as well, just as an FYI. I'm not advocating day trading right now here today, but you can do that as well. I use it every day for day trading. You can install it in a bunch of different platforms like Thinkorswim or TradeStation, TradingView.com, but of course it's also on MetaStock, and that's really what I would like to talk about here today. So Vertical X Pro is now available on MetaStock, and again, I'm super happy that Jeffrey and I were able to work out a deal to make this available to on MetaStock. And in order to scan for it, it's actually super simple. We just go to the scanner, and actually scan for the Vertical X Pro signal, which is listed there once you have access to it. And then it literally spits out the different stocks or ETFs or whatever other asset classes you might be looking for. And that's it. It's as simple as that. On the other platforms, it's the same deal, right? You can install this, for example, on Thinkorswim or whatever, and do that. But the great thing on MetaStock is that you don't have to install it. You just have to get access to it, and it's a really, really simple process that Jeffrey and I were able to work out for you. So we're really excited about that. So that's the Vertical X Pro indicator. Again, for those of you that are looking to generate income, it's not for everyone. Again, if you are the kind of person who's much more, again, in the markets for entertainment, and honestly, a lot of people are, and you don't really care about making money, on a more consistent basis, then this is probably not your thing. But if you're looking for income, if you're, looking to generate something that's a bit steadier, if you're looking, to put the odds in your favor, at least in our view, that's how this is being done, and use what for us certainly has been a proven strategy to generate income, I would highly encourage you to look at this Options Income Secrets package, get it, and use it on one of the platforms of your choice, including, of course, here on MetaStock. Now, one of the things that we do is we have a lot of people that already are using this. So Dave, for example, wrote to us that if you follow Serge's rules, you can make good, steady income. Or you can see Timothy, for example, great indicator, great strategy. We have many, many, many people. All of them are income oriented. A lot of them are thinking about retiring. A lot of them are retired. A lot of them are just working part-time or even full-time. And they're just anyone that's looking for a more steady stream of positive return is kind of what this is. So I said before, it's not for the people that are looking to swing for the fences. That's really not what that is for, but it is for people that are looking for something steadier. That's really the gist. That's our entire strategy. That's also the fund that I manage. It's really focused all on this type of thinking. And it's really about turning this into an income machine, whether that's monthly or quarterly or semi-annually, whatever it is, whatever the goal is on your end. So one of the things that we do is we actually have twice monthly for life member webinars. So for those of you that like this, right now you can get lifetime access for this. So this is literally just a one-time price. You'll never pay this again. This is not a subscription. You don't pay this monthly. You don't pay this quarterly. You don't pay this annually. Just one time. And today, we are going to knock off literally 90%. It's a little nutty, I know, but we're going to do it for the first 50 people because we're excited to be here on MetaStock with Jeffrey and the team. So for $397, you can get lifetime access to this indicator and actually the member webinars, which I'll talk about in a minute as well. So the way it breaks down is this. The actual course you get with this is valued at $976. The lifetime member webinars where I give you trades twice every month, like in great detail, is $997. The indicator is $1997, so almost $2,000, and we have some other stuff included as well, including an Iron Condors course. The total package value is $3,970. For those of you that A, qualify, and B, are interested, it's $397, and again, that's just one time. You'll never pay this again. You're a lifetime member of this. www.thesteadytrader.com/meta is how you can get access. If you want to use PayPal, by the way, you can do that as well. You can even finance that purchase, I believe, when you go to that link with PayPal. And otherwise, of course, credit card as usual. The other thing is here. If you have more questions and you would like to talk to someone, or just like to order by phone, or just want to talk to make sure this is all real, 401-203-7389. You can call that number. I'll repeat that in a minute. It's 401. Actually, I'm going to type it in. 401-203-73 is the number that you can call as well. But otherwise, again, www.thesteadytrader.com/meta. Type that in, and that's how you get access. Now, every single month, and this is really, really important, every single month, literally for life, we do member webinars. We do 2 of them every single month. And what happens in these member webinars is not only do I teach you exactly how to use the indicator and how to use the scanner, how to find the opportunities, how to set them up, but also we actually give you an actual trade every single time. Every single time we give you a trade, right? So if all you want is a couple of trades per month, and this is without you even using the indicator, right? This is just us giving you the trades. The next one of these member webinars is February 28th at 10 a.m. Eastern, 7 a.m. Pacific. And you don't have to be there live. In fact, they always get recorded. If you go out to the members area, which you'll get access to as soon as you become a member, you are going to be able to watch all the past member webinar recordings. You're going to be able to install it there. We have a great team. So just so you know, so as soon as you come on board, you are going to get an onboarding phone call. So don't get scared if someone calls you, just to say hello, to make sure to welcome you. And then you can also have an onboarding phone call that's a bit more official to kind of make sure you're all ready for all this. Let's see here. Yes, Carlos, you can install this indicator on multiple different platforms. You can include it you can install it, of course, on MetaStock, on Thinkorswim, TradeStation, TradingView, any of them. Absolutely, any of those, exactly. Yes, Gene, it works on TradingView as well. And of course, on MetaStock. Yes, and Kim is asking the same question. Adrian is asking if the indicator is as good as you're saying, why not do directional? Again, it's pretty much what I just talked about for the past 50 minutes, Adrian. It's because what we're looking to do here is generate a steadier stream of positive returns. We're looking to generate an income, not directional, more volatile strategies, because not every single trade is going to take off like a scolded monkey, right? That's not the point. This is about generating an income. So again, it sounds like maybe this is not the kind of thing for you, right? This really is for people who are looking to generate the steadier return, more of an income, that kind of thinking, which is not again, it's not for everyone, but for those people that really do want to make money over time, this is something that I would highly encourage you to seriously take a look at.
Okay, so we do have a quick question coming in from YouTube that I promised I would ask for DT.
Sure.
Can you hear me?
I can hear you.
Okay, good. Just want to make sure. He wants to know, what do you look for confirmation that the vertical run is over?
Okay, so well, he's asking for the secret sauce, and quite frankly, I'm not going to give you the secret sauce because that's basically 24 years of doing this in the markets, and I would give away secret sauce that I literally can't. But we're looking for a bunch of different stuff to come together. One of the simple inputs that I will tell you is things like momentum, but momentum has to be measured in very specific ways. And so to give you a little bit of background here, essentially, when we created this at JP Morgan, we were looking at a multitude of different factors. We started using this with credit default swaps, which is, again, the credit derivatives. And what we were looking for is way more beyond just the technicals. But we were able to pinpoint this down to actually make it so that it only looks at data as opposed to having to go into fund flows and things like that. So there's momentum in the math. There's some trend in the math. A host of things that make this work. It's quite complex in terms of how we came to it. It took us about 2 years maybe to develop. But once we got it, it was very clear that is usually where things get exhausted. It also matched up with fund flows, algorithms. It matched up with commodity trading advisors when they start exhausting themselves. Volatility targeting funds. So, but again, I have to say again, this is really only if you're looking to generate income. If you don't really care whether you make money in any given month or quarter or year, and you're more volatility focused, this is probably not your thing. This is for, again, maybe the person who is looking to retire or retired and just income oriented kind of stuff.
All right. Last question from Brian. Do you have a recommended account size?
I mean, it's hard to imagine anyone using much of this below, let's say, a $10,000 account would be my guess. But it's a great question, but it's a very personal question, right? I mean, it really does depend on everyone's own certain circumstances. But I would say maybe $10,000 or so. This kind of makes sense. Carlos is asking, I think, those before. Yeah, you can. That's right. You can install on different platforms, so on and so forth. Yeah, exactly. Let's see. Yeah, so in the members webinars, which we do every month twice, we also give you the trade alerts. In there, we will teach you exactly how to find the scan.
Serge, are you still there?
Yeah, I'm here.
I can't hear Serge anymore.
Jeffrey, can you hear me?
Okay. Yeah, I can hear you now. You went quiet for a second. For me, apparently Kelly could hear you. I don't know. So anyway, let's see. How does the product inform us that your stock's available to trade? From Carlos.
Yeah, I mean, again, this is what we do in the member webinars. It's super straightforward and repeatable, right? So basically, you just scan for it. It's like one click, whether it's MetaStock or other platforms, and with the scan running, it'll find you exactly, which stock or which ETF is either overbought or oversold. So that's how it works. But that's also how we do the member webinars, right? We do these every month, twice for life, right? So once you're a member, you never pay this again. And so this is not a repeatable thing. You own the indicator, you have access to it. You can join the member webinars. And really what you're joining is kind of our income-focused club, right? So again, for those people that like income, that are not so much focused on kind of swing for the fences, this is probably something that you want to have a look at.
Okay. All right. Thank you very much, Serge. Appreciate it.
Thank you, guys. I really appreciate it. This was fun, and great crowd you have here. This is really good stuff.
Yeah. I think you got the most questions. So Dina says this is an excellent way to use credit spreads. And I love bringing in very, very good job, Serge. I appreciate you kind of coming in and spending an hour with us.
Thank you, Jeffrey. I appreciate it. Be well, and we'll see you again soon.
All right. Thank you, Serge. And then
Thank
again,
you,
the
guys.
link for that is thestrategytrader.com/meta, which we've put in the YouTube and in the chat. So you should be able to click on it. Thank you very much. All right. Do this. Okay. And let me go ahead and change over just a little bit. We're going to change gears just a little bit. Dana says, I'm in. I sent an email to Ed saying to mark me down and I will settle up when I get back from a meeting. Okay, well, welcome. I don't know that you meant to say that. Bob says, very groovy. Thanks. All right, very cool. Let me go ahead and make me the presenter, and I'll go ahead and share my screen. And we'll go ahead and kind of just talk a little bit more. Serge, great job. We do appreciate that. I am going to just talk a little bit about CMT. We're going to do a little bit of a drawing, then I'm going to speak for a little bit. So, CMT Association. We want to say thank you to them for supporting and sponsoring and kind of putting on the events. Very, very good. They've been a very good partner of us. If you want a good accreditation behind your name, cmtassociation.org. What surprises me, Tyler comes in. He's going to talk, I think, on like Thursday or Friday. I'd have to look at the schedule. But what surprises me is how much a CMT association can help you if you're looking to get employed, managing money, if you want to be a market professional, if you are a market professional and you're looking to get more assets under management or more responsibilities at the bank that you work on. We're happy to be involved with CMT. They've been a hugely well respected and reputed organization, which I think reputed is a word. But we really appreciate them working with us, cmtassociation.org. So there you go. I hope you're doing well. I hope you're enjoying the conference. And I hope you're ready to give away another prize, Kelly, because I'm ready. This one's actually a pretty cool one. And I've already decided on it. So
let's do this. Let's give away some
prizes. The next prize that we're going to give away is Steve Bigelow's recorded training. Back in December, Steve Bigelow is going to kick us off tomorrow. He does a really good job of kind of identifying and doing candle patterns. Back in December, we did a premium training session with him where we sat down and he did 6 hours of training on his major signal patterns. The retail of this particular training session was $899, and so we're going to give away a copy. In it, I have some notes here. Steve does such a good job. One of the things I'm going to introduce Steve with tomorrow is how much I've learned from Steve. And, you know, I've had the ability to travel around the country with him and learn a bunch of things, and do hundreds of webinars with him. But he talked about the 12 major signals, which are why they're effective and how they work, how to look at the broad market, where to put in stops, confirming indicators you can use. It was a really, really good session, and he always does such a good job. As you'll see tomorrow when he does his class, he's spot on, top notch, absolutely awesome. So Kelly, I guess I really don't need to spend as much time selling this because we're going to give it away for free. But what I need from you is any number between 1 and 11,905.
Let's see, we've gone big the last few times. I think we need to bring it down a little bit and go 2,609. 2609.
Okay. And that would be, okay. Mr. Ely, E-A-L-Y. With a Gmail address. So I thought that's a very, so anyway, if your name is Mr. Ely, you just won an $800 trading package that you can actually view on metastock.com. So we'll set that up for you. I'll let you know that it's available. That's the Steve Bigelow recorded training. So he does great. Dana says Steve is brilliant, and Steve's teachers are brilliant. I would agree with that for sure. Vivek is waiting to win. I hope you do, Vivek. You need to hope Kelly behind me gets a little bit lucky with your name. So in any case, I hope. Anyway, let's go ahead and move on. I'm going to take these off because I'm going to be talking for a minute, and I just don't need them on. Speaking of live events, we are coming back on the road again. And let's see, and just before, if you are kind of interested in kind of coming to a live event, if you come up to our website and just go to our seminars page, there's a few towns that we're coming in. So this is metastock.com/offer/seminars. I'll go ahead and put this link in here. We're coming to LA, Irvine, San Jose, Phoenix, Chicago, Detroit, New York City, Washington, Toronto, Montreal. Those are the dates. We'd love to see you in person. It's a little 2-3 hour class that we do in person. So there you go. I'm gonna go ahead and kind of minimize this, and we'll go ahead and kind of move on just a little bit. So I'm next. That's why my picture is on the screen. Let's go ahead and kind of just move on to it. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any risk inherent in trading MetaStock. There you go. The information, software, and techniques provided today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability. Investment decisions based on use of software, any trading strategies, or any information provided in connection with the company. So there you go. Denver. I don't think, yes, we are going to Denver. And if you click on that link, you'll be able to see, if I'm not mistaken, it's Derricott. Dave Derricott is going to Denver this year. So it's our first trips in person after the world changed a little bit. So there you go. But yeah, we will be going to Denver, Bob. Hopefully you can see us there. So there you go. All right, my name is Jeff Gibby. First of all, I want to say, how are we doing today? Are you guys enjoying the show? Let me know in the comments. I'm going to wait for some comments to come in. I hope you're enjoying it. I think it's been going very well. I particularly loved all the speakers that we've done so far. To give you just some feedback on terms of if you've never seen me before, I've been here at MetaStock in March. It's going to be 26. Oh, shoot, I just forgot. I think it's like 26 years this year, but it might be 27. I don't know. Like, I'll have to go check in my LinkedIn profile or something. I believe it is 26 years this year. It's been a great company to work. I love working here. I love the software that we've got. When I started, we were part of Reuters. And then that became Thomson Reuters, and that became Refinitiv. We actually purchased ourselves back from Thomson Reuters about like 2013. And I won't go into like a lot of details about who Reuters, Thomson Reuters, Refinitiv is, but they do a really good job of collating data. And one of the partnership that we have with Reuters has been very, very good for us and for our customers, because I've had the opportunity, and we have a lot of customers that come from markets that are outside of the US. India is a huge market for us. Australia is a huge market for us. London is a big market for us. And the fact of the matter is Reuters is a very, very big institutional provider of data. They sell a lot of news and information to institutions, hedge funds, banks, you name it. They're a competitor to Bloomberg. And the fact that we have such good data that spans just about everywhere in the world has been really, really beneficial for us. And everything that I'm going to show you today is probably going to be US-centric unless you ask me for other symbols. I'm going to look at the symbols you're interested in, not the ones that I've cherry-picked, but it's probably going to be US-centric. But I want you to know, if you're following us, if you're watching us from India, we have a huge collection of people that trade the NSE market, the National Stock Exchange of India. Same with Australia, same with Singapore. We just got back from Singapore, in fact. We have a great collection of data. So I'm not going to talk a lot about kind of the business history. Hopefully you've had a chance to read the sign. It is a business that we've been doing for quite some time. One of the things that I've said, and one of the things that we're hugely proud of, is the fact that MetaStock has been rated #1 in its price category for 30 years in a row this year. So that's really, really cool. We're very, very proud of that and very happy with that. And I think it's something that we should be proud of. One of the things that we kind of talk a lot about is kind of the functionality and the capabilities of MetaStock. There's a few things I'm going to say on the outset. With MetaStock, it's a very, very well-developed program. It's something that's a very mature product. It's something that we've been working on for obviously at least 30 years because it's been rated so highly for so long. But there's a lot of stuff that you can do in it. It is a product that you install on a desktop. So if you've ever had HTML issues where you just don't feel like you're getting real-time data because you're on a web browser looking at an application, that's not going to be something that happens in MetaStock. It's actually, we actually tested HTML5 and we decided it wasn't a great place to put data through. So that's why we kind of still have a desktop application. Since MetaStock is such a big program, I'm going to be talking about a few of my favorite parts of MetaStock. And so we're going to go into those, including the very first thing that we're going to talk about, which is the RMO system. And the system, I talked to Rahul when I introduced Rahul yesterday, who's kicked us off for this session, talked about that being the very first system that I traded with. And I'm going to show you how that works. And then we're going to talk about finding breakouts with our dynamic trading system. And then we're going to talk about Haguro if I don't run out of time, which probably will run out of time and just be like, that's cool, we should watch the other video where I talk about it. But in any case, there you go. Thank you for some of the feedback. Bob says, of course. Pierre says, of course. Jerome says he's enjoying the event a lot. Bob says he loves it. Kari says he loves it. Ruslan says he's having another great day. So Frederick asked if we're going to Seattle, maybe in the fall, is what MetaStock said. The other thing that I meant to say is if you have questions, I'm going to look over here every once in a while to see if there are questions. If you do have questions, let me know. The thing that I'm going to ask for you right now is to give me some symbols. So if there's things that you want to look at, we're going to look at your symbols today. We're going to do a little bit of scanning, and we're going to kind of I'm going to try and manage my time well so we can get through a couple of things. So, but the first thing that we're going to look at is probably about 4 or 5 symbols. So if you are very, very quick and are one of the first 4 or 5 people that can type in a symbol, type it in there. Richard says, excellent presentation. Thank you. Thank you, Richard. All right, let's go ahead and, whoops. Let's get back into my PowerPoint here. We won't spend too much time in PowerPoint. I do need to, you're going to see how exceptionally large these PowerPoints are. Let's go here. Okay, side shot. And we'll go here. Okay. First, I'm going to try and cover 3 methods today. The first is the RMO system, which is a trend following system. And you might have heard like the trend is your friend, befriend the trend, rise your tide lifts our boat, those types of kind of cliches around the market. The very first methodology that I ever traded with is the method I'm going to show you. It's built into MetaStock, and we've included into MetaStock since every version since 10.0. And it was written by Rahul Mohindar. So Rahul he kicked us off yesterday. Rahul is a fairly humble person, though. He is one of our largest, most prolific dealers. They have about 6 offices in India, maybe 5 offices in India. He does a lot of teaching of people in India. He also is a panelist on CNBC and CNN India, and he sells a lot of MetaStock with us. We certainly appreciate all the work that he's done. Where we got RMOs, Rahul was in our office. This was when we had an office downtown Gateway, probably about 15 years ago. And he came in, and Scott Brown and myself, we were like, hey, show us what you're teaching people in India. And the method, he's like, okay, let me show you this method that I use. And he kind of went through the rules like I'm going to do with you, and how he kind of identifies and picks trades. And we liked it so much that we said, well, okay, we're going to include this in every copy of MetaStock that ships from the next version on. So we paid rights for it. This is only available in MetaStock, and it's something that it's actually where I invested first. It's the first system that I started trading with, and I still look at it. It's still a great system today. So there you go. Michael, in terms of your questions about MetaStock and 64-bit, I believe that's something that we're in progress with. If you've probably been paying attention to MetaStock for a while, you've noticed that we've just released a brand new charting engine, and there's been lots of changes and stuff like that. It's pretty exciting that the changes that have been made to MetaStock. I believe 64-bit is on our list. So there you go. Okay. Let's talk about Rahul. So the reason I like to show Rahul and the RMO index, the RMO system, is it's easy. Okay. it's objective, so we're not. It's 100% rule based. And I can go in and I can kind of show this on a lot of different stocks in a lot of different places, and it works a good percentage of the time. It doesn't work all the time, but it's a very simple 3-step process. Yesterday, Kelly did a demo where he talked about, you know, the system testing and that kind of stuff, and I'd love to do that class as well. This one, I think I can show you when, like, if I talk to you about how to do this. I think this is something that you can implement, and as long as you follow the rules, you can start to be more successful in the trading that you're doing right away. And I think it's a way that you can use MetaStock right out of the gate. So this is the reason that I like to show it. So we do have a, I did say it was a trend following system. We do have a couple symbols. We do have room for more. If you have more symbols that you'd want to look, I got Apple and I've got ES. And so if you have more that you want to look at, put them in the chat right now. We're going to be looking at them in just a second here. So when we start to talk about RMO, I love the way that it looks to take advantage of the trend. It looks to, and to take advantage of the trend, it's going to identify the trend. Okay. And when I start to talk about trend when it comes to RMO, there's going to be 3 different trends that we look at. The first one is going to be the primary or the long-term or the prevailing trend. Okay. Those are all words that I'll use intermingled. But the first thing that we want to do is to be able to identify long-term. Are we bullish or bearish? And that is what we're going to do. So we do have a few stocks. Thank you, Optionly IO, and I'm sure that's the right. Russian, Peter. Let's go ahead and kind of look at some stocks. Okay, I'm gonna go ahead and kind of swap into MetaStock. I'm gonna go ahead and close down this particular chart. And what we're gonna do is we're gonna go ahead and, yeah, I did that scan. For course, I wanted to look at it just to see if I liked it. I didn't. But let's go ahead and kind of open up the chart here. What I'm going to do is I'm going to basically kind of come in here. We're going to type in a few stocks up here. Now, I did kind of mention earlier how we cover just about data just about everywhere. There's a huge amount of data that's available in MetaStock. You'll notice 321,122 issues that are available. And one of the things that I think they've done a really good job with, these guys over here that do the programming, is kind of organizing those lists and kind of making them available. So if you're interested in, Vince earlier today did an index constituent list. He scanned the S&P or the NASDAQ 100. And if you want to find that list, it's just a list right here. Okay, here's the Dow, the S&P. Other lists that I like to look at are in North America. Obviously, if you're looking for ETFs, we have a list of all the ETFs that are here. If you're in option stocks and you just want to scan all of the optionable stocks, here's a list of 5,832 optionable stocks here in the US that you can just run a scan on. If you're not in the US and you want to find Australia, because you're in Australia and you want to trade the Sydney Stock Exchange, right here, just go into Asia. Okay, here's your Australian Securities Exchange. Here's your ETFs. Be able to find any of those particular exchanges. And I feel a little foolish because I don't think there's actually a Sydney Stock Exchange, but you get the idea. Here we've got the Korea Stock Exchange. There's Singapore is in here, but it's very, very well organized. You're going to be able to find the data that you want. Okay, up here I'm over in the charting tab. There's a quote list. We'll do scanning a little bit today. Kelly did system testing yesterday. Scotty's going to talk about forecasting tomorrow. But if I just want to open up a few charts, and I know what the symbols are, I'm just going to kind of type in a ticker here. So I'm going to do Apple, which is the stock that Peter asked for. I'm going to do STNG. And what I'm going to do is I'm going to do a little search because I'm not sure if that one, I'm pretty sure that one's going to require a .k after it. Okay. We are going to do, Richard gave us a few symbols. Let's do ES. Now, there's a lot of different roll methods for futures contracts. I'm going to do ESC1, which is a continuous contract rolled on expiration. We will also do now and vet. Michael asked a question. Okay, I'm going to open those up. I'm going to answer your question in just a second, Michael, while the chart's open. And what's not going to take very long to open up the chart. Right here where it says apply template, I'm going to be looking at daily. I'm going to apply the template called the RMO trade model. So there's a whole ton of templates. Templates is just some like the name of a chart style. So with RMO, it's going to apply the RMO indicators and the expert advisor and the trend ribbons and stuff like that. So if I want to look at RMO, what I'm going to do is I'm going to find that RMO trade model alphabetically here in the list. So right here, RMO trade model, we'll go ahead and open up the chart. Okay. And then those charts are going to go ahead and load. I'm going to go ahead and window them, and I will be able to kind of look at them. Michael says, I would like to combine RT Forex data, end of day North American data, and local end of day data. Is this all possible on MetaStock platform? So yes, hold on just a second. Let me do that. And then I'll do that again. Michael, if you do a North American package real time, you'll actually get FX included as part of that package. There'll be some exchange fees that you'll pay, but you'll also have the ability to download that data locally and store it in a DC format. So that's a really, really good question. I appreciate that question. And the answer is yes, just do the FX package. And we can help you understand those packages too. Our support team is awesome, and our sales team is also very good. So if you have questions either before or after you have the platform, you're more than welcome to kind of reach out to us. I'm going to close out the commentary right now just to kind of give myself some more screen space. We'll just kind of take a look at all of these. And the first chart that I'm going to look at is tankers, because actually it looks really good. It's the reason I'm going to look at it. But we can kind of take a look at the S&P Mini and that kind of stuff. Okay. Is the UI similar in MetaStock version 11? Actually, MetaStock version 11 is about 15 to 20 years old. But a lot of the mechanics have changed over the years. But a lot of the adding indicators and stuff like that have not changed. So the UI is similar. That's not necessarily going to say that you're not going to have a learning curve. Vivek, if you use MetaStock 11 back in the day, another cool thing is we'll give you an upgrade. So, and we do have a 30% discount on all of our upgrades. So if you haven't gotten the MetaStock 18 yet, now would be a great time to do it because it's got a big discount. And MetaStock 18, it's such a cool, I love the new charting engine. I think it looks so good. It's so fluid to me. I love kind of the ability that the new charting engine brings to the table. So Vivek, thank you for that question. So there you go. Let me go ahead and zoom in a little bit here. And what I'm just going to kind of come into this part where we kind of go in from this bearish to bullish here. And we'll kind of look at kind of where this is from that point. This is Scorpio Tankers. What an interesting stock. I can't say I've never looked at this one. So as part of these rule sets, the first thing that I want to do is it's a trend following system. So stocks that have been in a trend for a while are going to be really good for it. And a lot of stocks have a tendency to go into a trend and stay in it for a really, really long time. But the first thing that we want to do, since this is a trend following system, is we want to identify the prevailing trend. Okay, that's it. So in order to do that, there's an indicator on here that's called the Rahul Mohinder oscillator. I think it's funny that I said Rahul's name a little bit wrong there. But the way that we read this indicator is very, very simple. Okay, this is designed to kind of tell us whether we're in a long-term bullish or a long-term bearish trend. And the way that we kind of read it is it's either above zero or below zero. And if you remember from Rahul talking, he likes to keep things very simple. He says specifically when he does training on RMO, the size and shape don't matter. It's either above zero, which would mean it's bullish, or it's below zero, which would mean it's bearish. Okay, and that's it. John asked, how did I get RMO into the chart? From the Power Console, just use RMO trade model as your template that you apply. If you open up the chart and forget to do that, you can also right-click on the chart and go to Apply Template. And then that'll bring up a list of all the templates. RMO trade model is the template that you want to apply. So there you go. The special upgrade price from version 11 to version 18 DC, I'm going to ask Kelly to chat that into the chat because I don't remember, but it does vary. It depends on what version you have. So just actually, I'm just going to say, get in touch with us, metastock.com/sales chat, and they can kind of look up your account and see what you want to do and give you the upgrade price and tell you how much the data will cost as well. So if you're a new customer and you're getting MetaStock DC, it's $69 a month is all. So in any case, all right, let me focus for a second. The RMO, this is going to, if it's above zero, it's going to be bullish. If it's down below 0, it's going to be bearish. Okay, that corresponds. I'm going to actually make this full screen right here. That does correspond exactly to this trend ribbon down here on the chart. See how it says RMO is bullish? If it stays in a bearish point for long enough, it'll say the RMO is bearish there. But if it's green, if there's a green trend ribbon at the bottom, that means that this indicator is bullish, and that means long term that you're bullish. Okay, and for Rahul, that's what you are supposed to do with that is very simple. If you're in a bullish trade or a bullish trend, that you don't want to take short positions, the trend is your friend. So in the case that we're using a trend following system, if it's bullish long term, we're only going to look to take long positions. We're not allowed to short. Okay. Very importantly, it's also not a trigger. So just because I go from bearish right here to bullish right here, that doesn't mean I should get into a position. Okay. Just means that it's a permission. I have permission. If I look at the very hard right edge of this chart, I'm allowed to go long. And that's all that means. That means I'm not allowed to go short. Okay. And that's the first thing that we want to look at. That's step number 1. Are we bullish or bearish? In this case of this stock we're bullish, which means we're not allowed to go short. We're allowed to buy if the other signals match up. There's 2 more rules, and it's not a trigger. Okay. The second thing that we're going to identify is we're going to kind of skip the midterm trend for now. We're going to go straight to the short-term trend. Okay. And I'm going to go ahead and go back into the chart. I'm going to go ahead and kind of maximize these indicators. There's one change that I like to do to this chart. It just makes it a little easier for me to read. I like to make this this blue histogram into a line. Anytime you want to change anything in MetaStock, just double click on it. I've got it here. I'm just going to change it from a histogram to a line, and that just makes it easier for me to see the crossovers between the purple, pink, fuchsia, whatever color that is, and the blue. Okay, so the indicator that we're going to focus on next is the purplish indicator, and what we want to look at with that is also, is it above or below 0? You'll notice it's a lot more erratic. That's because that's looking at a shorter time frame. This is analyzing the short-term trend. Okay, if it's above 0, it's also bullish. Okay, if it's below 0, like it is here and here and here, it's bearish. Okay, and so right now, ignore the blue line. We're just focusing on the thing. The second rule is if we're long-term bullish and we're also short-term bullish, we're allowed to buy. Okay, if we're long-term bullish and short-term bearish, we're allowed to wait. Okay, so we want those to match. We want the long-term trend to match the short-term trend. Okay, if they both match, we're allowed to go long. And then, or if they both match because they're bullish, we're allowed to go long. If they both match because they're bearish, we're allowed to go short. Okay, but if they don't match, well, then there's a lot of trend indecision that might be happening, and we want to wait until they match. Okay, thanks, Raj. Appreciate that. Okay. Okay. The other thing that I'll point out real quick, he just said great presentation, is this swing trade number 2 is going to correspond with the color of the bars. So if it's up above 0, like it was for this huge period of time, you're going to get blue bars for this whole period of time. When it drops down below 0, you're going to get red bars. Okay. So you can look at the indicators, or you can look at the colors of the bars. It doesn't matter. We've got a long-term bullish trend right now, okay, which is indicated by this being above 0 and this ribbon being here. We've got a short-term bullish trend, which is indicated by this being above 0 and the bars being blue, okay, and so they match, okay, and we want them to match, okay. As long as they match, we can take a long position, and I'll talk about exactly the rules you would take to take that long position. Okay, but I'm going to recap real quick so that I don't waste my slides. If the primary trend or the long-term trend is bullish and the short-term trend is bullish, you're allowed to buy. You're not allowed to short. You don't want to trade against the trend, and it's not a trigger. Okay, that's all. It's that simple. So how does the trigger happen? Okay, and what you'll notice is you're getting buy and sell signals that exist on this chart, and I want to be really specific about how those come into play. So if we had, I'm going to kind of zoom in a little bit here right now, and let's just pretend that we're looking at kind of right here. And I'm going to come back into these charts. Remember, this was the shorter term trend. The blue is the medium term trend. And where it kind of gets a little bit different is we don't care where the medium term trend is. What we're looking at for the medium term trend is a relationship between the medium term trend, or the blue line, and the short term trend, the purple line. Okay. When you see a cross up, there's a cross up that happened right here. Okay. It's trading down below, it goes up above. That's a bullish, what Rahul likes to call a bullish change of force, or change of direction, or change of momentum that happened right here. That's a bullish one. When it crosses down below, which it happened right here, you'll get a bearish shift of momentum, shift of direction, shift of force. So those are very, very easy to see where they happen. And when I kind of put that back into the chart view, you'll notice that that is when they plot long-term, or these arrows on the chart, when that shift of momentum happens. Okay. So if I'm looking at the chart, that's actually a buy signal. This is actually a sell signal. Now, one of those I would take advantage of. If I'm looking at this buy signal here, this came in at February 2nd, right? If I'm looking at that, I'm not going to trade it, because we did go long-term bullish that day, but short-term, we were still bearish. So we wouldn't be actually looking at it until the very next day. When it does go bullish, when it pops up, we're looking at a daily chart. You can use this on any time frame. But when it does kind of give us everything in a row or in order, we can then go in and structure a trade. So that's really kind of how it works. We want the long term to be bullish, we want the short term to be bullish, and then we want that change of momentum that indicates that the price may move up. Okay. Now, I want to kind of get into the details of how things are structured, and how Rahul talks about how to structure a trade. And to do that, I'm going to come back out of, I'm going to expand out in the chart. I'm going to focus on where we went from bearish to bullish before this nice bullish move up. Okay. And what we're going to do is we're going to kind of zoom in right here, and we'll just pretend we're going in our way back machine. And we'll start looking at this on January 27th. On January 27th, we had a bullish change of momentum, but we were bearish long term, and we were bearish short term. As you can see, the short term is indicated by the color. That means this short term is below zero. Long term, we're below zero too, so we're not going to take that trade. If anything, we're going to be waiting for an opportunity to go short. We might be in a short trade as well. So, but at this particular time, we're not going to take advantage of that. A couple of days later, it gives us a blue bar, which means that short term, at least, it's going to start to show some strength, but we're not going to trade that either, because it's not until quite a bit later, right here, exactly, that we start to see some long-term strength right here. Okay. And on this particular bar, this is where we went from down below zero, long-term weakness, to long-term strength, February 9th of 2022. Okay. And then that particular part, we've got our shift of momentum. That shift of momentum has now been confirmed by a change of trend, both long-term, and medium term. So when everything kind of lines up, then we can actually kind of go in a place of trade. Okay. And now he does have rules around that too. And I think they're rules that are very, very helpful. So I'm going to put a big circle around where we're looking at right here, just so that you can see the highs and the lows, because those become important when we're actually going to put in the trade. Now, what Rahul says, okay, this is the day where everything lines up. Okay. Finally, after about a week of waiting around, we get a long-term strength. This is where we'd actually be looking to buy. Now, what he's going to have you do, the way that he teaches it, is he'll have you take a look at the high on the bar where everything lines up, which is right here, and the high on the bar before. This is the higher of those two highs. We're going to wait for that to penetrate right here. And when it penetrates that level, that's when I'm going to buy. Okay. So he just doesn't want everything to line up. He wants just it to break the high to confirm that we're likely going to go into a bullish trend. And it doesn't work every time, but that's another confirmation. A lot of times you have everything line up, it runs out of strength, and it kind of keeps going sideways. We want that additional confirmation, that penetration of the high to kind of get in there, okay? We want to do the same thing with the lows. And there's two ways that Rahul says to put in stops. The first way is to look at the lows. So if I was looking at the low here or the low here, I could go in and I could say, well, okay, this is the lower of those two lows. There's my stop. I like the second method that he uses. So that's the first method he teaches. What I like to look for is a recent support level. Okay. And the way that I specifically define support is I'm looking for a pivot low. And that might be a new term for you. It's also the same as a fractal low. But all that is that I'm looking for a low that's surrounded by two higher lows. Okay. And I'm looking for the most recent one. So if I'm kind of looking from this and I'm looking for a recent low, back, back, back. Here you have a low that's surrounded by two higher lows. Okay. And that's where I would use the second method and put in a stop loss right below that low. So that's kind of where I'm going to draw the line in the sand. If I end up getting into that stock, this is where I'm going to get out of it if it goes against me. Okay. So right now, I haven't gotten into a trade because we're still on this entry day. But I know if I get into a position, I'm going to get in at roughly around 1507. If it gaps up, I can get in above that. I can make a decision on that. But in all terms of all likelihood, my entry point is going to be close to 1507. Okay. If there's a huge gap, I might want to rethink that. Okay. Right here, we've got an exit point. That exit point is going to be 1343 and change, right? So I'm going to go ahead and put that on the chart as well. Okay. So we'll go ahead and put that out. It's going to pop out a little bit as soon as I kind of finish typing it in. 1507 is our entry. If for any reason I get in at 1507 and it goes to 1343, that's where my line in the sand is. Okay. Kelly talked yesterday about how airline pilots are kind of the best kind of suited towards trading according to studies. But the thing I like about this particularly is I'm making a decision for my entry before I get in. And I'm making a decision for my exit before I get in. I have a good idea. Now, you know, I'm sure we'll get the comment that, hey, it could gap down, and that is definitely a possibility. But I'm getting a good idea of what kind of like a risk would look like. And I'm making that decision before I get into the trade, before I'm invested in the trade, so that I'm not trying to make it because I'm stock slid $1 against me or $2 or $3. I know where that's going to be. And I'm also basing it based on what the stock's actually doing. I'm looking at my clock. We're not getting through 3 of these. So that's where I'm going to place the entry signal. Here's where I'm going to put my stop loss. And that's really kind of how we, what happens then is a couple days later, the next day, actually, we get in at 1507, okay? And then we put in a stop loss, okay? And then this starts to run up. We see a nice little run up. Here we had that shift of momentum, which happens, you know. It'd be nice if the market moved in straight lines. And sometimes when it's moving straight down, it feels like it moves in straight lines, but it's generally more usually of a stair step, 2 steps forwards, 1 step back kind of approach. With this one, what we have is a shift of momentum. While that shift of momentum happens, it's just because we're crossing from bullish to bearish. When that happens when you're in a trade, you want to start to pay attention. But in this particular case, we're still bullish long-term. We're still well above 0. We're still bullish. We're bullish long-term and we're bullish short-term. So as long as we're still bullish, we'll just want to kind of keep an eye on this and make sure that we don't hit our stop, that it doesn't go bearish, because if it goes bearish, we want to reverse our position. As long as kind of we have a bit of a pullback, but we don't go bearish, we want to stay in this trade, which is what happens. So it comes back, it kind of goes, sets a high, comes back a little bit, and then starts to move forward. And we get this shift of momentum or shift of force. We get this buy signal on the chart right here. Okay, I'm going to go ahead and put that as a nice big vertical line right here. When this happens, it generally is a pretty good signal to us. Okay, we've gone up, we've established a new support area, and now the signs look like it's going to go up again, which is what does happen in this particular stock. But when you get a buy signal, when you're already in a trade, there's 2 things that you can do. Well, there's one thing that you can do, and there's one thing that you should do. Rahul says if you want to buy more positions into, what are we looking at, Sting right now? You could. That is something you can do. I don't. I actually like to buy all my positions initially. Okay, but you can do that. And he says it's totally acceptable. That's the thing you can do. The thing that you should do is move your stop up. And you can use either of the stop method placements that we were talking about earlier. If you wanted to look at the low of this bar and this bar, you'd put your stop right here. I would look for the pivot low. And again, that pivot low is going to be right there. So I'm going to move my stop right now to right here. Okay, I'm going to go ahead and zoom out a little bit. Okay, here we go up a little bit more, have a nice little pullback. Here we have another opportunity to move our stop where this buy signal comes in. Okay, and you kind of see that this isn't very sexy. We're just kind of managing our position. And as long as this thing keeps trending the way that we want it to, we're going to try and take nice chunks out of that trend. Okay, the RMO isn't a system that's ever going to get you in at the exact top. I'm sorry, out of the exact top or in at the exact bottom. It's looking for where it's going to take advantage of this, like this long prevailing bullish trends you see in equities. Okay, that's where it's going to help you. And then when things get choppy and sideways, or when the trend ends, that's why you kind of want to keep moving that stop. So which is what you do right here. You have this bullish in the same direction, move your stop. Okay. Here you have a bit of a pullback. Okay, here's a great example. Here you have a pullback. You even get bearish short term, but you stay bullish long term. I'd stay in that. Here you have another opportunity to move that stop up, okay, from that buy signal. And you just rinse and repeat, okay? You actually do want to get out of this position at some point. Here you have an opportunity to move that stop up. Okay, let's do that. Okay, and we'd probably put it right here. That's your pivot low. Here you move it up a little bit maybe. Let me grab it right here. Okay, if you did stop out here because your stop is less, that's okay. You could still buy on the upward move. We're going to go ahead and kind of just say that our last stop in this upward trend was right here. Okay, that's right here where this pivot low came in, right by this run up. Here you had a signal to go short. You went weak and you hit your stop out. Okay, you just follow the same rules every time you move your stop. We ended up getting in. Was it $15? Okay, this is a really good example. Thank you for this one. We ended up stopping out of our trade at $48. Okay, generally with this one, we just moved up our stop. Every time we had a little bit of a pullback, we moved up our stop. Okay, most recently here, we did have a bearish. We would have been looking for a bearish position. That didn't line up. Here, we did have a long position that lined up, and we'd be anticipating this to go even higher. But that's how it works. It's very simple. It's extremely objective. Play with it. It's built into MetaStock. It works really, really well. John asked a question, do you set a profit target? Generally with my trading, I don't. Like I like to find opportunities and I don't set up a profit target in my personal trading, nor does RMO really have one. Rahul has never really talked about a profit target. He talks about how you can get out on some different things in his trading. I typically, what I like to do is move that stop up. And I love the way that this uses it because at no point are we going to go, okay, well, I'm going to set my stop at this level because I can afford to lose this much money. I'm looking at where the support exists on the chart. I'm looking at where the trends exist on the chart. I'm trading with what the markets are telling me, both bullet, long-term and short-term, etc. It's a very, very elegant system. So there you go. Brian says, when you get the buy signal on the daily, can you show us the entry point on, say, the 78-minute chart? We could go down to the 78-minute chart if you want to. My buy points and the way that Rahul teaches them are going to be based off of those highs. So and let's go ahead and just talk precisely about how this is. Again, because I think it's good. Here we got the buy signal, but we're bullish. We're bearish short term. It wouldn't be till the next day. And what you would be, so it'd be this day. I want to be really, really specific here, since this is probably the only method I'm going to talk about. There's two other ones that are really cool that I'm just not going to have time for. Maybe if we have a bonus session. But right here is where I'm looking to buy, right here where I put this symbol, right? Okay, not this one, this one. This is my buy point, okay? When I'm looking at buying, I'm going to look at the highest value that day and the highest value the day before. You say of the two highs, that's where my entry point is. So in some cases, you'll never enter on that because it never penetrates, but Rahul wants that. It's important. He wants that break of that area to just confirm that it's going. And more often than not, having that additional just a little bit of space on the chart saves you some losing trades. So in this case, you're not looking at a littler time frame. You didn't get in the next day. You got in this day where it kind of opened below and then moved above. Okay, and then so far you're making some pretty good money on that one. So Bob asked a question. There is Jax asked a question. Is there a RMO Explorer? There's actually 3 of them. You can scan for stocks that have gone from bearish to bullish. You can scan for new buys, and you can build a scan for everything that's in a short-term bullish as well. So there's 3 total scans that are in MetaStock. And yeah, that's a really good question. Let me go ahead and go in here. To find them, I'm going to go ahead and click on the chart and go ahead and click on the scan. I talked about all the changes that they've made for the thing, but I love this one. If I wanted to find the RMO scan, I just type in RMO. I've got RMO. This will give you a list of all the stocks in a bullish long-term, bearish long-term, new blues, new reds. There's a total of 4 scans that you can run that are RMO scans in here. So yes, great question. Love scanning. We talked about how scanning is I just love the ability to go through large amounts of data and find stocks that have it. Bob Watt said, Price, is it possible to run a scan for stocks that are far away from the 80 exponential moving average? Bob, that is a good question. Yeah, the answer is yes. So you can scan for just about anything. There's a little bit of a blog post that shows you how to set up a pre-filter scan that it just says if the stock is between this price and has an amount of volume. But you can build a scan for anything that you want. One of the questions that you probably would need to ask you, or you'd need to be able to define is, what do I mean? Are you looking for percentage away from the 80 MA? But that would be a really simple scan to write. And one of the things that you could do is you could write it. We've got all kinds of, I actually just did a class maybe a couple of weeks ago on how easy our formula language is to write. But the other thing that you could do is actually, we have a formula team that'll write a formula like that for you for $30, which is really, really cheap to hire a programmer. So you could do that as well, but you can scan for anything you want to. So that's in there. There are a couple, and I'm just going to kind of talk about them from a high level at this point because I am kind of running out of time, but there's 2 other things I kind of want to talk about. I'm going to kind of narrow that down to 1. So on this particular stock, it worked really, really well. The other stocks that we were given, we are in choppy times in the market. What I would say from a broad level, let's just look at the S&P chart here. And without going into every trade, we just kind of got out of a very, very big bullish cycle in the stock. We've kind of been a little bit sideways. I mean, I don't know about just, but right here, if you just look at where the RMO stays in those bullish zones and in those bearish zones, right here, I'd say during this whole time period, the RMO is bullish, okay? During that time, the S&P went from 2.4 to over 4.5. I would say that if you're only looking to do long positions during this upward move, you're helping. You see, I'm using a lot of legal terms like helping, but you're helping put the odds in your favor, especially if you're putting in good stop losses and looking at where things are. Now, the market isn't a truly linear force, but let's look at the kind of the downtrend. Here we've had a pretty steep market correction, and a lot of that is red bearish. So, and you are going to go into these sideways markets where it's harder to trade. It's good to be able to find the stocks that have trends and trade those trends. If you incorporate some things like support and resistance in terms of what you're doing, kind of understand where breakouts occur and that kind of stuff, you can really supercharge this as well. But I would say that trading in the direction of the trend is something that people have been doing for decades, like hundreds of years, and they do that because it's a good way. And again, we're not looking to get the exact top. We're not looking to get the exact bottom. We're looking to get good sizable charts out of the middle. So another, and I'm just going to kind of, oh my goodness. Another thing that I do want to kind of talk briefly about is our dynamic trading tools. There have been quite a number of people that have talked about looking for stocks that are breaking out of support and resistance. I'm not going to kind of drill too hard into this. We do have a collection of tools in MetaStock that I will tell you should play with if you have MetaStock. They're called the dynamic trading tools. If you run these explorations, they're going to allow you to find the stocks that have broken out of support and resistance, either on a long-term basis or a shorter-term basis. And those are things that I like to run all the time. So the explorations that you can play with is support and resistance long-term. It's going to look for breakthrough support and resistance on a long-term basis. The short-term basis, trend line breakouts long-term, trend line breakouts short-term. Those are some really, really cool scans that are just included in MetaStock, and I'd encourage you to play with them. There are videos that I've done in the past that kind of talk quite a bit about those. So in any case, there you go. Thank you, John. I appreciate that. Let's see. Could you somehow overlay the SPY or the stock sector so you'd only buy when those are also bearish? You can do that. You can, like, there's a couple of different ways you could do it. What I prefer to do is, if I'm going to do like multiple analysis, is I'll actually just do a template where I have the index that I want to look at as well as the stock, and then that way you can kind of see all the indicators at the same time. But yeah, absolutely, you can do that. And here's the question: could you overlay the stock with the sector or the index? So, and people like to start at an index level. What's the Dow doing? And I'm going to kind of take that approach as well. So, option LY IO, it's $30 to write a formula, maybe 35. It's cheap. It's not very expensive at all, and they will write as long as you can kind of. The biggest thing with programming is you have to be able to properly explain. As long as they can write it, they'll write it for $35. It's a great service, actually. Or if you want, you can. I did a training class on formula writing. It's actually not too difficult if you don't get too deep into it. So we go ahead and do this. Okay, let's go ahead and kind of get back into this. I kind of need to wrap up. So there are a couple of other things that I wanted to talk about. Let's just talk about this. MetaStock itself has been rated #1 in its price category for 30 years. I could talk about it for hours, days. 30 years in a row, it's been rated #1. When you set up for MetaStock, we're going to give you access to unlimited support. We're going to give you the data you need to power what you want to be able to do with it. We're even going to have somebody actually sit down with you and help you understand how to do it. So we have 2 versions of MetaStock. We have a MetaStock Real-Time. We have a MetaStock DC. Our MetaStock Real-Time version is $265 per month. That actually includes everything I showed you today, like the MetaStock Real-Time. It also includes a package that we call Zenith, which is an institutional grade news product. I could spend another hour talking about that. I could spend days talking about it. There's so much stuff that you can do in Zenith. And if you're interested in news and fundamentals, it's a competitor to Bloomberg. It's really, really good news. So that with MetaStock is $265 a month plus exchange fees for the exchanges that you want real-time access to. We also have an end-of-day version, which is here in the US, it's $69 a month if you need the North American package. If you're anywhere else in the world, it's $59 a month. I include $69 because if it's $59, you'll be happy with that too. $69 a month would be our end-of-day program. That is a system tester, it's a scanner, it's the expert advisor. It's everything that we've been kind of showing you how to do here. And over the last couple of days, $69 per month will get you that. Now, the special that we're going to do for you today is if you buy 1 month of that, we're going to give you your 2nd and 3rd month for free. So right now, I mean, it's 2/21 already. It's already February 21st. If you subscribe today, you're going to have access to May 21st, which feels like it's way into the future. So if you buy a month, you'll get the 2nd and 3rd month for free. That's going to include MetaStock. It's going to include data for the region that you're interested in. That could be North America and FX, like we were talking about earlier with your question. It could be Europe. All of the packages include FX. We're going to help somebody. We have a white glove installation service where they're going to sit down with you. They're going to show you how to do things, anything that you might be interested in the software. They can show you how to do. They can make sure everything's installed. They can just give you a demo. People love it. That's such a great thing that we just include for free as part of your sign up. We're also going to give you a home study guide because called Unleash the Power of MetaStock, which is a $99 value. So I would encourage you to try it. If you do just the DC version, that's like $23 a month, 69 divided by 30, and 3. And that'll allow you to try it. The software, it's been rated #1 for 30 years in a row. So 800-882-3040, metastock.com/saleschat, or metastock.com/conf promo. I use MetaStock every day to help me trade. I love it. If you like it half as much as I do, you'll be a lifetime customer. Try it out. There's a reason it's been rated so well for so long. So metastock.com/conf promo, 800-882-3040. We're bringing this in on time for you, Tompkins, or metastock.com/sales chat. So there we go. John, I will send you a video with more information about Zenith. Zenith's absolutely incredible. We actually have a speaker, I think, on Thursday or Friday that's going to be talking about fundamental analysis in Zenith. So come back for that. I'll also send you some more information in the link. Thank you for that question. Okay. All right. It looks like I got all the questions too. Thank you for all the great questions. I appreciate that. Let's do, I think I did CMT last time, so we'll do TASK this time. I do want to thank TASK, which is Technical Analysis Stocks and Commodities Magazine, for their sponsorship of the events. I remember, like, we called them up and we were like, we're going to do these online conferences and it's going to be all day long and they're going to be awesome. And, you know, gosh, that was 11 years ago. They've been great sponsors of the summits ever since we started them. And I really, really appreciate them. If you do get a MetaStock subscription today, you're going to get 5 months of stocks and commodities for free. And if you spend $300 or more, you're going to get 2 years for free. It's a great magazine. You know it's important to continue to learn about trading. And this is such a good vehicle to do that. They send it to you in the mail every month. You do get access to all of the trading archives for all of the articles they've ever published. But I do appreciate Stocks and Commodities and them believing in the summits and helping us with them for all of this time. They do a good job. So, and then we just spent an hour talking about MetaStock, metastock.com/comp promo, metastock.com/sales chat, or 800-882-3040. We'll get that for you. There is a 3-month offer for MetaStock real time. Absolutely, Vivek. If you sign up, you'll pay for the first month, and you'll get the second and third month for free. So that's the offer, regardless of whether you want real time or DC. So our next guest is Jeff Tompkins. Jeff is a good friend of mine. He's been working with MetaStock for, I think, 5 years now. He does a lot of like when we started talking to him, he was doing courses on udemy.com, which I think is the proper way to say that. But he's got a lot of students. He does a really, really good job. I've learned a lot of him, or about trading through him, and kind of the partnership that we've had. But he does a really, really good job. Right now, he's in the time that I've met him, he started managing a hedge fund, and you're in for a treat. The next Jeff is up. Hey, Jeff, how are you doing today?
Hey, Jeff, how are you?
Good. Should we do the nice name joke, or should I just kind of move on?
We both have great names, but I think it's established.
Yeah. Okay, I just sent the presentation over to you. Everything's been going well. We've had tons of good questions, a great audience.
It looks like we have a big audience on today.
Yeah. Yeah.
Great to see.
Let's see. Did you get an invitation to be the presenter?
I believe so. I believe I used the presenter link. Did I use the wrong link?
No, I think you're right. No, did you start sharing your screen? I don't see it, but the control room might. Okay. Yeah, once in a while when I present for an hour and then switch it to somebody else, I don't see the screen and I have to kind of play with it a little bit. But as long as everybody else can see the screen, we're good to go. I'll get out of your way, Jeff. It's all yours.
All right. Thanks, Jeff. Thanks for having me. Yeah, great to be here. Welcome, everybody. Good afternoon, or possibly morning, depending on where in the country you guys are calling in from. But anyway, great to have you guys here. Today, we're going to be talking about how to forecast markets up to 3 days in advance. This is what I term my slingshot setup. So you're going to learn a really cool strategy on our session today. We'll spend about an hour together, and you'll walk away with an actionable strategy you can use in today's markets. So really excited to have everybody here. I'll read a quick disclaimer before we get started. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We will be going over some trading results today, so just know that any results that I share today on the session are not necessarily indicative of future performance. Performance figures are based on actual trades that I'm going to share with you, including real money results. Due to the time-critical nature of trading, brokerage fees, and activity of other subscribers, I don't guarantee that any subscribers will mirror the performance that I share. And of course, performance numbers shown are based on trades users could enter based on our trade signals. All right. So we're going to start out our session today talking about why the market is so difficult to trade. If you guys are traders and investors, have dabbled in the markets, we all run into difficulties, right? And there's an array of reasons that, or factors that could create difficulties for us. One of those that I want to focus on that's really at the crux of a lot of people's difficulties in the markets is psychologically related. And you may have seen a trading psychology curve similar to this in the past, but what it shows is that it's kind of the roller coaster of emotions that we go through as we're engaging with the markets. So typically when we enter a trade, we're optimistic and maybe even enthusiastic and exuberant that the trade's going to work out for us, right? Otherwise, we wouldn't probably have gotten into the trade. So we kind of start out in that mindset, but often we run into bumps in the road along the way. So oftentimes we can get into a trade that we're very optimistic about and may even be working in our favor for a period of time, but then we run into a difficulty or the market conditions change on us while we're in the trade. And that can quickly turn to anxiety, denial, fear, and even despair as the trade or investment moves against us. And then what often ends up happening as our emotions, start to take over is we panic and often, end up taking a loss on a trade that may have eventually ended up working out. And so from there, we either take the loss, get out of the trade and start all over again, or we give up, right? And so that's kind of that discouragement, dismay portion of the psychology curve. And if we get back into another trade, that kind of starts all over again. We get hopeful again. Maybe we find a new system or a new indicator or something that we're again optimistic about, and we try it all again, and then we end up repeating this cycle. But the key here to understand is what most traders and investors end up doing is they end up buying or entering the markets when there's actually a high level of financial risk, and they actually end up panicking and taking losses when it may actually be the best time for trading and investing. So much of the difficulty in trading can really be boiled down to psychology, and we're all vulnerable to it, right? We're all human. So we're going to talk today about how to overcome this, the negative psychological aspect of trading and investing. So when we think about the psychology of failure, anytime we enter a directional trade, our goal is to buy low and sell high. But as I just showed you, unfortunately, that goes against our human instinct. And instead, when a security is going down, we sell it. And when it's already gone up, we tend to buy it. So we're often late to the game. And then we panic when price is falling because we're afraid of losing money. And we all are, right? None of us want to lose money, but it is a part of the trading and investing game. We have to be prepared for it. And then we often, buy when it's rising because we're afraid of missing out. So it's the, FOMO mentality and those emotions that cause us to behave in this fashion. And then to compound that problem, we're wired to repeatedly make the same mistake. So we buy high and sell low because that's what our emotions tell us to do. And without a solid trading plan, we're vulnerable to our emotions. So it's really crucial that we have a solid trading plan or strategy or indicator that we can rely on, and that helps us overcome the psychological and emotional components of trading. And if we're lacking a strategy that can identify momentum shifts, meaning we don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors, because eventually we start to second guess or doubt our methodology, our system, our indicator, and our emotions then take over. And this is what we're going to focus on today by turning the tables. And instead of being greedy when there's a high level of financial risk and fearful when it's actually probably the best time to trade and invest, we're going to do the opposite. So we're going to take a contrarian approach. And just like Warren Buffett says, be fearful when others are greedy, and be greedy when others are fearful, right? So it goes both directions. And that can help us actually be in, in tandem with the markets, right? So we can be in sync with the markets instead of working against the markets because of our emotions. All right, so what I'm going to do today to make this easier for you guys is I'm going to reveal one of my top setups that helps overcome these psychological components of trading and investing. It's called the slingshot. And looking back to the dawn of the markets, it's done an incredible job. In fact, 100% of the time, it's forecasted market rebounds after major sell-offs, bear markets, black swan events, market crashes. And we'll go through some examples of those as well. But I'll show you guys how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. We never want to get caught in the trap of trying to pick exact tops and bottoms. But this methodology can actually quite accurately identify where markets may be bottoming or topping out. I'll show you how to apply this setup to any market in any time frame. So this methodology is fractal. It can be applied to any asset class, any time frame. Reason being, it's really based on that psychology curve that we just looked at and the fear and greed that drives markets. I'm also going to show you a cool trick to how to eliminate a lot of your losing trades. We all have losing trades. Get that out of the way. It's just the reality of trading and investing. They're our biggest overhead as traders and investors. So obviously we want to minimize those and use reliable tools that help us keep us out of the market when conditions aren't favorable and keep us out of bad trades. So I'll show you a nice little trick to do that. We'll go over some trade examples together, and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals I use to make a living in the markets. I do trade for a living, and as Jeff mentioned, I also run a hedge fund. And I'll give you a little background on myself here momentarily. So let's start thinking about if we could actually buy low and sell high without any guesswork, without getting our emotions involved in the process. Well, there's one particular volatility study that has made this possible since the beginning of the markets. And it's a unique setup that I've developed called the slingshot. And it's allowed traders to buy low and sell high with 100% accuracy, applying it to the major indices, the S&P, the NASDAQ, the Russell, going back to the beginning of the markets. Not only that, it also warns of potential market sell-offs. So I'll show you here in a moment how we can use this to identify when there's the high level of risk in the markets is kind of played out and the markets are likely to rebound. But not only that, we want to be prepared if we're in high risk environments, which again, from a contrarian perspective, tends to be when markets are reaching new all-time highs and there's a higher potential for a market sell-off. We're gonna do this with volatility bands. So once these volatility bands of the market can't be stretched any further, they have to bounce back. So this is really an inevitability of what drives price action in the markets. And it's sort of a rubber band effect. And what it does is it makes it possible to accurately identify tops and bottoms in the markets. So here's an example of a daily chart of the S&P 500 index. During one of the worst recent crashes that we've had in the market, the crash back in early 2020 due to the COVID pandemic. And so in January, February, we've been in this long, decade plus secular bull market, major indices, the S&P hitting new all-time highs. And then, of course, something terrible happens, somewhat of a black swan event, and COVID comes along and economies start to shut down and a lot of fear gets pumped into the market. So think again back to that psychology curve. When markets are hitting new all-time highs, a lot of people are jumping into the market, particularly retail traders and investors, because again, we've been in this 10-year plus secular bull market, and we continue to hit new all-time highs, and traders and investors are afraid of missing out on future profits. But if you kind of flip that psychology and think, okay, we're hitting new all-time highs in the market at the time, there's actually a higher degree of risk, because as markets reach higher levels, they have a lot further to fall, right, when things go bad. And that's exactly what happened, right? So we get this dramatic 30% plus sell-off on the S&P in just a matter of weeks. We bottom out towards late March, and then what happens? Well, incredibly, even though the pandemic is continuing to worsen and more economies are shutting down, the market rebounded. And the way that we want to play this with the slingshot setup is to be fearful when others are greedy. That's back in late February. And if we're long, we have a long portfolio, we may want to look at hedging or protecting or exiting long positions. But then it created an incredible opportunity in late March, and the markets rebounded, right? And a lot of people look back and think, well, how in the midst of everything that was going on with the COVID pandemic did markets rebound back to where the sell-off initiated? All right, and this is what the slingshot is built around. So I'm going to show you exactly how that works and how to identify it. So I'll give you a little quick background on myself before we get into that. Again, I'm Jeff Tompkins, and I have 23 years of experience trading the stock, options, and futures markets. I received my professional training at Morgan Stanley at the trade desk as an intern, and I'm also the founder and chief investment strategist of Altos Trading. Currently, we have over 50,000 members in over 100 countries across the globe who trade our strategies, methodologies, and use our indicators. And I'm also a hedge fund manager, so I manage capital for my clients at Altos Capital. And I'm the founder and the creator of the Trade Trend Signal software, which we're going to be looking at today in our presentation and incorporating into our slingshot setup. So by the end of our session today, you'll discover one trade setup that has produced massive returns going back to the beginning of the stock market. In fact, this setup is so reliable, it's worked 100% of the time on the major indices, including in the Corona crash. So as we just looked at on that chart, I'm going to apply the slingshot setup to that and show you how it works. But this happens over and over again. And again, it's very reliable on the major indices, S&P, NASDAQ, Russell, but can also be applied to ETFs, individual equities, futures markets. In fact, I'll show you how I've used it in the futures markets as well, with some actual real money trades that I've done using the setup. But whether you're just starting out or you're a seasoned pro, maybe you've been trading and investing for a long time, and maybe you're running into some difficulties or having issues with psychology and emotional aspects of trading, this is really must-have information for today's markets. As volatility continues to, be elevated and we continue to see major swings in the markets, I think that's going to be continuing for quite some time. And the slingshot can really help you with that. So you'll discover why volatility is one of the only leading indicators of market direction. In fact, that's why it's termed implied volatility. It's actually a forward-looking measure of expectation of future market movement. We're going to look at how to identify when markets may be vulnerable to a sell-off. And this alone, I think, can really turn your trading and investing around and give you a new perspective. I'll show you how to identify when the market is likely to go up after a sell-off, how to determine exactly how far the market is likely to go up, and then stick with me to the end. I'll show you guys how you can get your hands on a tool that will change your trading forever. It's a tool that I use, and it's certainly changed my trading forever. So imagine a slingshot. Why do I call this the slingshot setup? Well, as the slingshot's pulled back, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot's released, the elastic energy is transferred to the stone as energy of motion. And in physics, this is what's called kinetic energy. Well, we can actually apply the principle of kinetic energy to the markets. Kinetic energy displays itself in the markets in the form of supply and demand. So when there's demand in the market, it creates buying pressure. And demand usually tends to come in at extreme levels after market sell-offs. just like we saw there in the COVID crash back in 2020. Now, once the bands become overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. So in order to accomplish that and apply the slingshot effect to the markets, we're going to use a volatility study called the Bollinger Bands. It's a forward-looking predictive indicator when used correctly. Now, most indicators use lagging data. And there's some, obviously a lot of ways to use indicators, including the Bollinger Bands. Most of them are going to incorporate lagging information, but there's actually a way to use them to forecast markets. And the volatility bands will tell us when prices move too far from the average and is likely to reverse direction. This is called mean reversion. And this incredible indicators, it's available on any retail trading or charting platform. I'm going to show it to you today on MetaStock. And it can pinpoint turning points in a security with astounding accuracy when you know how to do it, right? So again, this is the slingshot. So this is just a generic chart of a security showing a security that was in an uptrend and begins to rotate lower. And you'll notice that in this example, we have the Bollinger Bands plotted on the chart. Price is trailing a 2 standard deviation move from the mean. And eventually that sell-off creates demand, and this is where the kinetic energy comes in, which results in buying pressure and a rebound in prices. All right, so kind of take a mental picture of this because we'll get into some other charts to clarify what these 3 points mean. It kind of looks like an upside down triangle, right? And how to interpret them. So before we do that, some of you may not be familiar with the Bollinger Bands, so I'll give you a quick background of what they are and why they're significant. So they basically consist of 3 bands, right? A center band and then 2 outer bands. So in order to calculate these, we take a simple moving average of the security's price, and that's the center band, okay? So that's our mean or our average. Next, we take the standard deviation of the security's price. Now, standard deviation is just a mathematical measurement of average variance, all right? And this is where Bollinger Bands become very useful. It shows how spread out numbers are from an average. Markets always are either, diverting from the mean or returning to the mean reversion. We don't have to get into all the calculations of standard deviation, but just understand that the outer bands are a standard deviation calculation from the center band or the average. And because standard deviation is a measure of volatility, when the market becomes more volatile, we see the bands widen. And when the market's less volatile, the bands contract. So they're a great tool for telling us, are we in volatile market conditions? Is the asset we're looking at trading or investing in currently volatile or not, right? So that's the basics of the Bollinger Bands. They're fairly simple, and I'll give you the exact settings that I use. In fact, these are the default settings on the MetaStock platform. So you shouldn't have to change anything or make any adjustments to it. But I use a 20-period SMA or simple moving average for the center band and a 2 standard deviation setting for the outer bands. Okay. Now, as I mentioned, indicators, you could give one indicator to 100 different people and you'll probably see it used 100 different ways. There's many, many ways to use indicators, and that goes for the Bollinger Bands as well. So let's talk about a few of the ways that they're commonly used, and then I'll kind of explain why those may not be the best or most appropriate way to incorporate them into your trading and investing, and then I'll show you how we can actually apply the slingshot to the Bollinger Band indicator. So one common way they're used is to buy at the bottom band and sell at the top band. Now, the problem with this approach is price can hug the upper or lower band. In other words, it can trail or trade along that band for extended periods of time. And so, you may, if you use this approach, see a series of small winning trades and then be wiped out, see all those successful trades wiped out by one bad trade when there's a volatility expansion. So for that reason, I don't prefer this approach. Another approach is band contraction and expansion. Now, this I think is very valuable, but it's more difficult to trade. It can be a good indicator of an impending big move in a security, volatility, just like mean reversion, volatility is always contracting or expanding. So if we're in a volatility contraction period, inevitably, at some point in the future, volatility is going to expand. The problem is we don't necessarily know in which direction the move is going to occur. So for directional trading, not the best approach. Another common method is to buy or sell at the middle band. Now, this tactic can work in strong trending markets, but the problem is kind of inverse to buying at the bottom band and selling at the top band. It can result in a lot of losing trades. So again, it works in strong trending markets, but markets are they're not always trending strongly. So it fails when they're in a sideways range or volatility is low. So for that reason, I don't prefer that approach. Now the slingshot setup uses a unique approach to the Bollinger Bands. Here we wait for the lower band to break, and I'll explain what that means. And we wait for price to hug the lower band and ultimately rebound to where the breach initially occurred. And this setup and this approach to using the Bollinger Bands works in tandem with the psychology curve that we looked at the start of our presentation. So again, think back to that psychology curve where 90% plus retail traders and investors are following that psychology curve to a T. But if we take a contrarian approach, we can instead, be fearful and sell or cover positions when markets are vulnerable to a sell-off, and be greedy and get into the markets when they're likely to rebound. And that's what the slingshot helps us accomplish. So when we use the Bollinger Bands to help us buy low and sell high, we're going to talk about the components of the bands, right? So again, we have the center band, which is our mean, and then the outer bands, which with our settings, we're using a 2 standard deviation move from the mean. So the indicator's been around for a long time. It was developed by John Bollinger, and he designed it to discover opportunities that give traders a higher probability of properly identifying when an asset is oversold or overbought. And that's really, I think, that was his intention. I think is the best way, the most effective way to use it, and what led to me developing the slingshot approach. So looking at the slingshot approach, how do we incorporate this into this indicator? Well, the first thing we need to look for is, as I mentioned, price to exceed or hug a band envelope for prolonged periods during strong trends. And then we wait for the lower band to break and wait for a buy signal. And then we exit when price returns to the breaking point of the band. All right, and we're going to look at this on some charts here in just a moment. But it'll amaze you if you go back and look at this on charts in the past, how reliable and accurate it is. The major market indices, and we're in the midst of a slingshot now, in fact, but the major market indices have returned to the initial volatility breakout with a really high degree of accuracy, including all 4 major corrections we saw back in 2018, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis when the market lost more than half of its value in the second half of the year, the 2000.com bubble, the Corona crash, every black swan event, market correction, major crash, bear market, you name it. We can apply the slingshot approach to this and see exactly how it identifies vulnerable markets that are rotating lower and selling off, and help us spot rebounds when the market inevitably returns to those levels. All right, so let's go back to this chart of the Corona crash. We're going to actually apply the slingshot now to this daily chart of the S&P 500 index back from early 2020. All right, so you'll notice now I've got the Bollinger Bands plotted on my chart. And what I want you to realize and notice here is the markets are reaching new all-time highs. So February, mid to late February, we're hitting new all-time highs in the markets. And we've been in this incredibly long secular bull market. Okay, so when we think about the emotions here, the psychology, what most traders and investors are doing is they're trying to jump on the bandwagon if they're not already there, or maybe they're adding to positions thinking, hey, this thing's just going to keep going up and up. But we had a very reliable warning here. And so what I want you to notice is the Bollinger Bands, when markets were hitting new all-time highs, were horizontal and narrow. So the outer bands were close together. So what does that mean? It means we've likely been in an uptrend, right? And in this case, yes, we have. It means that market volatility is relatively low. It means that we're in a period of volatility contraction. Now, what did I just mention? When we have volatility contraction, it's inevitably followed by volatility expansion. And that's what happens during this particular market crash. Notice how the outer bands are beginning to widen. Now, there's one more important thing to notice here too. Not only are the bands widening, price is hitting the lower band right at the same time. So notice how price is starting, it's rotated lower from the upper band down to the lower band. And now price is starting to trail the lower band while the two outer standard deviation bands are diverging or moving away from each other. This is volatility expansion in the context of a market sell-off. And then we see price trail the lower band, and we have a huge, 35% plus market sell-off in the S&Ps, right? In the broader markets, even. So how would we identify that? Well, we look for the volatility expansion followed by the volatility contraction. We look for price to trail the lower band, okay? And then where's it going to turn around? This is kind of the tricky part about the slingshot setup. We know that eventually markets are going to come back up, right? So we need to look for volatility expansion to start to contract. And we need to look for buyers to start coming into the market. Okay, and that's what happened here around the third week of March. Okay, so for now, I just want you to visualize the setup and how it works and the logic behind it, and then we'll talk about entries and things like that. But notice that over the coming months, there was enough buying pressure to push the S&P 500 index right back up to the volatility expansion level. So again, that's where the market starts to trail the lower band and we get a volatility expansion. So again, it kind of looks like a lopsided upside down triangle. Okay, but that's the slingshot. So that sell-off is where the bands are being pulled back, and the apex or the buying point, the reversal where markets rotate back to the upside, is the stone being released, buyers coming into the market and driving price back up. Let's look at some more examples. So this is, I mentioned, it can be used on any asset, any time frame. This is Apple, daily chart of Apple. And if you look at the left half of the chart, what's happening, right? The outer volatility bands are moving in tandem, and they're relatively narrow, and price is in an uptrend, right? Now, remember I mentioned one of the approaches is to buy at the lower band. So a lot of people use that technique with the Bollinger Bands. And in fact, this might have looked pretty attractive because we get two bullish reversal candles right off the lower band in the context of an uptrend. So this kind of looked at the time like it's just a retracement, and Apple, there's probably some profit taking, and Apple looks like it's set to reverse back to the upside. Well, not quite, right? Apple sold off from around $200 a share all the way down into the 168 level. So big sell-off in just a matter of a few weeks, right? But it created a buying opportunity. And notice what happens. During the initiation of the slingshot, we went from volatility contraction to expansion. The outer bands were diverging. Price trailed the lower band. Buyers came in right at a support level at 168, drove prices back up to the initial volatility expansion. And notice how, as that rebound occurs, the outer standard deviation bands are converging. They're moving back in because we're getting volatility contraction. And often is the case when these slingshots occur, markets can often go far past that initial volatility expansion level, as it did in this case with Apple, where they went back up well above 200 a share. Here's another example. This is the Qs, Vesco QQQ ETF. See how we're in a volatility expansion on the left side of the chart? but then price reaches the lower volatility band, and we get a volatility expansion at the same time. The outer bands are diverging, and price trails the lower band for several months. But that creates an incredible buying opportunity as buyers eventually come in to the asset and drive the price right back up to the initial volatility expansion level. Does it work on intraday charts? Absolutely, because this is really psychology based. It obviously involves a lot of other factors, but it's very heavily based in trader and investor psychology. So it's fractal. It doesn't matter what time frame, what asset. You'll see this occur across them all. So this is a 5-minute chart of AMD, Advanced Micro Devices. Notice how we're in relatively low volatility with the outer standard deviation bands horizontal and relatively close together until we start to get a volatility expansion and price trails the lower band. That's where the sell-off comes in, and that's how we can identify and spot potential market sell-offs. Eventually, the slingshot gets pulled too far back, the stone has to be released, buyers come into the market and drive price back up to the initial volatility expansion level. So that's what it looks like on a 5-minute chart. It really doesn't look any different, right? Regardless of time frame. So the trick here is, how do we identify the buy zone, right? It's fairly easy to spot the market sell-off, right? Price is starting to trail the lower band and the outer bands are diverging, okay? Fairly easy to see that. But we don't necessarily know how long the market sell-off is going to last. So the trick is to identify when the band is overextended and ready to snap back. So I actually spent more than a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting so that I could apply it to the slingshot setup. And once I got the formula dialed in, I had to configure it to work on all time frames, duplicate the success across all markets, and I had to do it in an adaptable algorithmic formula that can reliably predict and forecast market trends. And that's really the challenge with developing indicators, is to make them fractal in nature. So I've developed a tool that actually provides accurate buy and sell signals near the outer channels of the Bollinger Bands, and it does so up to 3 candles in advance of a move. And I'm going to demonstrate that here in just a moment. But if we're trading off a daily chart, it can potentially give us up to 3 days of advanced notice of a forecasted trend direction. So it's an incredible tool for forward-looking, non-lagging forecasts. So when we formulate the right combination of momentum indicators, and it's important we use studies that involve momentum, trend, volatility, price action, to really get the full picture of what's occurring in the market, you can actually accurately identify buy and sell signals at the outer bands. All right. And so this is what we've developed in partnership with MetaStock with our trade trend indicator. So the trade trend indicator was developed to help accurately identify buy and sell signals out at the outer bands of the slingshot. And it does so with a proprietary blend of momentum indicators that can help warn us of market sell-offs. They can help predict short-term and long-term trends with quite astounding accuracy. It can be applied to any market, stocks, ETFs, futures, Forex. The MetaStock platform has an incredible screening tool that allows us to screen for trades in a matter of seconds. We can use it on any time frame. We can use the MetaStock robust backtesting tool to look at all the backtested metrics of every signal. We can use it and apply it to our option strategies. This is a tool and indicator in addition to the slingshot strategy that I'm teaching you on our session today that I apply to my options trading. I do a lot of options trading. A lot of options strategies are very time critical. So it's really important that we get our timing right. And these tools, the slingshot setup, really help me do that and trade without any guesswork. So we're going to take a look at the indicator and the slingshot setup on the MetaStock chart here in just a second. One thing that I've incorporated into this, and I mentioned at the start of our session, in terms of helping us eliminate bad trades or keep us out of the market if there's not follow through in our forecasted direction, is to use a specific type of order. And so this has been programmed into the trade trend indicator. Rather than enter the market with a market order or a limit order, we're going to use buy stop and sell stop orders to confirm the market direction. And you'll see here in just a second why that's important. But we can use a buy stop order to enter long trades and a sell stop order to enter short trades. And that'll actually help filter out a lot of false signals. And it can help improve consistency and increase profitability. So let's get over to the MetaStock charting platform and take a look at that real quick. So I just got a chart of the NASDAQ 100 ETF, the Qs pulled up. I've got my Bollinger Bands plotted with the default settings. So I've got a 20 period SMA and a 2 standard deviation outer bands, upper and lower band. And I've got the trade trend indicator plotted here. All right, so to give you an idea of what, let me just get my drawing tool up here, what the slingshot looks like. This is just the daily chart. So we're looking at a daily chart. So we've got this, really strong uptrend in the Qs, and then we start to get a rotation lower. Now, trade trend gave us a sell signal up here at the top, near the outer band, which is a great sell signal, but not quite as, it's not quite the slingshot setup yet, right? But let me explain real quick what the symbology means here. So trade trend, as I mentioned, gives us a buy or a sell, a forecasted buy or sell warning up to 3 candles in advance. So off a daily chart, we know up to 3 days in advance where the anticipated direction is. Okay, so there was our sell signal, right? Now I mentioned we use a specific order here. We want to use a sell stop order below the sell signal candle. So that's going to be just below this forecasted candle. In this particular signal, there was follow through. So on the next day, the next trading day, price came down into the entry level, and there you see our confirmed entry with a red down arrow. Okay, so it's simple as that. That's how the signal forecasts direction and a confirmed move, right? So not every signal is going to result in a triggered trade. But we're going to look at some that did here in the context of the slingshot. So after this nice sell signal, what's interesting here? Well, we're in an uptrend. People are getting greedy, overly optimistic. And then the Qs rotate lower into the lower band. But instead of rebounding back to the upper band, we get a slingshot, right? So outer bands are diverging. Price is trailing the lower band. This is kind of what I call a mini slingshot. It's relatively small, but nevertheless a slingshot. And price came right back up to the initial resting point. And there was our buy signal. Okay, here's another one. This is, again, kind of a mini slingshot. And we get a nice sell signal 2 days in advance this time. So our entry here would have been down below the candle. No entry on this day. We didn't trade down into that level. It would not have hit our sell stop order. But there we get our entry, our confirmed signal. And it actually is another start of a slingshot setup. What's happening here? We were in volatility contraction, bands close together at the top of a trend. And then we get volatility expansion. Price trails the lower band. There's our buy warning. Just came up and hit our buy stop limit order. And markets took off to the upside. So those are 2 examples of a slingshot. By the way, they also work in the other direction. So you can use them for long trades. They also work for short trades. This was I go back further on the chart, but a very long bearish slingshot. Here is another bearish slingshot. So price trailed the upper band, right? We get a couple sell signals up here, and there was the initiation of our volatility expansion. Price came right back down. So a bearish slingshot just looks like a right side up triangle. It's just the opposite of a bullish slingshot. But you can see these happen all over the place, and that's how you identify them. And that's how I use my trade trend indicator on the MetaStock platform to spot the reversals, where to buy on the slingshot or where to sell on the slingshot. Now, one other thing I'll show you real quick is how to interpret the signals. So like if we go back, there's a tool in here called expert commentary. So if we pull up expert commentary, right, and we go back to, let's see, March 9th, when we got the buy signal here, you can see that it's going to give you all of the instructions for that particular signal. So it tells us the criteria for a buy setup has occurred. It tells us the suggested entry price, which will be just above the high of the forecasted candle. It tells us what type of order to use, a buy stop limit order. It tells us not to take the trade if price gaps up beyond a certain level, right? Because then we don't want to miss out on a move due to a gap. And then if a trade is triggered, if the signal gets triggered, it tells us where to place our stop loss. And then the indicator actually continues to read the market as the signal plays out and give us a trailing stop level on each consecutive day. So you'll notice that as we fast forward, it's giving us our stop order value for the next day, right? And it will continue to print us a new stop order and read the momentum and strength of the trend to help us capture most of the trend before it reverses on us. All right. And here it actually gave us a nice exit before we had a bit of a retracement and then a resumption of the uptrend with another very nice buy signal there. So that's all provided to you in the expert commentary within the MetaStock platform. Very handy. So it tells you everything you need to know. All right. So we use buy stop limit orders for long setups, sell stop limit orders for short setups. And as you're kind of learning the strategy, I always recommend always practice first before, get comfortable with it before you ever risk any money. And probably best to practice with the bullish slingshot setup first. And then once you're comfortable, you can try out bearish setups as well. Bullish setups tend to work better on major indices because the market has an overall long-term upward trending bias. But you might, as you become more experienced, also apply it to individual equities. And so I suggest starting out, maybe on a daily time frame with the major indices. And then, from there, as you get more comfortable and experienced, you can go down into individual equities, other markets, and lower time frames. So that's the slingshot setup. That's the trade trend indicator that I apply to the slingshot setup. And now I want to actually share some real world, real money results with you using the slingshot and the trade trend indicator in my live brokerage account. And so the purpose of this is not to, is to teach you that, or explain to you that what I've just demonstrated is not hypothetical. I actually do use this in my own personal trading, and I can back it up with real money results. And so these aren't cherry picked. This is actually a terrible time in the markets. This was the Corona crash of 2020, February. And as you saw, the slingshot was playing out, and I spotted that and began shorting the futures markets using the slingshot setup. So I was playing it on the way down as the sell-off was ensuing. But I was also being very cautious. I knew there was a volatility expansion. I knew there was a major pandemic breaking out, economies that are shutting down. So I was trading quite small with only several contracts per position. But by the end of February, I was able to book over $13,300 in profit using the slingshot and the trade trend indicator. Now, as March rolls around, I spot the buy signal from trade trend. So I realize buyers are coming into the market. The slingshot has been overstretched and there's a lot of demand. Markets are eventually going to rebound, right? And I know where they're going to likely rebound to, at least to that initial volatility breakout. So I started loading up on my positions. I started trading more, allocating more capital. By the end of March, I booked over $27,000 in profit. Just trading small 1, 2, 3 contract positions. I was just trading more of them, allocating more capital because I was confident in the abilities of the slingshot and my trade trend indicator. So between February and March, when the markets got hammered and even big hedge funds and institutional investors were losing billions of dollars, I was able to book over $40,500 in profit using the slingshot and the trade trend indicator. in combination. Great powerhouse combination. And it works in any market, any time frame, any size account. Are there going to be losing trades? Absolutely. They can't all be winners, but it can really help us spot higher probability buy and sell entries and work against the negative psychological and emotional components that we all fall vulnerable to in trading and investing. And what's unique about Trade Trend is it gives us that buyer sell forecasted signal up to 3 candles in advance. So let's say you're using an intraday on an intraday chart, let's say a 5-minute chart. You have up to 15 minutes of advanced notice of a forecasted trend direction and reversal. So very handy. And again, the MetaStock platform within the expert commentary gives you the exact entry price for every signal. And it's predicted every market crash and rebound in the history of the markets. So if you guys decide to try out my Trade Trend indicator today, you can go back on the charts and look at every market crash, every black swan event, any significant sell-off in the market corrections. And you'll notice when you apply the Bollinger Bands and my Trade Trend indicator to the chart, you'll see the slingshot with the sell signal and the buy signal on the rebound. These are some examples. The flash crash of August 2015. What do we have? Very low volatility, right? We're in low volatility market conditions. Bollinger Bands are narrow and horizontal. We're basically just ranging up and down until August 19th rolls around and we get the flash crash of 2015. We actually got the sell signal on that day from Trade Trend. Looking at the Bollinger Bands, we've got a nice slingshot set up. We get a double bottom, we get a buy signal in early October from the Trade Trend indicator and markets rebound. This is the 2008 mortgage crisis. Similar thing, right? We're in low volatility conditions. Then we get a big volatility expansion. Price trails the lower standard deviation band. We get a sell signal around the 3rd week of May from Trade Trend. Huge sell-off. Market lost over half of its value in the second half of the year, but of course, eventually rebounded, right? And late November, we get a buy signal on the rebound. 2000.com bubble, going back over 2 decades. What's happening? Markets are hitting new all-time highs. Market volatility is relatively low with the Bollinger Bands converging, moving towards each other and getting narrow until we get the volatility expansion. There's the slingshot, sell signal from Trade Trend, early September. Market crashes. We get a nice buy signal mid-late September, and then ultimately the markets rebound right back up to that initial volatility expansion. Of course, now we're decades later and markets have far exceeded those levels. Those are all examples of major crashes on the daily chart. Now, every system will eventually probably produce a winning trade. The problem is they don't keep you out of the market when conditions are not favorable. And you end up, if sounds familiar to you, I've certainly done it in my trading career. We probably all have. We end up giving back profits on our losing trades. Again, our losing trades are our biggest overhead. They're inevitable. We're going to have them, but we need to utilize an approach like the slingshot and the Trade Trend indicator to overcome the negative emotional drawback of trading with 90% plus of other traders and investors who are moving opposite of the market, right? And that's really why investors like Warren Buffett have been so successful. They take a contrarian approach, and while Warren Buffett, I can probably confidently say, doesn't use the slingshot method, he basically is using that type of approach. He's buying when there's a high level of or a low level of financial risk, and selling when there's a high level of financial risk, which again, most people do the opposite of that. Here's more real money examples. So I apply this to the futures market. I love using the slingshot and the Trade Trend indicator in the futures markets. Here's some real money examples from my TD Ameritrade Thinkorswim account, where I made over $28,000 in a single day with over $122,000 in open profit, over $13,800 in a single day with over $152,000 in open profit, just on a few positions, 3 positions, the E-mini S&Ps, the E-mini NASDAQ, and the volatility, the VIX, right? The volatility futures. So here's my promise to you guys. I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trade signals. So you can use the exact signals that I'm using in the markets and the same methodology, and you can also apply it to the slingshot setup. So I want to invite you guys to join me to discover how I make consistent income in the markets day after day and week after week. And I'm going to reveal every one of my special techniques and indicators that make profits like this possible with absolutely nothing held back. So I give you all the tools that you need in addition to education. So you get 12 months of trade trend for stocks, futures, and Forex. You get the 3 months of MetaStock with Zenith data. You get exact entry and exit signals. I also hold live interactive sessions where I implement and demonstrate the trade trend indicator. Today we applied it to one of my best setups, the slingshot, but I also apply it to a number of other setups that I share on my weekly sessions. So you'll get access to those. They're held every Tuesday at 7 p.m. Eastern and recorded. So if you're not able to attend, they get posted in your members area where you can watch them at your leisure. I do host the sessions, so you get full support and personal coaching from me. I'm on the session live. You're free to ask questions or run anything by me that would be helpful to you. I just cannot give personal investment advice. But I'm here to help use the indicator and help you guys not just use it effectively, but limit losses and maximize profits in the markets. I also teach trade adjustments. So we have a really cool course that I'm going to throw in here in a second as a bonus that not only teaches many more of our strategies, but how to make adjustments to trades when they go against us and help fix losing trades. We can't fix them all, but often we can mitigate a loss or sometimes even turn that trade into a profitable one. So you'll get all the training behind that as well. And you're going to get the trade trend indicator. Again, that accurately identifies buy and sell signals at the outer bands of the Bollinger Bands using the proprietary blend of momentum, volatility studies, price action studies. So you can use it for forecasting both short-term and long-term trends on any market, stocks, ETFs, futures, Forex, on any time frame. All the way down to a tick chart if you want to, all the way up to a monthly chart. You can back test it on the MetaStock platform. You can apply it to your option strategies if you're an options trader and help remove the guesswork from your trading. So for being here today, well, first of all, I want to thank everybody. I hope you enjoyed the slingshot setup. I hope that you practice it and hopefully become proficient with it to where you use it on your own, because I think it's a really great strategy. And again, one I use on a regular basis in the markets. But I also want to offer you not just the education from today, but additional education and the trade trend indicator on the MetaStock platform. So I put together a package for the event today. That includes an entire year of trade trend on the MetaStock platform. Normally that retails for $1,499. You're also going to get live trade sessions. So again, we hold those every Tuesday, 7 p.m. Eastern. They're recorded if you're not able to attend. Retails for $550. You get coaching from me. So I'm going to host the sessions and help coach you guys and be there to answer any questions. My personal coaching normally runs $19,997 per year. You get exclusive invitation-only Facebook group access. We have a very close, tight-knit group of around 900 members in our Facebook group that use the trade trend indicator and our other strategies that you can interact with, ask questions, share ideas, etc. You get our special course, How to Adjust and Fix Losing Trades. That retails for $900. You get to basically learn to trade stocks, futures, forex, and options with Altos and myself, and really that's priceless. So I'm going to throw in 2 bonuses. Bonus number 1, you get my top 2 weekly trade trend picks. So every Monday, assuming there's not a holiday, we're actually putting one out tonight because the markets were closed yesterday for President's Day. So you'll get 2 picks tonight if you join us today. I send out 2 of my top opportunities that I've identified in the markets with trade trend. They also come with the supplemental options play as well. Normally that service retails for $997 for the year, but we're throwing it in as an extra bonus for the package today. You're also going to get How to Create Risk-Free Trades ebook. This is my latest ebook. That's a great complement to the trade trend indicator and the slingshot setup. It's a money management strategy book that provides different systems and strategies for mitigating risk in trades, and in some cases even being able to eliminate the risk using various scaling techniques. And that retails for $97. So the entire value on the package retail value is over $5,000. Today only we're taking 80% off. You get everything you see here on the screen for only $9.97. So it breaks down to less than $3 a day. There's no contracts, no commitments, and You can cancel at any time. If you decide it's not for you, we understand, no problem. I'm also going to go over our refund guarantee here in just a second, but we're very confident about what we're offering. And we are really looking for serious traders and investors that want to, up their game, to become more consistent, and to learn our strategies that we use in the markets. So we are going to limit this today because we have hundreds of people on the session. We can't, as much as we'd love to, sell it out to everybody because it takes obviously legwork and time and effort on our part to get you guys up and running. And we don't want to sacrifice customer service for the sake of making more sales. So we do limit this to 25 seats. Once the 25 are gone, it will be off the table and you'll have to buy these at the retail price. But if you'd like to claim the 80% off today, you can go to altostrading.com/MetaStock and claim one of the 25 seats. I'm running a little short on time. I was going to share some testimonials from users with you, but I'll go ahead and skip through that. So let's just go ahead and I want to open it up to Q&A and then let you know about our refund policy as well. Since we're kind of a couple of minutes over, it looks like, or just right at the hour, it looks like if I don't get to all the questions, or there might have been a lot of them, so I want to make sure we answer everyone's question. But for the out of respect of the next presenter, if we don't get to them, support@altostrading.com is where you can reach us. You can shoot us an email, ask any questions that you like, and we'd be happy to answer those. And before I pass it back to Jeff for any questions, we do have a 30-day no questions asked money back guarantee. So if you want to try out the package, you even get to keep the bonuses if you decide that it's not for you. We do offer a 30-day 100% money back guarantee, no questions asked, if you decide that it's not right for you. But we really do want people who are serious traders and investors, whether you're a short-term trader or a long-term investor. We're looking for people that are willing to learn, try new strategies, and we're happy to take you guys under our wing and help you guys become successful. So there's their money back guarantee. So Jeff, I'll go ahead and pass it back to you. See if there are any questions that have come through before we wrap it up.
Yeah, let's do two real quick. Let's see. Can you use this technique for intraday?
Yeah, absolutely. As I mentioned, it's really built around trader psychology, which really actually plays out similarly across all markets and all time frames. So yes, it can be used for any market, any asset class, on any time frame.
And the same question from YouTube. Peter wants to know if it will work well with Forex data.
It can, yeah, it can absolutely work well with Forex. In fact, Forex markets tend to be a great market to use the slingshot. Forex markets can be quite volatile and make quite extreme directional moves. Yes, it can be applied to Forex, both the slingshot and the trade trend indicator.
Okay, and I actually didn't type in the full address, but those are the two main questions that we had. Jeff, thank you very much.
Great, yeah, and once again, guys, I'll put our contact up again. If you have any other questions, you can shoot us an email, support@altostrading.com, or you can go to our website, altostrading.com, and we also have our toll-free number posted there if you'd prefer to call in. Please feel free. But I want to thank everybody today. Thanks to all the MetaStock team for having me on. It's a pleasure to be here, and thanks for all of you for attending. I hope you got a lot out of it.
All right, thank you very much. Also, like if people do have questions, we can help them here at MetaStock, and I put our number in the chat as well. So
oh, great, absolutely,
awesome. Thank you very much, Jeff. I appreciate it.
Thank you.
All right, go ahead and do this. Make myself the presenter. Show my screen. Turn my camera on. Lots and lots of stuff. Here's the web address for that again. It's just altostrading.com/MetaStock. So there you go. And wow, that took over my screen. I'll figure that out in a second. All right. I hope you guys are enjoying everything. Thank you for coming. The website address for that again is altostrading.com/MetaStock. You can also give us a call, 800-882-3040, or you can also chat online. Any questions you've got at metastock.com/saleschat. So with that being said, thank you very much, Jeff. I really appreciate you. We'll see you again soon. All right. I do want to say thank you to CMT Association this time for sponsoring the events that we're doing here. They've been sponsoring our events for 11, 12 years. They do a great job. We really, really appreciate them. Our next guest is actually a CMT as well, and she does a great job. Before we get to her, Martha, if you can hear me, don't show your audio is connected again, or just yet. There might be an audio dialog box that you need to click through so that it'll connect the audio, but we won't be able to hear you just yet. And I might need to give you a call. I don't even know if you can hear me. But before we kind of worry about that, Kelly, let's go ahead and do a prize real quick. All right. Well, let's just jump straight to it. You know what? I'm gonna pick a surprise gift off of here. Are you familiar with Anne-Marie Baiynd?
I am.
Okay. She's going to give away, I'm going to give away a signed copy of her book, as well as her Swift intraday options trading course. Talks about intraday options trading, futures trading, trading levels. It includes daily blog posts, weekly reviews of the markets, and of course it supports MetaStock. So this will be a very, very good prize. Let's go ahead and give it away. I need a number between 1 and 11,905.
Ooh, let's go with 618.
Okay, A618. Okay, and that is
Wait,
Sabango.
hold on. Did you go 8618 or 618?
I did 618.
Okay, that's what I
But
said.
I did A.
Okay, I got you.
I did A618 because I'm looking at an Excel. So that gives me to that exact column, A618. So let's see, it's Sabango. Sabango with an Outlook email address. You won that prize. Let me go ahead and make a note of that. And there we go. Okay, let me go ahead and save that. Martha, let's go ahead and I'm going to need to do just a little bit of help for Martha to get her up and running. We need to get her audio connected. So give me just a second. And in the meantime, we will share this video with you.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window.
Am I said?
Next is Martha Stokes, and Martha is presented with MetaStock. She's been a friend of MetaStock for a long time now. She has a CMT designation. I love having Martha on because I love hearing what she has to say about the market, all of that kind of stuff. Martha, I'm going to go ahead and send the presentation over to you, and I'm going to keep you on here. I want to make sure we can see your screen and then also hear you. So you should have just got a message that said share your screen. I can see your screen.
All right, can you see me? Because I have the camera on.
I can't see you, but I can send a webcam request to you.
Okay.
And it should say, do you want to share your webcam?
Okay. There we go.
Now, you're
All
perfect
right.
now.
All right.
I'm going to go ahead and get out of the way. Thanks, Martha.
All right. Hi, everyone. It's great to be here. I thoroughly enjoy doing MetaStock things. Today, we're going to talk about precision entry and exit signals, which are very important to you. As always, we are an educational company. We do not recommend stocks or have anything like that going on. So this is just for your educational purposes only. We're not recommending any stock. I do want to say that this is our 25th year in business, and we have been extremely successful for our students. Over many thousands and thousands and hundreds of thousands of people have taken at least part of our courses. Tech and Trader courses are now endorsed by Shark Tank's Kevin Harrington. The American Entrepreneur Team was looking for the best stock market educational company for individuals to learn how to generate extra income from trading stocks, a company that Kevin Harrington could be proud to endorse, and we are it. We have a free bonus at the end of this presentation for each and every one of you, so each and every one of you are winners of a prize today. Precision candlestick entries and exits. Most of you already have the basics of candlesticks. This training is not going to cover the basics. If you are brand new to candlestick analysis, then please visit our website. We have a free mini course on the basics of candlesticks. This training is about teaching you how to identify specific candlestick candle patterns that provide a precise entry or exit point, which is critical. When you use this type of candlestick analysis to choose your stock picks, your trading profits improve quickly and the time required to find stocks drops dramatically. Bear in mind, there are a lot of talks about AI and machine learning and automation and quant and all this stuff. The human brain is far superior than is anything that's out there. The trading floors of the buy-side institutions and the sell-side institutions are expanding. The traders still do the analysis of the stock and the indexes with technical analysis, and a lot of them are using MetaStock. So you have a great resource for your charting program here. The goal is to increase your profitability on every trade while reducing the time you spend. Variables. The original candlestick charts were developed for the rice commodities trading in Japan in the 1600s. Rice at that time was not just a commodity, it was also a currency. If you trade commodities and currencies, you will find that the candlestick patterns vary. What became obvious to me immediately after candlesticks were presented to the professionals of the CMT Association in the 1990s, Steve Nissan, CMT, was the huge differences on how candlesticks needed to be interpreted on the charts for the U.S. exchange traded stocks and options. There's a huge difference. This is because there's a vast difference between the Japanese rice commodities market and currencies of that ancient culture and how the U.S. and Western stock markets are structured. Those variables and differences have increased exponentially over the past decade, due partly to the change of pricing from fractions to decimals, changed everything. The US stocks and options markets have undergone massive internal structural changes in price spreads, order types for professionals, routing types for professionals, speed of execution for professionals, exchange liquidity or lack thereof, and much more. So we have a totally different market than we had in the 90s or the 2000 to 2010. Excuse me, it has changed a lot. Why the analysis of candlestick differs. First, the new professional order types. There are many new order types pros use that are not available to the retail traders. For example, there are many TWAP variables, time weighted at price, but they can have 10 legs. If you're an option trader, you know what I'm talking about. 10 legs on one stock trade. So they're in a stock, they're in a commodity associated with that kind of stock or that industry. They're in an ETF. They're in all kinds of variables and currencies as well, all at once, juggling it. That's why it takes a professional. There's no computer that can do this work. Execution in a millisecond transaction, market with penny to half penny spreads, alters candlestick patterns. You are required by law to have your broker fee or your payment for order flow from the market makers, such as there's several market makers that are out there that do that for the brokers. So the brokers either fill your order through their own inventory or they sell your order to a market maker and that market maker fills your order. But it has to be done in 1 minute. It's very easy on their side of the market because they're trading in a millisecond. How many seconds are in a millisecond? A lot. Dark pool delay orders until after the market closes. 80% of the market is dark pool activity. So if you're day trading or intraday trading, you're seeing 20% of the activity. Okay, so you need to understand the candlestick patterns or you will be at a loss. And the SEC, I check the SEC all the time. They follow me on Quora. They love me because I'm very honest. And they are saying that 99% of all day traders are losing money. And so you have to be careful with day trading. Pre-market trade activity that retail traders do not have access to use. There is trading activity going on before the market starts. That's where all the HFTs act as market maker takers and fill the queues with all kinds of orders to balance it out. HFTs access to the retail crowd sentiment before the market opens. They get to listen to everything that's on social media and they look at the chat rooms and all the other activities where you group together and discuss and all the gurus. So they know what you're trading. They know what you're thinking about and they can front run you any day of the week. Automation of orders. Over 90% of all orders are fully automated. So they're going through a routing system that automates it and takes it to the best location for the best action for that particular stock. Professional routing types. There are over 50 ATS dark pool venues right now. It's up 10 ATS venues from last year. And these routing types allow a lot of money and orders flowing through the market that you can't see unless you learn to read the charts in a different manner than what you've been taught. Computer market makers, HFT maker takers, retail brokers, filling most of their customer orders or payment for order flow, which is selling, the brokers sell your order to the market makers so that they can make extra money. And when this happens, your trading is not free. They're using the spread and all kinds of things that they can do. So it is costing you money and you need to accept that fact. To make money in the market, you have to spend some money. So be aware of that. Derivatives, trading on the stock market, ETFs, ETNs, ETCs has altered it because now we have what was once an index or a mutual fund, but it's now an ETF and we can trade it just like a stock. You can go in and out in a minute. They can go in and out on a millisecond. It changes the whole way, this whole structure of the way the market is working. Regulatory compliance and SEC rules governing each of the different various groups. So let's have an example. The biggest example I can give you is interpretation of the doji. Doji is a candlestick that everyone knows about. There are many kinds of dojis if you've read the candlestick books. In the Japanese candlestick, the small body to no body doji with small shadows and wicks and tails was originally considered either a reversal pattern or a warning of a potential direction of change. But that's not true anymore. There's dojis in this pattern and it still goes down. There's no directional change. Boom, 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 boom. And there are more dojis that form, and those dojis are not telling you that there's a directional change. They're telling you that the professional traders are getting in on the stock and it's going to move up, and they're here sitting here waiting. And you say, oh, it's going to go down, so I'm going to sell short. Oops, wrong side of the trade. Raise your hands. How many have done that? Big boo-boo. You cannot use dojis like you used to. You have to look at them in the clusters of the groups that they form, because they mean an entirely different thing most of the time. And we have a lot more gaps than we used to have, and those didn't form very often in ancient Japan. However, if you view doji only as either reversal or warning candles, you will miss out on most of the huge swing style runs and profits you could make, or position trading. Or if you're an experienced day trader and making success, you're also missing out on this activity. The interpretation of a doji must incorporate the market participant groups and market condition analysis. So we're going to go through this real quick. Buy-side institutions, also known as dark pools, and there's 50 venues for them, and they're giant institutions. They're worth trillions of dollars. They have $100 trillion in assets under management worldwide, just the giants, not talking about the larger or the mid-size or the small funds. Huge. And they dominate. They are the dominant market participant group, and they control a lot of activity. The sell-side institutions have shrunk. They're no longer as important as they once were. They used to be the dominant market participant group, but the banks are failing because we're changing to a new monetary system, and the stock market is part of that new system. We're becoming a digital economy at an accelerated pace, and you get to enjoy and celebrate this change that is going to make far more profit for all of you. The professional traders on the buy side, the floor traders are growing. They can't get enough floor traders. I'm training professionals to be floor traders so that they can go to these institutions and participate. We also have the professional traders on the sell side. The sell side institutions are all short term. They can't hold stocks for very long. They do the buybacks as the bank of record for corporations. They do all kinds of short-term transactions. The buy side is the long-term investments for 401ks, IRAs, Roth, that type of thing. And they control the vast majority. When you look at an institution like Vanguard, who's worth $3 trillion, they have almost 5,000 stocks under asset management that they're doing. There are 6,600 stocks approximately in the U.S. market right now on the U.S. side. So you can see they control a lot of it. We have wealthy private investors. We have like 750 billionaires in America. So there's a lot of wealth in America, and they have the best money managers money can buy. We also have a large and growing group of professional traders that are independents. And a lot of my students are professional traders that are independent, and they're trading full-time. Sometimes they trade once a week, sometimes they trade every day. It just depends on them individually. And they are making a lot of money, and they impact the market as well. Corporations do buybacks, but they also have the new national private market by the NASDAQ. NASDAQ now has, for the professional side, listed private companies. That is a whole new world where venture capital isn't the only place to control and grow your company if you're a private company. And since all the buy side are buying all these private firms before the IPO, that changes the whole landscape of IPOs and venture capital. That's going on. Corporations are also investing in private firms. So that's going on behind the scenes. So when a stock comes to IPO, it's a whole different ballgame of how that price structure, what that's going to do when it hits the market, it's going to be totally different. Sovereign funds, foreign funds, nonprofit funds. If you combined all of the stock markets, excluding the US would still be the largest in the world, bar none. Huge, gigantic. We have most of the big corporations that are publicly traded that are giant conglomerates. We control the global market. High frequency trading and hedge funds, these provide liquidity for the exchanges because With the dark pools, 80% is gone. It's off the exchanges. Small asset management and smaller funds, small hedge funds, AAII and investment groups, all are small lot, and they're retail. They're considered retail. The SEC announced anybody with less than 3 billion assets under management is retail. So this is all professional side, getting in early, making a lot of money down here, and then they start getting in as it accelerates with speculation and gambling. Small lot investors always get in late. Memes, retail trading chat groups, retail traders and groups, gurus, all get in very late in the run. Odd lot investor, of course, is the last one in, paying the highest premium price. And then, of course, we have a top. Dark pool buy-side institutions help to create the top, because as this is going vertical, they start selling or lowering to rotate their inventory out of certain stocks that are obvious that they're going to go into a bear business cycle. So they're getting out of these before that bear, or reducing the inventory. They always hold some, but they reduce. I saw Apple go from 96% shares held by institutions to down to 60%. Whew. It goes down. So you can really follow that. Wealthy private investors also know about business. Most of them are individuals who created Amazon or Apple. They're greats and they know about business. They can see when a company's starting to go into a long-term bear business cycle. It doesn't have to take a bear market. It just takes the own individual company, and you have to be aware of that. Professional traders, independent traders see the vertical angle of ascent and know one thing for a fact. It takes more and more and more buyers to push a price up. But to have a stock fall just takes no buyers. And that stock will come down so fast, your head will spin. So selling short isn't about forcing price down. It's getting in early and waiting. And they're patient. Because when all the buyers stop and the euphoria and the gambling is gone, price just falls. And they decide when they're going to buy to cover. So they provide the buy to cover for all the people that are panicking and selling. Professional traders buy side and professional traders sell side. Sell side institutions, high frequency traders, all join in to participate in providing the buy to cover for those who are selling in panic. And this is the sovereign funds and mutual funds, small funds, investment groups. All of these get out very late. They got in late and they get out late. So they lose a ton of money. And a lot of times retail traders are waiting and waiting and waiting because they don't know and they can't see the signals. You should always be trading with the professional traders based on what you see in the charts. And of course, the odd lot investor sells and the buy-side institutions start buying to form the bottom. Example of changes of candlesticks. Stock prices gap far more often in today's automated marketplace. Often the gaps is many points. The space on the chart can look huge, just gigantic. I've seen 20 points gap. These are usually the footprints of high-frequency trading companies, also known as HFTs, who are paid to provide liquidity to the exchanges as maker-taker transactions. See that long volume? That is not dark pools. I know there are some people out there who haven't got a clue what they're doing, and they tell you, oh, this huge volume has to be dark pools. And dark pools look like this. This is a shift of sentiment. This is an indicator we developed solely for MetaStock. We have 5 leading indicators that we developed exclusively for MetaStock, and they're only available on MetaStock because MetaStock is a great software company. Dark pools start accumulating. They shift the sentiment. They started buying over in here. They shift the sentiment that starts moving up. And the pro traders are getting in early, waiting, and then it gaps up because they know the HFTs will gap it up. You need to understand what type of gap has occurred. What gap is this? Does anybody know what kind of gap this is? There's 7 different types of gaps. Can you list them off? This is a running gap, okay? So it has a likelihood that it may fail partially. A breakaway gap would be one where the price would be way down here, and then it gapped over all of this price action and moved up even further. That's a breakaway. When you have a breakaway, they seldom fill. This is also a critical skill you must learn. Mistaking a common gap for a breakaway or measuring gap is a typical mistake by many traders. So you can make this mistake. If you don't know what that gap is, you don't know how to trade it next. You may be rushing in, oh, it's going to go up, and it goes down, and you're going, Why did it go down? Because you weren't reading the chart right. Market participant footprints. Your analysis of candlesticks has to go beyond the mere reversal or continuation pattern concept. Your analysis needs to be more than just looking for an engulfing candle or whatever you look for. You need to study more than just the last candle on the chart for reliable stock or options trading. You can't get it out of the last one. Each market participant group leaves a distinct footprint on the charts due to the order type they use, due to the routing that they use, due to the lot size that they use, due to the speed of execution and the intent of the order. How many minutes does it take a $1 million order of a dark pool to fill during the day off the exchanges you can't see? Anybody? Average 10 minutes. It just sits there gathering all these different orders together until it's got enough shares that it wants, and it's done. It could take all day long. And then that order is delayed, so you can't see it at all if you're a day trader. When you can recognize each group's footprint, you will have precise entries and exits, because you say, oh, that's a pro trader. Oh, that's a dark pool quiet accumulation level right in here. You have to learn to read these, and then you will be far better off. There's also a lot of small funds managers, and they make a mess out of a chart. So do retail traders. Market conditions are not market trend. A lot of people mistake that. There are now 6 major market conditions, 2 in the reverse, at total of 8 if you reverse it to the downside, that alter candlestick patterns based upon who controls price. Who creates a trend? The different market participant groups. With all the automation, new order types, and new routing, it is common to have one major group controlling price at any given time for a period of time. This dominant price action continues for a period of time, then another group takes over. The other group may still be in that stock, and probably is, but they're just riding the wave up. Got that? Dark pools buy and create the bottoms, and they hold those stocks long term. And the stock moves up and moves up and moves up and moves up. And then when there's a business bear cycle coming, they sell. They make tons of money that way. Identifying who is controlling price at that moment defines precision candlestick entries for swing trading, position trading, day trading if you're good at it, and momentum trading, velocity trading. There's a lot of different trading types. So these are the primary conditions. Bottoming market condition controlled by dark pools. Platform building market also controlled by dark pools. Moderately uptrending market condition, which is a moderate uptrend that's moderately moving up without speculation. Velocity uptrending market, which is a speculative gambling style uptrend. The trading range market condition is also in there, but may not be attached to any of these. And then the topping market condition. So from the velocity uptrending to the trading range, you have a topping market condition most of the time. Velocity downtrending market condition is the downside action of a velocity sudden topping action. You have flat tops, you have rounding tops, you have sheer cliffs, completely different tops than you used to have, because the candlestick patterns are different, because the different people getting out at different times. Head and shoulders are very rare. Some people squish the chart together and try to make it fit. So, oh, this is a head and shoulders. It's like, no, it isn't. And they just try to make it look like one. Moderately downtrending market condition. And then it starts all over again. Bottoming, platforming. So this cycle is, and each type of market condition is created by a dominant group that dominates that. Velocity is all speculative, all gambling, all new investors, new beginning traders, and new beginning day traders. Oh, let's trade this. All right, we're going to make $1 million in one day. Yay! Then they lose all their money. Okay, what condition is this? Well, first we look at the price. It's $250 at the high of this range. And we look at the low, which is considerably lower, a good 100, just 211 there, 200. So it's around 180 or so right down in here. This is a trading range. Why do we know this? There's many reasons. It's super wide. It is enduring for a longer period of time than a bottom would normally endure. It has inconsistent highs and it has inconsistent lows. When a market is bottoming and you have dark pools quietly accumulating, the bottom gets smooth and round, or it starts cutting shape on. My cat decided to join me. I apologize. Market condition tells you who is in control of price, what technical patterns are most prevalent. Write these down. Which candlestick patterns will be most reliable? Reliability is the most important thing. You can learn 50 different candlestick patterns that are supposed to go continuation or reversal or whatever. But what you really need are the entry signals and the exit signals, not continuation or reversal, because that doesn't work well in our market right now. So which candlestick patterns will be most reliable? How will price behave at resistance and support? What trading styles work best? What indicators should be used to confirm the candlestick patterns? You have to have confirming indicators. A lot of people teach it wrong. And since I've been teaching for so long, I have a right to do this, plus I'm credentialed. You have to choose price as the entry signal because price is a pure, clean data. You got that? Indicators are a formula of price and time, or volume in time, or quantity in time, or price, time, and quantity. Those are the three variables that you have data that you can use in creating a formula to create an indicator. So indicators are indications. They're not entry signals, but you must use them. And we have 5 hybrid leading indicators we developed for MetaStock years ago that work beautifully. Everybody loves them. That confirm the candlesticks. You've got to have volume that's increasing. You have to have large lot activity that's hidden that you can't see unless you look at these certain indicators. You have to have a continuation of pattern going on. You have to have all of these things moving into the stock so that you know it's going to continue to move up. And if you see a reversal pattern like the TTVA, it'll show a spike to the top of the chart that says, okay, this is an exhaustion pattern. This stock is going to reverse soon. Well, you get that signal beforehand. So these are very important indicators to use with the confirming entry candlestick patterns. Which market participants are trading this market at this time? Some market participants, sometimes the dark pools are on pause. They're just holding and waiting. A lot of that happens when we have a big down day. We have a big down day, and they're just going to sit back and say, okay, how low can this go before we start buying again? They are not supporting the market. There are professionals who support the market and keep the market from going into a bear zone, and we had that last year. The support the market theory had been started in 2019. 2018, the idea was conceived. 2019, they said, we need to put this together. Why? Because ETFs can be sold like that. So you have a bear market going, or a correction going, and all of these ETF guys listen to JP Morgan's CEO. And he's saying, oh, the world's coming to an end. You got to get out of stocks. And so they all start selling their ETFs. That can cause a crash. And we don't want that. The buy side never wants that. I'm a buy side. I'm retired, and we never want it to crash. We want to keep people having their 401ks growing. That's all. The whole purpose of the buy side is to protect and ensure that everybody's money that's invested doesn't lose all of its value, and then they have nothing. So you have to be aware that different market participants will do different things. There is such a thing as support the market or support tech stocks, as they did this last week. Trading with small lots, also known retail investors and retail traders, causes whipsaws. Why? Because your normal day trader gets in, he's all excited. He's watched his trainer, and oh, this looks so easy, and I'm going to do this. And it's like, and then they lose, and then they lose, and then they lose. And all of a sudden, their confidence is gone, their self-esteem is gone, their capital is gone. And they say, well, I'll just hold it shorter time, and I'll just hold it shorter. I'll just hold it for a 10-cent gain. I'll just hold it for a 5-cent gain. So this causes all kinds of whipsaws and all kinds of wicks and tails and nightmare. It's a very messy chart. Which market participants are not actively trading or investing in the market? Without the dark pools, pro traders, and sell-side institutions, candlestick patterns will be very inconsistent, very volatile. That's what we had last year. We had a lot of smaller funds trying to actively trade their market. And it was just a big mess because the dark pools were like, well, we're going to wait back here. We'll support the market, but we'll wait. Pro traders go, well, this is too hysterical. I'm not going to day trade. Pro traders don't day trade. They swing trade most of the time. What impact does this have on price action, price follow through, and sustainability of the run up or down? Sustainability of the run up or down is important to you as a trader. You have to know that it's going to hold. So we want to look and see who is in control of price. There was a lot of speculation going on and some pro traders going on in here. And then it started to trend down. We had some big downtrends. And then all of a sudden it stopped going down. It actually pops up after every time it gets into this zone. See how this zone works? And then it moves up again and it pops down into that zone and it pushed right back up. We have dark pools in here and we have it confirmed with these indicators. So they're buying into this zone area right in here. And pro traders can get in. They do a lot of pushes. You see a lot of pushes that go on, little nudges and pushes. And the stock continues to move up while smaller funds are selling on the bounce. But it's not a bounce. It's like buying on the dip. Are you mad? Because if the market is trending down, it's not a buy on the dip. You're buying into a downtrend. If the market is reversing and moving up and uptrending as it is now, and you sell on the bounce, you're not selling on the bounce, you're selling on the uptrend. You got that? These are problems that I hear about every day because I answer a lot of questions, people. I get about 50 questions a day and I try to answer as many as I can to help people and that are not students. My students have discussion groups and community groups within the online campus. We have an online campus that is just absolutely my dream come true. And we put that up during the COVID. And it's so great because they're all interacting, they're sharing ideas. I can go in and assist and give them facts that they need to help them trade. They can watch how the trades are moving. They can watch how what I'm talking about is working and that type of thing. And it's an ongoing educational format. And it's just so lovely. I'm so proud of that. Market participant and precise entries. The first step in finding precision entries is to identify who controls price. And that's what we teach in the courses. Each market participant group has its own unique candlestick patterns. And when you recognize these patterns, they go, oh, well, that's easy. That's like if you're a musician, you can read music. If you're a programmer, you can read code. If you're an engineer, you can read blueprints. This is all something that you can develop. It's just something that you can learn. When the dark pools are dominant and in control of price, the compression and dimension of sideways action changes. Write this down on a sticky notepad and put it on your monitor. Dark pools do not move price. They go out of their way not to move price, and their volume is spread out over a length of time so you can't find it, and they're trading on alternative trading venues. You do not have participation Act 2. They use controlled bracketed orders. That's what we teach. Years ago, my business associate partner created a new bracket order for our trading floor at that time. And when we went to do our first workshop, he said, I want to add this to our course. I think these bracketed orders are just really cool. And I think our students would do really great. And I'm going, okay. So I'm out because I was a swing trader and I managed the trading floor. I came back and here he is on the phone talking, laughing his head off. Ha 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 ha. I'm going, who are you talking to? Herzog. I said, what? He says, oh, the market maker, Herzog. And my eyes go like out of my mind. I'm going, what? You're talking to a market maker? Nobody talks to a market maker. Nobody talks to a market maker. And they were laughing and joking. The market maker loved his order so much that he asked permission to use it. And today it is part of the professional side. The only way to get that order type is to take TechnoTrader courses, and that's why so many professionals come to us. Dark pools control price in a precise, tight range. When they accumulate millions of shares of stock over a lengthy period of time, weeks to months, Their patterns create a buy zone that are easy, the buy zones that are easy to identify on the chart. Once they have all the stock they want, they do like Warren Buffett. They say, oh, by the way, smaller funds, we bought the stock. And so all the smaller funds buy the stock. Guess what? Pro traders know this, so they're already in that stock. Price moves up. Then you hear about it on the retail side because gurus go, oh, the stock is moving up. You should buy the stock. Yeah. This causes pro trader and HFT activity followed by smaller funds buying and retail trader and retail investors buying in later. It's all part of a big plan. It's not intended to rip you off. If you want professionals to respect you, you need to get a complete comprehensive education, and you need to stop gambling and stop speculating and stop taking little tidbits of things and trying to make it work on your own. Do-it-yourselfing doesn't work in the market. Steps to identifying precise entries. Precise entry starts with these steps. First, identify who is controlling price, which group is so dominant they are actually creating the trend that is forming at this time. Sideways trends that are tight compression patterns like this one and this one are dark pool activity. Identifying the footprint. How does price behave while this group is in control? Determine the point of momentum action based on candlestick patterns. Which market participant groups chase which group and how does that price behave thereafter? So if we know all what's going on, it's easy to identify who's in control of price. Who's in control of price? What is this? What is this, guys? What is this? Bottoming market. It's a bottoming, this stock is bottoming. And we have tons of these right now. You think the market's going to crash? You're on the wrong side of the market and you're going to get burned. This is a U bottom, short term, because they started accumulating faster. We have the shift of sentiment verifying that. They started accumulating right in here and they continued to accumulate. Pro traders have started getting in. Smaller funds sold short, but the pros were already out. That's why it collapsed so fast. And then the pros got back in after the smaller funds dumped because a lot of smaller funds are losing money like crazy and going out of business. And so we have some more buying going on, another entry signal, and then it gaps up. You can get in early and just sit and wait. If you're with the pro traders, if you can see the pro traders footprints, and then you're in on these huge gaps. That's about a 10, 15 point gap. Pretty nice, huh? Bottoming markets do gap. They gap over their resistance level or they gap to the resistance level that completes the bottom. Who's in control of price here? We're going to go over here and look. We're going to see a lot of hysteria. Long wicks, long tails, up, down, up, down, up, down, up, down, up, down, up, down. Choky. You can't trade this. This is the trading range. And who's in control of price? Retail side. And then we have these couple of little dojis and the HFTs go, oh, news. Lots of people want to sell this stock, so we're going to gap it down. And then as we buy to cover, we'll make our profit. And then more smaller funds dump. And then the dark pools kind of sneak in. Okay, we got the start of a dark pool because it's below its fundamental values right now. Spatial pattern recognition skills. Professional traders have spatial pattern recognition skills. They are the best of the best in technical analysis of trends, candlesticks, and indicators. They're just astounding. Every time I go to a trading floor, I'm just so impressed with the quality of the professional. They can see a setup and react quickly, routing a specific order type to the appropriate menu. They are masters at candlestick analysis and the pride of hitting their penny, the order that on the penny they want. Yeah, it's amazing to see them work. SPRS is a mandatory skill set you need in order to trade stocks or options in today's automated market. SPRS helps you identify who controls price and determining how price will behave or move in the next moment. Once you identify who controls price, you need to determine the near-term price action. This is imperative for intraday traders, day traders, swing traders, momentum traders, and velocity traders. When you understand who controls price and how that affects price shortly thereafter, you are able to anticipate, not predict, your short-term direction of the stock will move. This allows you to enter the stock earlier for much higher profits and lower risks. This is part of spatial pattern recognition skills. You have these skills. You drive the car in traffic and you can see the sky is moving over. You're not predicting he's going to move over. You can sense by the way he's driving. So you're at a four-way stop and there's hills on either side. And by the speed at which that vehicle is coming into the four-way stop, you can tell if that guy's going to stop or not. This is not predicting. This is anticipating. You have this natural skill. So we have a stock that has been moving up and down. Is it going to move up or down? We had a little down here. Is it going to continue to going down? Indicators? No, it gaps up. When you can recognize the patterns, this was a springboard pattern right here. And even though there was some selling here, it held within that price range. So that was their buy zone right there. And then it gaps up. This is a breakaway gap and it's going to continue and starting another consolidation. Let's summarize. To have precision entries or exits, you must know who controls price at that time. If the dark pools are building a platform, then they are controlling price in a set narrow range. Pro traders follow the dark pool activity as they see the liquidity draw over time. It's a slow process. HFT action triggers smaller funds managers who still use VWAP order types, which generate them, gets them in after the stock has gapped or run. So if they get on the wrong side of the trade, let's say they want to buy the stock and it moved down, so the VWAP triggered with a lot of volume, then the stock is running down super fast and the funds managers are losing a ton of money. Retail traders often follow HFTs as well, buying in after the run has begun. You can't get, if a stock is running, you don't buy it. You wait for the next one. There are 6,700 stocks and a ton, 3,000 ETFs to trade. Move on. Don't trade a stock that's in a run already. New investors and beginning traders hear about a stock on the news and buy late in the run because they're not using technical analysis. The stock is already in profit-taking mode as pro traders sell into the news. Pro traders sell into retail news. Keep that in mind. Candlestick patterns define who's in control of price at that time and how that group changes and alters those candlestick patterns. When you learn to read a candlestick chart as easily as you read a book or an article or on the internet or whatever you do, music, coding, then you will be able to enter stocks using precision entry signal candles that get you into the stock before it begins its run. During trading range market conditions, topping markets, and velocity conditions, this makes the difference between a huge profit and a whipsaw to meager profit, which is really a loss, because none of you are calculating how much you are worth an hour. How much are you worth an hour? Every hour you're at your desk trading stocks is costing you money. When you know who is controlling price, you also know the direction price will move in the near term. And that's all you need to do. When you're driving a car, you don't need to know what's going to happen tomorrow. You need to know what's happening on the route ahead of you. This alone will increase your profitability substantially for stock trading and if you use options, spreads, straddles, and other non-directional option strategies. You will find that you probably don't need those more complex, more expensive means of options trading. Professional independent traders make high incomes trading stocks a few hours a day. You can also do as well as the professionals, but you must learn the skills and use the tools that pros use. So let's test your skills real quick. So what do we have started here? We have a bottoming market started. So now it's moving kind of hysterically. So what's going on? We have some retail smaller funds getting in, trading, trying to trade it for pennies and moving it up and down. So is it going to continue up or is it going to crash and burn and go lower? What do you think? It stabilizes. Okay, we have a stability factor here. Notice how these candles are very different than these candles. And notice how many dojis. Now it trends on down. Okay, they let it go down a little way. So is it going to go up from here or go all the way down here again? You're in this kind of market. This is a chart I just picked out the other day. You're in this market. This is what you're going to see. So it's going to go up or down. It stabilizes. It started stabilizing here. It went down a little further and it stabilized. Stabilizing comes from a buy zone. Pro traders in the mix. So going to go up. Yeah, of course. Stabilizes again, another higher level of buy zone. And it gaps after that. So you could get in here or you here. There's a lot of places you could get in. You just sit and wait. If you don't want to get it and wait that long, you could get in earlier in here or here and then enjoy that beautiful gap. That's what you should be enjoying. And it should be so much fun because trading is a blast. Final summary, candlestick patterns are just one part of technical analysis you need to learn to earn the kind of profits professionals take for granted. You also need to learn how to use confirming hybrid leading indicators because the old style indicators don't do much good. There's a lot of price and time indicators that were written in the 40s, the 50s, the 60s, the 70s. They don't work so well anymore because those were entirely different market conditions. The indicators will tell you whether the stock has sufficient hidden momentum that it will move strongly once you are in the trade. Quiet accumulation, hidden accumulation creates a liquidity draw that provides momentum, just like a rocket accelerating off the planet. You also need to learn how to use technical patterns such as support and resistance with the market condition analysis to determine your risk of the trade and your profit potential. If we're in a trading range market condition, you're going to have to trade differently. If we're in a moderately trending market condition, it's easy. If we're in a bottoming market condition, you just have to watch for all those people who are trying to sell into a bottom. There's different things that you have to pay attention to. All of these parts of technical analysis are crucial to your success. Precision candlestick patterns require that you develop your spatial pattern recognition skills. Computers can't do this for you. There are too many variables in price and indicators. It's just too complicated. The human brain is magnificent. And once you learn a pattern, and as it alters and it's subtly changing, you get it. A computer, any deviation from the set range of programming that it's been given, it can't interpret it. So don't go after those AI and quant and all that stuff because you're just going to waste your money. SEC has big articles about it. If you don't believe me, just go there and read them. It's pretty ghastly. You have everything you need in the MetaStock charting program. It's a magnificent program. So use it. And the hybrid leading indicators are very important to use. We have them again, therefore just MetaStock, and they show the shift of sentiment is one. It's a large lot versus small lot indicator. It is just for MetaStock, and it shows, okay, yes, this is the bottom. Yes, I can get in early and ride this up. If you're a position trader, you could ride this whole thing up over several weeks. Position trading is a hold for a few weeks to several months, or an intermediate term hold if you're someone who can't trade every day or only trade once a month or once a week. There's a trading style for you. And these are trading styles, they're not strategies. Swing trading is a trading style. There are numerous strategies you apply to swing trading. This webinar is just a snippet of the Training TechnoTrader courses teach. Our education is unlike any other. We have things that nobody else has. We are credentialed professionals, which if you do your homework, you will find is very rare in the stock trading educational business. And we haven't been in business for 25 years. What you already know is a beginning. It's a start. It's kind of like kindergarten. No offense. Are you ready to take the stress and frustration out of your trading while increasing your profitability? Precision entry and exit candlestick patterns are far superior to anything you have ever learned. And so we build upon the foundation of what you have. Take your trading to the next level and learn to love it as much as all the professional traders I know love their trading. You can visit technotrader.com. These are free mini courses, and they're set up just like our courses are, so you can kind of experience it. You just require the registration, and then you can watch it. You can go through all of them or any of them that you want to. They're free on our website. The webinar special for this MetaStock is this link. Jeff, can you provide this to the people?
Yeah, let me start typing.
Okay.
Get it in there.
Yeah. You can apply the coupon code at checkout at MetaStock-Feb 2023. Free access is for 1 week. All of you can have it. It isn't just a one bonus thing. Anybody who sees this webinar and wants to do it can start it, and we will give you this free course, which is really very popular. Everybody loves it, and it gives you a lot of how to get in before the huge gaps that the high frequency traders do. So I am done. I have about a minute to answer any questions.
Let's tackle some. The first thing I want to say, and I completely agree with her, Sandra says, great presentation.
Oh, thank you. I just love teaching. It's just a passion of mine that I'm so glad my business partner talked me into it, because when I first had it, it was like, I don't want to do that, because I retired in my late 30s. So yeah.
Great job today. I have to say that over the years, your presentations have gotten just better and better and better. We love watching you.
Thank you.
Michael and Brian kind of say the same thing in here. They say, sounds like dark pools need to be exposed and or frequently reporting. Do regulatory? Go ahead.
No,
sorry.
No. The SEC, they have been intact since 2002. When we shifted from decimals, from fractions to decimals, the dark pools also went to the SEC, and they said, we will be front-running. We've been front-run for years. And what they do is they protect the wealth of the middle class of America. The dark pools are areas, there is no benefit to them because they are going in a very narrow price range. All the ranges are very narrow. That's why you can't see it. And what they're doing is they're accumulating or rotating to benefit their mutual fund or their index fund or that 401k index fund that most of you will hold. If you're foreigners, there may be something different. I know a lot of other nations invest their type of retirement into the U.S. market. By providing a place where they're not front run, they get a better price for the stock. And that means that everybody who has an index, a mutual fund, 401k, an IRA, a foreign retirement account benefits because they make more return on investment with it. The SEC has monitored them for over 20 years now. They are a part of the market. They do not exploit anything. They're not manipulating the market like the sell-side institutions. And they're here to stay, just like HFTs create the maker-taker liquidity that the exchanges needed. If we didn't have HFTs, there would be no public stock exchange. They'd be out of business. They need that liquidity. So you just have to remember that the dark pools create the bottoms, they create platforms, and as they rotate out, they can bend the trend a little bit. They try very hard never to disturb price. If they're not disturbing price, then they're doing no harm to you whatsoever. But what you can do is you can take advantage of them, because when you see the dark pool buy zone, you can say, okay, this is going to build momentum, and I can take an opportunity like the pro traders do to push price up. So no, they're here to stay, and they don't need to be regulated. I know that there are some people in the legislature that thinks that they should do that, but it's not going to happen, because they are taking care of $100 trillion of assets under management that belongs to all of you. And when they're taking care of you, okay, what else?
Let's sneak one last one in. Here's a fun one. Raj wants to know which candlestick pattern has high probability.
Well, I would say the best one right now is a springboard pattern.
Cool. MM says, awesome presenter. Jill says, I learn so much every time I hear Martha. Thank you for having her. And thank you, Martha.
All right, bye.
All right. Thank you, Martha. Appreciate it. Bye.
All right.
All right, let's go ahead. Martha does a great job. We really appreciate her coming in, as always. I'm going to go ahead and kind of, let's go ahead and do this. I'm going to go ahead and make myself the presenter. I'll go ahead and show the screen. I was just looking at the Dow. Or actually, no, this is, I think, the Russell. Let's go ahead and kind of just, for this particular session, let's see where we're at. Okay, cool. Do want to say thank you real quick to our sponsor, one of our sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been supporting the events that we've been doing since 1982. We love having them. 1.3 million subscribers. If you do our special extended trial for MetaStock, we'll give you 5 months for free. Or actually, we don't do that. Stocks and Commodities does that. They actually give it to you as part of it. So thank you again, Stocks and Commodities, and of course CMT for sponsoring the event. Thank you, Martha. Another great speaker. We really, really appreciate that. Kelly, let's do a prize. Are you ready? Okay. It took you a second to find the mute button again, or this time, right? Towards the end of the day, it's easy to get mute button challenged. Let's actually, I think what we're going to do for this particular prize is we're going to give away this Around the Horn book right here. This one, $95 book written by Adrian Mance, called Around the Horn. Talks about baseball patterns and trading. It is going to be provided to the next lucky winner. Kelly, why don't you give me a number anywhere between A and 11,905, or I mean 1 and 11,905. Yeah, okay, that's a lucky number somewhere. That's I'm sure this is a correct name, Michelle Trader. So if you filled out your totally good. If you filled out your name as Michelle Trader when you came in, and you have a Yahoo address, there's a good chance that you are the proud new owner of this book right here. So I'll go ahead and make a note of that, Mrs. Trader, and we'll reach out to you to get a good address. So thank you. Bob says, I'm going to watch her videos. Yeah, she does a really, really good job. So one of the things that we're talking about is how good our software is. It's been winning 30 years in a row. If you buy a month, we're going to give you the second and third month for free. You can get that and any of the add-ons that we've talked about at metastock.com/conf promo. You can call us. We'll be happy to talk to you, 800-882-3040, or you can visit us online at metastock.com/sales chat. Our next presenter is AJ Brown. AJ this is the first time we've had AJ speak at a MetaStock event, and I'm very, very excited to talk about, listen to him anyway, not talk about him, but listen to him. He does a lot of options trainer. I've known AJ for a long time, and I'm very happy to introduce him. AJ, how are you doing today?
I'm doing super awesome. I'm a little bit congested. You guys are going to hear that in my voice, but I'm going to try my best to give you as high energy as I can.
I have to say, I love this biopic of you, and I don't know why. But
handsome devil, right? Handsome.
Yeah, that's one of the better ones I've seen. Anyway, I'm going to change. I just changed the presenter over to you, so it should be asking if you want to share your screen.
Yep, I'm up. It should come up any moment now.
I got it. All right. So I can hear you, I can see you, and I'm going to get out of the way.
All right, perfect. And by the way, Martha is a fantastic educator as well as a fantastic presenter, and everything she said, I only caught the last 20 minutes of her presentation, but I agree everything she said. And you know what I'm going to be talking about is using options. I do a lot of premium selling. I got to say that that is kind of my soup du jour, and I use a lot of Martha's techniques that she was explaining in her summary in order to time some of my premium selling. So I'm going to get right into it because I've got a heck ton of material to prepare to share, and I want to make sure you get it all. So I am going to ask that you have some paper and a pencil or a pen. If you're feeling confident, use a pen, because I usually, people tell me that they get about 5 or 6 pages worth of notes from my little presentation. Little bit. Yes.
Okay, you're back. You're back. Your video, your audio got muted for a second, and both me and Kelly went but
oh
back.
Yeah, I'm back. Oh gosh. All right. So let's get right into it. So I want to just make sure you guys know, like I said, that we've got a lot of material. I'm going to go kind of fast. I need you to have paper, pen, pencil, pen if you're feeling confident, because usually people tell me they get about 5 to 6 pages worth of notes out of my usually 45, 50-minute presentation. So here's some facts. And you guys, there's a lot of uncertainty with what's happening in the world right now. And of course, what's happening in the markets, if played right, can set you up for months, if not years to come, right? Because as much as you hear from the talking heads on the news, they'll tell you that, you know, this many trillion was evaporated from the markets today, or this much. The truth is money's not created or destroyed. It moves from one person's hands to another. That's the basic definition of the markets that we're in. And so the key is making sure you're on the correct side of that transaction. And when I'm talking about selling options premium, that's kind of the more reliable way to be on the correct side of that equation, and also create kind of a lifestyle for yourself where you're not having to be glued to the computer. Like Martha said earlier, you know, how much is your hourly worth, right? How much are you worth per hour? So let me ask you this. What would be ideal for you? Would you like to learn how to invest for low risk and high return? In other words, be somebody who learns how to fish for themselves? Or are you somebody who wants to learn how to invest and have seasoned investors review your investments before you make them? Basically learn how to fish, but have expert fishermen there. Or are you looking to follow what seasoned investors do in their own portfolio? In other words, you like to fish, but you want to be doing it alongside expert fishermen. Or is there something else? I just want to get an idea. So if you could just type that in really quick, A, B, C, or D. What are your thoughts? Because I want to make sure I tune my presentation today to exactly what you're looking to hear. Okay, as those answers are coming in, I'm going to keep going here. So I always do this. Please humor me. I know you've seen this a bazillion times. But my question is what would you rather have? Would you rather have $50,000 given to you today, or would you rather have that penny that doubles every day for a month, right? Now, you got the $50,000. Realize that if you're going to be doubling that money, that penny every month, you're going to have to put in some effort. The $50,000 I'd give you straightforward. So day one, let's go through what the penny would be. All right. Day 2, 3, 4, 5, 6, and 7. At the end of the first week of the month, about maybe 25% of the way through the month, you've got 64 cents to your name. Remember, you've had to put in that effort every day in order to get that penny to double. So at the end of day 7, you're like, did I pick the wrong path here? Let's keep going. What about day 8, day 9, day 10? We're up to $5.12. Oof, we're a third through the month, still haven't gotten anywhere near that $50,000. All right, let's keep going here. How about 2 weeks, about halfway through the month, halfway, maybe day 15, we're at $163, still nowhere near that 50,000. Realize that if you are taking score, man, you're halfway through the month, nowhere near the $50,000. You've had to put a lot of effort in. Are you somebody who can stick to a plan, or are you going to get distracted? Let's keep going, though. So we're 3 weeks in. We're up at $10,485.76. The month is almost over, folks. And we've had to kind of endure these, well, questioning gains. But now look what happens. Around day 24, we finally have over our $50,000 in what I call like the back nine. The last few days of the month, if we let it run, we actually walk away with 21 million, almost $21.5 million. Now, that's a demonstration of compound interest. I'm not sure if Albert Einstein actually said that. It's attributed to him, but boy, it's kind of a powerful quote. Compound interest, the most powerful force in the universe. Now, I want you to take a look at this little Excel spreadsheet chart here. I'm going to go over it more, but I want to imprint this. This is kind of what we were looking at, in that the longer we can keep our investment working for us, the more it's going to exponentially increase. Does that make sense? The more that we keep our investment working for us, the more that it's going to exponentially increase. And that's what I'm showing here. I'm actually going to show you some trade examples like that as we get moving on. So let me reverse engineer, because we're not going to be doubling a penny every month. But what if we doubled our investment every year? What would we have to earn on our portfolio? I always like to reverse engineer into what my goals would be if I'm an income generator. If I earn 6% on our money every month, and this is simple interest, this isn't compound, this is going to be 6% and then 6% and then, if I focus on my 6% target, growing my portfolio, then I'll get my investment to double every year. That means that if I start with $1,000 portfolio today, that's about $2,012 in 12 months, or about $4,000 in 2 years, about $33,000 in 5 years. And at the end of 10 years, well, I'm a bona fide millionaire starting with just $1,000 portfolio. But even better, and this is how I like to run mine, is if you grow your portfolio to $100,000, right? Then that portfolio, if you focus on that 6% every month, it's going to generate potentially $101,219.65 per year. Now, the median salaried income in the United States is $87,000. Now, I'm not talking about you folks that live on either one of the coasts. That's obviously a lot more, but the median and salaried incomes are what? 60 hours per week is what a salaried worker tends to put in. I mean, they may record 40 hours, but it's more like 55 to 60 hours per week. And I'm talking about, let's get our portfolio generate income. So what are we investing in? That was a nice workup. What are we investing in? We're talking about selling theta decay optimized option premium. Oh my God, that's a mouthful. What are we really talking about? We're talking about using options not as leverage, but instead on the fact that they're decaying assets as time passes by. In other words, we profit on the mechanism that options have, where they lose value as time passes by. Remember, we want to be on the correct side of that equation. So as an option loses value, there's actually somebody who gains value. Let's figure this out. Now, before I go any further, I do like to just make sure you guys are caught up with me. So what minimum returns? What am I focusing on? I'm not focusing on like these trades where I'm making 40, 50, 60, doubling my money that only happened 2 or 3 times a year. What am I focusing on every month in order to have my portfolio double annually? Is it 0.5% A, 1.5% B, 5% C, 6% D, or 10% E? Which score do you get? Which answer do you think? If you have decided that it's D, 6%, you are paying attention, good thing. If not, that's okay. Just put that down in your notes. We're focusing on the 6%. Now, everybody says to me when they meet me, and I've been doing this, by the way, since 2003. That's when we started Trading Trainers. So we're coming up in August on our 20th anniversary of being an education company focusing on options. They say, aren't options risky? That's kind of the knee-jerk reaction. The scoop is, when you're investing in a stock, an equity, or a commodity, or even Forex, or even crypto, right? You make money when the asset goes up. If you know how to do it, you can make money when the asset goes down. But guess what? Options, a derivative, can make money when the asset goes sideways. In fact, they can also make money as time passes by. In fact, options are so flexible, they can make money when there's uncertainty and fear in the market, as well as confidence, right? These instruments are uberly flexible. Like with an equity, a stock, you can pretty much make money only if it goes up or down in price. But with an option, there's, depending on how you select the options, strike price and expiration dates, and how you combine them together, there's over 27 different ways to profit on pretty much every pattern the market can present you. So it's becomes, when you're with options, instead of looking for that perfect pattern, it's more about finding the right tool to apply to the pattern you've identified. So it kind of changes the algorithm. So what is this thing? What is an option? Some of you may have experience, but it's this financial instrument. I already gave the hint that it's called a derivative. They're typically bought and sold to hedge risk, usually against stocks, indexes, and ETFs. But that's not how I'm using them. That's not how we use them here at Trading Trainer in our premium selling program. What we're doing is we're selling that premium in order to generate an income. So let me just ask this question, because I've got 3 slides here about me, because a lot of people like to know about who the heck they're presenting. As Jeff mentioned, this is the first time I'm presenting for the MetaStock crew. Just out of curiosity, how many of you already know who I am? Because I'll bypass some of these slides and get right into more meat. If you do, just write a quick message, say, I know you. And if not, say, hey, I don't know you. Maybe I should know something about you. All right, I'm going to try to abbreviate. I see both sorts of answers come in. I'm going to go as fast as I can about this. Nobody likes talking about themselves, but I've got a whole bunch of assets out on the internet. You can just check this out. tt4.me is our redirect link. So if you go tt4.me, YouTube or podcast or Facebook, we have a YouTube show that's highly popular every Friday morning at 11 a.m. Eastern time, right? We've got a whole bunch of articles. I write white papers all the time. You can contact us. You can phone us. And if you're on any of those social media, please take a moment, subscribe. Hit the notifications bell. Give me a thumbs up. I founded my company, Trading Trainer. People recognize me as the world's most disciplined option trader. At least that's what they've told me. Behind my back, I totally believe that they say I'm the world's laziest option trader. I think it's because I really focus on efficiency. In other words, not only do I want to get the most profit and the least amount of risk from everything I do, I also want to have the least amount of time. This is going to sound funny to some of you, full-time traders. I don't want to spend my whole life in front of the computer. So I like to minimize my efforts down to as little as I can every evening, usually end of day activities, because I like to do things during the day. I was thankful enough in 2005 to leave my last JOB, which is an acronym for just over broke, and I've been supporting myself on my trading ever since since 2005. And so I like to do things during the day. And so the last thing I want to do is replace that job I left in 2005 working for Hewlett Packard with another one, right? I've been doing this since 1997, trading stocks and options. I've been publishing my daily insights for my Trading Trainer participants every night, 5 days a week since 2002. And on a lot of successful option traders' computers, you'll find this ebook that I wrote back in 2005, The 7 Strategies of Successful Option Traders. You also might see on Successful Option Traders home study course, a library, you'll see my home study course. But the key is I'm really just a big learner, right? I do have a degree in mechanical engineering. I have a focus on automatic controls, which is the kind of marrying of electrical and mechanical engineering. I've got a strong background in commercial business and investing, practitioner of accelerated learning methods and techniques. But the big thing is, folks, I lost big when I started back in 1997. Not only did I spend $27,000 on seminars that first year that I went, trying to take control of my own portfolio, but I also gave back $85,000 to the markets in stupid investments, right? And so I just wanted to tell you that when I did that, by the way, that paid I watch that money. It's a good thing I did have like a 6-figure job working for a tech company in Silicon Valley, and I was living quite lean back in my early 30s, because that was like my college education right there. Let me have you guys write this down. This is what I learned back in the late 90s, early 2000s. Number one, stop chasing shiny objects, right? Settle on one type of investing. Learn it well. I've seen people make success of them in Forex. I've seen people make success for them in commodities. I've seen them do it in options. I've seen them selling premium. Seen them selling, doing all these. Just pick one and learn it well. Number two, hire a mentor, somebody who's currently doing what you want to do and knows how to teach it. And that second part is critical, because I've hired a lot of mentors over the year that were very successful at investing and trading, but man, did they not know how to teach or convey the information. Number three, join an investment group. Guess what? Using accountability, using folks in your group to, you'd often do things for them that you wouldn't do for yourself. Plus, you can leverage their ideas. They can leverage yours. And when you have wins, they'll celebrate with you. And when you have losses, they'll keep you from, giving everything up. They'll say, hey, that's what you do. Make sure you leverage from them their trade ideas, and leverage with pride. They're going to do the same for you. Finally, I want you to surround yourself with like-minded investors, because there's a ton of people out there that will convince you that what you're doing doesn't make any sense, that you should just put your money into some bonds. And especially with what the Fed's doing right now, bonds are actually paying a little bit. But man, you could do so much better if you just take control. So surround yourself with like-minded investors. Yeah? This is exactly what I did, which turned around those losses in 1997. And by 2001, I had taken control of my portfolio. And by 2005, like I said, I was able to ditch the full-time job. Now, the scoop is, by the way, you don't want to have to do it my way from 1997 to 2001. That was 4 years of, God, nail biting. So instead, if you follow these 4 things, you'll be able to fast track it. Last but not least, I did start a foundation back in 2003. I take historically underserved inner city kids off the street. I teach them how to invest. You might have heard of my Investing Turtles experiment that I started in 2003. I started with 9 kids in a kind of not so nice suburb of Denver. And those kids have since, one of them is actually a professor at a community college in Colorado. I gave them all $2,000 of my own money at the end of 6 months of working with me, thinking I'd never see any of that money back. I'll have you know that every single one of them paid back that money. We had to learn at a public library, and I don't know if you remember back in 2003, those libraries had DSL connections, and they only limited us to a half an hour per day on the internet. So we really were limited. And the key is if I could work with those kids, I could work with just about anybody. Give me 6 months of your time and a half an hour a day, and we'll make this happen, right? Another interesting thing is that foundation has since grown and multiplied. Last year, we graduated over 100 kids from downtown Southside Chicago. So this is why I do it. This is actually where we invest all of the Trading Trainer profits. So I don't make any money off of selling our education at Trading Trainer. Rather, we put it into this foundation, kind of our own Robin Hood story. All right, back to premium. I hope that was interesting. How do we sell premium? Well, we're going to focus on 4 simple transactions. Get your pencil up. Here we go. We're going to write some covered calls. We're actually going to write some covered puts as well. That's flipping the covered call upside down. A lot of people have heard of covered calls, but they are not as familiar with covered puts. We're also going to include a little bit of leverage. We're going to write covered calls against leaps. I call that supercharging our covered call writing. You academics out there would call this the bull call diagonal debit spread. And we're going to write covered puts against leap. This will be a bear put diagonal debit spread. Now, I want you to pay close attention here. And that is, 3 of these are considered cash transactions. These are transactions that we can do into our retirement accounts. A lot of our program participants are doing this in their retirement accounts, and it's pretty awesome. This one, the covered put, it does require you to have a margin account. But what's really nice about this is that the covered put and the bear put diagonal debit spread, those two are related. And so if you want to get the same effect but use a cash account, you could totally do the bear put diagonal debit spread that we outlined down here, and you'll get the same effect as writing the covered put, even without a margin account. So that's kind of something special about the spreads. So you might be saying to me, AJ, what is option premium? You keep using this word. Okay. So you got your option price, right? When you look up in the options market, what's going on, you're going to have an option price. And when you look at that, realize that there's 2 components in every option price. There's an in the money value. And if it's at the money or out of the money, that's 0. And then there's this premium component, right? So let's go through an example. So I pulled some end of day prices off of Ford. Ford closed yesterday at $12.89. So we can buy some shares of Ford. Then we could sell the premium. We're going to sell the Ford March 17th. That means this option expires on March 17th. Now they have this weird strike price, $13.35. The reason why their strike price isn't a round number is because they gave out a cash dividend just recently, and it reduced all of their option strike prices by 65 cents. That's what that little memo came out. So their strike prices are off a little bit, but this thing is saying $13.35 call. I'm going to make 30 cents by selling this thing back to the market. That's going to create for me a instant dividend. Options are sold in lots of 100, right? And so for every 30-cent option share for the contract, I'm going to get $30 back, right? So that's kind of cool. And this is going to act like a coupon, a wasting asset, right? Because as we get closer to March 17th, this option, I could buy it back for less than I sold it for, or I can just let it expire. So let's go through the scenarios. So what happens if Ford closes above $13.35 on the expiration date of March 17th? I paid $12.89 for some Ford stock. That Ford stock gets called out at $13.35. So I get a 46-cent per share profit. I also get that 30-cent per share profit for selling the call in the first place, which results in a 76-cent per share profit, or a 6% ROI. Remember, I want to get 6% every month. So this is right in line, and this is the most basic of strategies, right? So that's cool. But what if Ford is flat by March 17th? All right. So I pay $12.89 for some Ford stock. I get that 30-cent for selling back that Ford March 17th, $13.35 call. I get to keep that 30 cents because it expires worthless. And I walk away with 2.4% ROI. Get this, though. That's not the best part of it. The best part of it is I still have the Ford stock. I can do it again and again and again, right? Now, some of you are saying, well, what if Ford drops by March 17th? Well, I'm going to stay tuned because I'm going to show you how we use a kind of companion protective option strategy along with this. But even inherent in the basic covered call, because I make that 30-cent profit buffer, it reduces my break-even price to $12.59, meaning Ford is going to have to drop all the way down to $12.59 or lower for me to even dip into the red. We call that a profit buffer. Now, you might be saying, hey, wait a second. That's a theoretical thing with Ford's end-of-day prices as of yesterday. Can you do that in real life? So here's a trade log of a trade that my group and I did. On January 31st, we bought some Goodyear tire. We paid $11.17 per share. I bought 900 shares myself, about $10,000 investment. Check this out. I then, a few days later on February 3rd, I sold the 1150 call, the one that was going to expire last Friday. I made 53 cents back per share. That thing expired on February 17th, and I got called out. Now, I know that says AAL. I had updated this quickly. It should say Goodyear Tire. My shares were called out at that $11.50 strike price, $11.50 strike price. I made 84 cents per share, basically, when all was said and done. That resulted in a very quick trade. I only did 2 transactions, 4 days apart. And then by February 17th, I wound up walking away with 7.5% ROI or 84 cents per share. I made $755 very quickly. Does that make sense? So I want you to now think about this question, just to make sure you're in line with what I said. What does investing by selling premium create? Does it create an instant dividend? Does it create a discount on an underlying symbol, a profit buffer, or an expiring coupon? Answer all of them that apply. So if you're following along, you know that all 4 of those answers were correct. Okay, so let's build on that. Now I'm going to ask you a quiz question. This should perk you up a little bit, because now I'm going to kind of foreshadow what I'm going to present to you. How can we lower our investment, increase our returns, and even convert a margin trade into a cash trade? What should we do? Should we sell out in time options? Should we replace the security that we're trading with an option trading at parity? Should we give up on all of this and buy mutual funds? Or is what I'm talking about not even possible? What do you think the answer is? Anybody? We're going to replace the security with options trading at parity. So what does that mean? What the heck are options trading at parity? Well, option premium is the most when the option is at the money. That's why when we sell our options, we're going to be selling options that are at the money. But when we want to replace our stock, what we can do is go deep enough in the money. That means that our option is going to lose its premium, and it's only going to be almost completely in the money or intrinsic value. And we target less than 5%. That basically means that the deep in the money option is going to behave exactly like the underlying stock, index, or ETF, dollar for dollar, but it's going to be at a cheaper price. We're going to involve a tiny bit of leverage in here. Now you might say, okay, I'll just go deep in the money, but how far out in time? Options have an expiration date. Well, this has to do with some statistics, because I've been watching our program participants. Most of our trades, our income trades, are lasting 5 months. If you look at the bell curve of our program participants, where the ones where I look over their shoulder, their trades last on average 5 to 6 months. Now, some of them last 2 or 3 months, and many of them last 8 months. But the bell curve is at 5 months. By the time 8 months goes by, it falls off dramatically. So imagine putting your money into an investment for somewhere between 3-4 months and 8 months, right? we want to make sure that we buy that back month option so far out in time that it's not going to interfere with that up to 8 months. So I say go at least 8 months out in time when you buy a substitute option. And we typically use leaps. Those are the ones that expire every January. So there's usually a leap out of January 2023, a leap on the January 2024, because they have a lot of extra liquidity. There's more people who are trading those. So, okay, let's run through that same Ford example. First, remember Ford was trading at $12.89 as per the end of day close yesterday, or I should say last Friday. You could substitute that Ford stock with a Ford January 2024. So it's not going to expire until next January, $7.35 call. That substitute is only $5.75. And if you run the numbers on this, this particular substitute has 3.7% premium. The rest of it, the in-the-money value is 96.3%. So in all effect purposes, this call mirrors that Ford stock, but it's cheaper. So instead of buying the stock, I'm going to buy this back month option for $5.75. And then I'm still going to sell the front month near term at the money $13.35 call. I'm going to get that instant dividend. It's going to act like an expiring coupon. It's going to give me a discount off that $5.75. Let's run through the scenarios. What happens if Ford closes above $13.35? Well, we paid $5.75. We wind up getting the difference between the two options. So $7.35 and $13.35, that's $6. So we wind up getting that $6 back. That's the expiration of a spread. So that's a 25-cent profit. Plus we get the 30-cent profit from selling that call in the first place for a 55-cent total profit on only a $5.75 per share investment. That's 10.1% ROI. Not bad. But now what if Ford is flat? We pay $5.75. We get to get back our 30-cent discount. We keep that 30 cents and we do it again and again. We made 5.5% ROI, and we're just going to keep doing it again and again and again. In fact, that's the ideal case. We look for, when everybody else is looking for stocks that are going up and down, we're looking for stocks that are boring, sideways. If they have a dividend, that's even better. We like things like Ford, American Airlines. I'll show you a trade that we're setting up on for Host Hotels and a REIT. That is one that we're setting up right now. You might want to write down that ticker HST. Now, what happens if Ford drops? Well, don't forget, I am going to show you just in about 5 seconds. I'm going to show you how to use a protective option. But in the meantime, built into this diagonal debit spread is a profit buffer. So because we lower the cost basis, the break-even price all the way down to $5.45, this strategy, the underlying symbol and the back month options would have to drop, bringing that back month option all the way to $5.45 for this option to even go into the red. So I want to remind you, if you earn your 6%, that's what we're focusing, your investment will more than double every year. Now, I want to show you an actual trade where we did that substitute on Cisco. This is one from January 23, January 23rd. I bought the Cisco January 2024, so a year out. That's more than 8 months. $30 call. I spent $17.81 per share. I did about 6 contracts, so it came out to a little over a $10,000 investment. A few days later, on February 3rd, I sold back the Cisco February 17th $49 call. I made $1.33 back per share. So I made $793.80. Now, guess what happened on February 17th? Make sure I update these dates. On February 17th, first of all, that option expired, so I got to keep the $1.33 that I made, but I also got exercise. So that's great. Check it out. I made the difference between the 30 and the 49 strike price, which was $19. When all was said and done, I walked away from this trade that I did 2 simple transactions on, January 23rd, February 3rd. On February 17th was payday. In fact, every third Friday of the month when options expires is payday. I walked away with a simple 14% ROI. In fact, most of my program participants, although we target 6%, it's not unusual that we walk away every month with double-digit returns. Which means if you're walking away with 10, 11, 12, 14% ROI every month, that means you're doubling your money every 5 to 6 months. But again, we aim for the moon and then maybe we'll hit the stars, right? Now, here's another question. How can we drastically reduce our risk on return? Should we sell half as much option premium? Maybe we should sell out in time options. Maybe we should collar the investment by marrying a protective option, or is what I'm talking about not possible? What do you think? Guess what? We can collar the investment and remove almost all the risk by marrying a protective option. Now, I'm going to show you a real-world example to kind of run this through because I am getting shorter on time. This was an example. This is a trade that I did. Gosh, it went on forever. But I want to explain it over here. So this was Pan American Silver, and you can see here, let me zoom in a little bit for you so you can really see the numbers. You can see here that I bought it for $34.73 per share, about 600 shares. This was a basic covered call. And then a few days later, I sold back the premium for $1.76. On that same day, I bought a protective option. Now, if you look over here, the option that I bought had a $34 strike price. I paid $4.75. Time went by, right? So I did a transaction here. A few days later, I did these 2 transactions, almost one right after each other. And then it expired. On September 18th, it expired. And guess what? I got to keep that $1.76. But as soon as that premium expired, I didn't need the protective option anymore. You only need the protective option when you've got premium sold. As soon as the premium's gone, you could sell back that protective option. And here's one of the unique things to my strategy. We like to sell back our protective options. We like to time the purchase and the selling back where we can actually get back more money than we spent on it. So that's kind of cool, right? Because not only did it protect us for the whole time from September 1st until September 24th, but it also wind up paying us what? It looks like an additional $1.15, if I'm doing the math in my head correctly. An additional $1.15. So now we've created 2 income streams, not just the premium, but we've also created now a stream from rolling out the protection. And then guess what? We do it again. Sell the premium, buy the protection. The premium expires worthless. We sell back the protection. So every month I'm doing 1 day with 2 transactions, and then I let the normal expiration happen. And then I do a transaction a day where I sell back the insurance. And then I just reload and I repeat. So this is per underlying symbol. I'm basically trading twice per month. Does that make sense? But here's another cool thing to look at. This column here keeps track of our break-even price. Look what happened after that first month. After that first month, once I sold back that protective option, notice my break-even price is at $31.86. Notice my protection kicks in at $34, right? It's a $34 put. What does that mean? I want to bring you back to this little chart that I made in Excel, and I want you to notice a couple things. First of all, there's the break-even price, and I want you to notice to the low side crosses the break-even price quite quickly, doesn't it? Here's the average time our premium selling investments last. If we get exercised, it's about 65% ROI. But if the underlying symbol goes against you, you still walk away after 5 months with an ROI. In fact, sometimes, most of the time, we don't even care which direction the underlying symbol goes, whether it goes for us or against us, because truth be told, we get paid either way. 50% ROI, 65% ROI, it doesn't matter. In fact, the longer we can get our position to stay in the investment, the lines between whether the trade goes against us or for us are blurred because we wind up making close to the same amount anyway, because we're not focused on the direction of the underlying symbol. We're focused on just time passing by. And again, notice that very quickly my investment becomes risk-free. Between month 1 and month 2, I no longer have any of my own money on the table. These are just delightful investments. So let's review one last question. What do we have when our break-even price is less than our protective option bailout price? Do we have a risk-free investment? Do we have a losing trade? Too much complexity or a pipe dream? We have what we call a risk-free investment, and that's what we strive for. We strive for that in our trades, usually within the first and second month of collecting income off of them. So let's review the 3 steps. Number 1, you're going to buy or you're going to short an underlying security. That underlying security could be an equity, a stock, an index, an ETF, or you could buy a substitute option that's trading at parity. Step 2, you're going to sell a near-term at-the-money option for its premium value. You're going to collect an instant dividend and basically install that profit buffer. And then you're going to collar this with a married option that's 3 to 6 months out in expiration. That's going to protect your investment. You're going to roll that option out when you don't need it, and you're just going to repeat steps 2 and 3, 2 and 3. Now, timing of a position. This is where MetaStock comes in, by the way. I've been using MetaStock. I used MetaStock a lot about 20 years ago. Jeff was trying to remember how long it has been since we hung out together. Man, it's been almost 23 years since I first met Jeff. I'm getting back into MetaStock. In fact, we're looking, and over the last 3 weeks, we've been seeing how we can create our own expert advisor to kind of tap on Jeff's shoulder. But we can actually use MetaStock to help us decide on these sideways, boring channeling stocks, when to get in, when to get out. But basically, if you're at a bottom, that's when you're going to buy your underlying or your call option trading at parity, and you're going to put a stop loss order in, right? Then you're going to sell a near-term call option at the top of that little channel, buy the 3 to 6 month out put option. That near-term call option expires on the 3rd Friday of the month. Sell back 3 to 6 months out when you've got a bottom. That's when you sell back your protective option, and then you rinse and repeat, rinse and repeat, rinse and repeat. Now, you could also do this from the top. We didn't even talk about the variations of covered puts, but you can short your stock, or you could buy that put option trading at parity. Then at the bottoms, sell the near-term put option, buy that protective call. The near-term put option expires worthless. Sell back the protective call, rinse and repeat, rinse and repeat, rinse and repeat. Just like I was talking, we've been looking here, if you look at our MetaStock screen, we've been looking at this ticker HST, and it's doing that sideways motion. We're getting ready to buy either some HST stock or the back month option once we get our bottom signal here. And then we'll be to the races with selling call premium and buying protective options and rolling those protective put options out. So really quick, I'm going to rush through this because I'm at the end of my time. But if you'd like to never miss a pick, minimize the amount of time you spend away from your loved ones, and even more, have support whenever you need it. It's what it's all about, right? It's all about saving time, creating clarity, and getting results. So I'm going to take a couple moments, tell you about my materials, my training, see if it's a match. It's for people who don't want to have a whole bunch of data subscriptions, want everything they need in one place, don't want to miss opportunities, want to spend more time doing other things. That's a big one. Doesn't want to do this alone and wants step-by-step instructions, right? If this is you, it's someone who wants to get the consistent and reliable results. I'm just going to go past a lot of this because there's video tutorials. We have monthly classes in their replays. We have screeners. We have planning tools. In our programs, we have the weekly live workshops and their replays. These are fantastic, by the way. The weekly live workshops is where we all get together and set up on our trades together and place our premium selling trades. And we have trade reviews. So you send me your trades before you do them or while you're in them, and I will personally, along with my team, we will review your trades and make sure you don't miss anything, right? We don't want you to have any sort of issues, right? And so what's that all worth to you? I also have a double your money back guarantee. So just like my inner city folk, the kids in my foundation, I want you to work with me for 6 months. If you do the program for 6 months and at the 6 months you're not showing a profit in your portfolio, not only am I going to give you the money that you spent on my program back, I'm going to double that. That's my double your money back guarantee. Now, you have to be selling premium the way I teach you. You can't be off doing your own thing. But I'm so confident that anybody can sell premium. I put a double your money back guarantee in place. Also, as a bonus for this MetaStock event, I'm going to give everybody who signs up through the MetaStock link I'm about to give you a strategy session with one of my coaches. That's where they're going to get on the phone with you. These are the people who like to work one-on-one with people. They'll help you figure out where you are right now and where you want to be and what the fastest way to get there will be so that you don't spend your time getting distracted by other stuff. So what's the double your money back guarantee and the bonus strategy session worth? Well, the regular price of this 6-month program is $597. There's no ongoing expense after that. It's not a subscription or anything like that. It's $597. But for this event, we're going to reduce it by $100. It's $497. Here's how you do it. You're going to go to optioninvesting.org/MetaStock. There's a promo code. In fact, I have it up. I brought it up on the browser because we're going to test that they set it up right. So here's the $597 price. We're going to type in 100 capital D, capital I, capital S, capital C. Apply. And sure enough, it drops the price to $497. Phew! Boy, would I look like mud if that didn't work. So you go here and it's $497. If you're having any troubles, by the way, you can call us right now. We've got folks operators on the phone. Yeah. I think I'm going to stop there because I don't want to let the folks go past that. I do have a question I see from William. William's asking, are you saying you never have a loser? It's very rare with our type of planning. It's not whether we have a loser. It's did we make our 6% for the month, really? And did the position, our metrics are not, did we have a loser? Because you're going to make something on selling theta decay, on selling option premium. The question is, are you going to hit your targets, and are you going to be able to keep that trade going? So we measure our program participants on how long their positions last, how many months, and also on, did they hit their targets, their 6% per month target, or were they falling short of that, or were they beating it? So that's that. Jack's asking, why doesn't everyone do that? I think that there's when it comes to selling option premium, I think that there's a idea about complexity. And so I try to break that down to you. But for folks who come into my program, I have you do an onboarding call with one of our coaches. And if you follow exactly what he tells you to do, I guarantee you that within about 10 days, if you follow and go through the materials, within 10 days, you would be on, you'd be on the path to be right there with us, trading with us, right? You'd have all the understanding that you need to have understanding. And then you're saying, well, then in 10 days, why do I need to hang out with you for 6 months? Well, I'd like to be there with you. I'd like you to come to our Thursday workshops and, have me spoon feed trades to you so that you learn while you earn, right? You learn while you're doing. Maybe I can catch some of your mistakes. And I'd like to offer you trade reviews, that benefit I told you, for 6 months, so that before I let you off on your own, you've at least had the opportunity to send me your plans, your trade plans, and we can follow along on your trades for at least 6 months and make sure everything's working. So that's why. But I think there's a complexity thing. People think of options, and the first thing they think about is riskiness. They also think about options, and they think about leverage. Like, this is how I use an option to, benefit on a stock replacement. That's called buying options. Selling premium tends to outsmart folks. But honestly, we just saw recently in an Investors Business Daily article, they featured a mutual fund investor, and that's all he does for the fund is totally sell premium against it. And he's got a fund that produces over 11%. So that's basically what we're teaching you to do, but you'll be the manager of your fund instead of investing in this guy. We have screeners. I've got screeners that I'm constantly tweaking. That's a question from William. And to start, and this will probably be my last question because Jeff's probably saying, get off the phone, you jerk. How much should you have in your account to start? So I've seen people start with an account as small as $800. But the real sweet spot for getting premium selling going, where you don't have limitations to what underlying symbols, is around the $5,000 mark. So if you have a $5,000 account, especially if it's in like a Roth IRA, I mean, that's like ideal for selling premium. And you can do these things, do this premium as your like main income producer in your long-term investments, and then you can go and do more aggressive trading for some fun, if that's what gets you going. And I think that's all I've got time for, folks. Jeff, are you still out there?
Of course. Where would I go?
I don't know.
Andrew had the same question about how much capital you should start with. So it was that was the one question we had from YouTube that I was going to ask you. AJ, great job. Welcome. Thanks for presenting here.
Yeah, just know that I'm going to be tapping on your shoulder about these formulas I'm putting into MetaStock so that people can see my signals.
Oh, for sure. Happy to help. We're
awesome.
Absolutely.
I'll tell you, MetaStock 18 has totally changed. I use the last version I used was MetaStock 7. So it's like the difference between night and day. And I just want to compliment you on and compliment you and the company on such an amazing product. All right, I'll shut up.
Oh, you can keep complimenting. I'll give you 5 more minutes. No, I'm just kidding. Thanks, AJ. That was great. I love 18 as well. Good presentation. The information for that offer is right there in the chat. It's optioninvesting.org/MetaStock. The coupon code's 100DISC. Thank you, AJ. Appreciate it. All right. Let's go ahead and we'll we'll talk about actually CMT Association as the sponsor for this time. CMT Association, I want to say thank you to them for sponsoring the events that we do and have been doing. They've been a sponsor for a couple of years. If you are looking to actively manage money, or alternatively, if you do have assets under management, a CMT Association, or if you just want 3 really cool letters, CMT, to put after your name, a CMT designation, is actually a pretty good idea. It can help you get land a job. It can help you increase assets under management. And actually, Tyler is going to come and talk about that in just a couple of days. I think he's speaking Thursday afternoon. I do want to say thank you to CMT. It's a very well-respected organization. They've been sponsoring our events for about a year or 2 now. They're great partners. We love to work with them. And if you do want those 3 CMT letters at the end of your name, go to cmtassociation.org. So thank you for them. Of course, for MetaStock, if you want to, well, let's do a prize, Kelly. And then we're going to get Alla on here. So Kelly, do you have a second? Oh, darn it. I was refreshing. We'll have to do the prize after, Alla. I just realized I didn't pull the list, and it takes a few minutes. So I promise after Alla talks, we will do a prize, a drawing, if you would. For now, though, if you do want to get an extended trial for MetaStock, go to metastock.com/conf-promo or give us a call if you have any questions at all. 800-882-3040. Our next presenter is also here for her first time at a MetaStock event. Her name is Alla Peter-Plockers. She's going to talk about a topic that is going to be brand new and unique, Fibonacci, and her alpha Fibonacci trading. Alla, I want to say welcome.
Thank you, Jeff. Thank you so much. I'm trying to hit the screen share.
Let me do this. I just
I think you need to allow me. Correct. Perfect.
Yeah. And it should pop up.
Here we go. Yeah. You see my screen now?
I do now. Not until just then. But now Perfect. It did come through. I can see you. I hear you. You sound great. Go for it. It's your turn.
Okay. Amazing. Thank you so much for having me.
Of course.
Let's start. One moment. Good morning, traders. This is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, we'll be teaching you how to build a consistent wealth with institutional Alpha Fibonacci system, which is what I've done for the last 12 years, coaching traders in US and globally, how to build consistent wealth. But first, please remember, every single thing you will see in this webinar is to empower you, educate you. Nothing constitutes a financial advice. All the software, all the systems shown here do not give you any guarantees, all shown as is to, again, educate you and empower you. All testimonials from students I believe to be true. No one had ever been paid for their testimonials. And I certainly hope you understand that trading futures, stocks, forex, and options involves substantial risk. In this webinar, we will cover about institutional predictive Alpha Fibonacci system, what separates the system from all the other software and indicators, how Alpha Fibonacci identifies institutional entries, trends, and exits in all markets, including today's crash. We will review futures, stocks, crypto, and forex in current and prior markets, and you will see how Alpha Fibonacci traders trade in US and globally since 2011. And most importantly, we will address how you can build a consistent wealth trading institutional Alpha Fibonacci system. And at the end of the webinar, you will see a very special offer for all the attendees. So briefly about myself, I arrived to the United States in 1989 as political refugee from Ukraine. So yes, the current events impacting my friends highly, my incredible students, and I helping refugees, helping many in Ukraine to escape, to survive the war. As you probably know, in the next few days, there will be 1-year event. So I'm absolutely the luckiest girl on the planet to become an American. I think America is a land of milk and honey. If you're making an effort, the sky's as a limit. 2008, I witnessed that Fibonacci system that I started developing was overriding all the news events and started identifying far in advance crashes and rallies. 2011, I founded Fibonacci Trading Institute, Fibonacci Trading Institute YouTube channel, podcast channel, where you can hear our students sharing their success journeys. Since 2011, I mentored traders from beginner to hedge fund manager, how to trade proprietary alpha Fibonacci system, how to build consistent wealth in online live group and private mentoring classes. I also work globally with hedge funds and institutions, advising them on wealth building. I continue developing proprietary strategies. I developed 32 systems. Fibonacci and empowering others is my passion, is absolutely what I live and breathe, how to do, help others. I travel the world meeting students. I teach live, I teach in online classes. Students invite me to their weddings, to their families. Last year I was in Dubai, in England, in Greece. Students flew in to California just for lunch. So thousands and thousands of pictures, photos, podcasts shows you our global community and how united our students are in building consistent wealth across all instruments, all time frames. So when you start understanding the system, you can trade the system with the power of the charts of MetaStock, as you will see next. But if you're trading on all the other platforms, system absolutely applies, or very popular option, proprietary alpha Fibonacci software for Ninja 8. But again, if day trading is not your cup of tea, MetaStock provides phenomenal charting platform, and you can place your trades with any broker you wish to place. To build a consistent wealth, number one, you need to stop thinking as the bottom 95% does that never makes money in trading. You need to think and trade as a hedge fund trader. Every single morning with market prep, my students look at the markets as a billion-dollar trader. Billion-dollar trader does not trade 1 minute or 2 minute or tick chart or range chart. I know how billion-dollar traders think. I coach JP Morgan traders who trade alpha Fibonacci system and left JP Morgan and started their own hedge fund. I teach you how they think. I teach you how they see the markets. And when you look at the markets as a billion-dollar trader, everything changes instantly. In a single class, you see exactly why the bottom 95% is very different than the top 5 and especially 1%. Hedge fund traders do not place multiple orders each day. Hedge fund traders do not chase cheap indicators. Do not look for a magic bullet for $99 anywhere. Hedge fund traders preset orders far in advance, scale in and scale out of position. So when you trade your own $500 account, you simply trade with them. You do not trade against them. And when hedge fund traders placing orders at key institutional levels, which is exactly what played out in the last few days, the crash you're witnessing now is what we expected since September. Alpha Fibonacci system identified this. It makes a world of difference, not just in your day trading, but across all time frames, all instruments you're placing your trades. To build a consistent wealth, you must trade with institutions. You cannot trade against them. You must enter and exit at key institutional levels. You cannot trade on hype and noise. So when you trade the rule-based predictive institutional alpha Fibonacci system, everything changes completely. So let's review how these traders trade. Here's Ron. Tried for many, many years. And when you listen to Ron's podcast, he's in absolute shock and awe. All of a sudden, after a single class, everything changed. Because Ron simply started riding institutional power, trading S&P. After more than 20 years of trying, Ron started seeing instantly the mistakes he's been making all these years. So when you ride the institutional power, if you trade from key institutional levels, can you trade S&P mini futures? Absolutely. Here's S&P mini crash 2022. Alpha Fibonacci system identified it all in advance. This is Alpha Fibonacci retracement tool that you can install on MetaStock. And when you apply this tool with rules, you knew the crash of 2022 far in advance. That's it. That was the worst crash since 2008. And the events of the last few days defining markets for many weeks and months to come. Knowing the crucial, critical institutional levels, knowing where market would reverse from far in advance. Number one, you're protecting your long-term positions. Number two, as a day trader, you're riding power to the downside. Knowing where to enter, knowing where to exit. A strategic, intelligent trader. This is S&P mini rally, identified in advance from critical key alpha Fibonacci reversal zone. No speculation, no gambling here. This is ultimate alpha Fibonacci chess on MetaStock charts with Fibonacci retracement tool with proprietary rules and numbers. This is software for NinjaTrader 8. I converted software to minute charts that identifies precise entry, stop, and target. But again, you do not have to day trade. You can trade system on multiple instruments, multiple platforms. And when you understand simplicity of the bold red line that kept playing out, where shorts played out from, of course you can. You do not speculate. You do not chase random point. You trade with rules, knowing where to enter, knowing where to exit your trade. So this is extremely important, student. Dominic is 14 years old. His father, a hedge fund manager in London, managing multi-million-dollar portfolio, retirement, pension funds. And when he saw the power of the system, he said, my son is so bored during lockdown. And when Dominic joined in the course, he showed everyone how simple system is, trading live after a couple of classes. Entirely different instruments, father and son. Listen to their podcast showing you identical rules apply. Price remains price, exactly the same on stocks, on commodities, on metals, on futures, on forex, on crypto. Absolutely. Price remains price. The only difference between holding positions long-term versus day trading is risk management and trade hold time. Alpha Fibonacci system is predictive institutional system, identifies key points for entries, hours, days, weeks, months, and years ahead on all instruments. All depends on time frames traded. And that a very important event that we reviewed on S&P mini future that you just saw right before, that continues playing out today. So when you trade with rules, with precise entry, stop, and target, you do not speculate. Have you learned the lesson on Amazon? First company in the history of humanity to lose $1 trillion? Is Amazon safe haven? Let's review Amazon, shall we? Let's review what played out in 2022. Did you know to short Amazon from 190? Or have you been buying Amazon at that level? Catastrophic crash and collapse identified months in advance. You're not crying yourself to sleep. You exited your long, and if you would like to short, and if you would like to use options, of course you can. Absolutely. You're not speculating. You're not gambling with your money. No matter what chart, no matter how long your position is on Amazon. This is predictive institutional system that identifies entries, exits, seconds, minutes, hours, days in advance. So let's review what Tesla has done in 2022, shall we? Crash on Tesla was catastrophic from 400 level all the way to 115. It did not matter what Elon Musk says or does, or what happens with production of Tesla, or other issues, earnings, absolutely not. This reversal zone is present far in advance, well before the crash. There is no software on this chart. This is simply traders' effort with proprietary rules and proprietary Fibonacci tool. I was teaching it this morning, and when I asked students in class, do you find it difficult? And everyone only said, of course not. It's not complicated, I promise. So how Tesla reversed 2023 from ultimate bottom is also a spectacular reminder. With a system, you know far in advance what not to short into and where to buy from. Tesla skyrocketed from 115 to 190 level. Flawless, breathtaking 2023 reversal. So Richard retired trading the system. He trades only options. Retired oncologist came to me in the middle of 2022 and said, oh my God, what is happening with Tesla? I love Tesla. I said, ouch. Holding long on Tesla in the middle of 2022 was not a brilliant thing to do. So when you listen to Richard Regret, my dearest friend for life, the only thing he has to say, I wish I joined much sooner. That's it. Entirely different trading between Ron, Dominic, Andy, and Richard. Entirely different background, entirely different instrument. System applies to them all. Richard helped me to help refugees to get out from Ukraine, actually newborn babies and pregnant women. So yes, when you trade all charts, all time frames, it's not a problem. You can do it all, including Bitcoin, crypto, euros, you will see next. ETFs, mutual funds, absolutely. If the platform has price and Fibonacci retracement tool, Alpha Fibonacci system applies. Traders in Cape Town, in New Zealand, in Australia, in Dubai, in Saudi Arabia, in Florida, New York, Chicago, France, London, Scotland, trading the system on platforms I've never even heard of. Can you use the charts with MetaStock? Of course. On mutual funds? Absolutely. On Bitcoin? Absolutely. On NASDAQ? Of course. And place trades on any instrument you choose. No software required. Software for Ninja 8 is the only natural predictive software, to trade on all platforms on NinjaTrader 8. That's a critical key. Strategic, intelligent alpha Fibonacci chess. It comes with multi-market scanners and trade recognition software. So this is what the scanner looks like. And with a couple of clicks, you can add the instrument you choose. That's it. And you can change the time frame. And as you learn in the course, congruency is extremely powerful thing. When you receive multiple alerts, it's a very powerful trade. Entering on the second alert is a brilliant move. Indicators are delayed artificial. They look good only after the fact. Indicators will never identify crashes and rallies in advance. Indicators are wishful thinking. Indicators are looking good only after the fact. This is a very important keyword. Artificial and delayed. Again, Fibonacci is predictive and natural. Never, ever, ever confuse the two. So please understand, it's a world of difference. Trading with a natural, predictive, proprietary tool or delayed, artificial, wishful stuff that will never, ever, ever identify crashes and rallies in advance. So when Emmanuel joins the course on bringing his incredible wife, this is the email that says it all. Far above and beyond love, I'm sort of spoiled so much by my students. Very critical keywords here. Everything you taught is 1000%, but only experience shows us why you taught as you did. Oh, this beautiful game of chess. Patience rewarded, wait calmly for a sign. So when mom with two little babies on her hands can trade NASDAQ, anyone can. Completely different background than Dominic, than Andy, than Ron, than Richard. Listen to podcasts to Emmanuel and why he brought his wife to the course. Fathers bringing their children, husbands bringing their wives, friends bringing their friends. That's it. I built my business single-handedly for many, many years because I believe in my system. And I prove it every single day. The trader starts becoming proactive, not reactive, when trader knows in advance. Institutional trends, institutional exits, institutional entries. Staring at the charts for hours, days, weeks, and months, speculating, losing sleep is never ever an option. If you can drive, if you can play chess, you can trade alpha Fibonacci system. So let's review Bitcoin, shall we? And see what it looks like on MetaStock. This is alpha Fibonacci system on Bitcoin. The crash from 70 level. Have you been listening to the news and hype? Have you been buying Bitcoin at that level? When Mayor of Miami announces you can pay your taxes with Bitcoin. Ouch. The only thing I was agreeing with was Jimmy Dimon. Short Bitcoin from 70. Do not touch any longs. But everything changed in 2023 when Bitcoin oversold. And where Bitcoin reversed from is a stunning reminder. With the power of institutional system, you buying the bottom on Bitcoin and you're not trading on hype and noise. You're an intelligent trader who strategizes very, very clearly, because this was the part that truly bothered me nonstop. Listening to podcasts with Michael Saylor, who's been hyping Bitcoin. Michael Saylor can afford to lose $6 billion in a day. If you cannot, use your brilliant, limitless, magnificent brain. And when you look at Tom Brady's Super Bowl hype, you know quite well. Have you seen that? that he lost 70 million on that. That's it. And that's the problem. There was only one ad at the Super Bowl this year. That's it. Hype and noise does not work. And when Tom Brady loses 70 million and being sued, what is this lesson? This is another lesson on using your brilliant, intelligent brain. American hero hyping something that became complete fraud. So what's the lesson on all of this? The lesson not to trade on hype. The lesson not to chase something outside of yourself. You're a limitless human being who can build a consistent wealth, trading it all. When you listen to Ken's podcast, you sing the story of trader who lost it all until he came to Fibonacci Trading Institute during COVID crisis. Ken and I met in London. His daughter gave me the nicest card. He did just fine during and after COVID, and this year he enjoyed buying Bitcoin at the bottom. That's it. Simple and pure. Nothing complicated. No hype, no noise. Simply intelligent, strategic trading. This is a card Ken's daughter had given me. That's it. So an emergency room doctor trading Bitcoin and exited Sol on top before the crash. Again, trading equities, commodities, gold, silver, miners. Nothing is a problem. And if you know who Wim Hof is, as you could see, our global community expanding all over the world with incredible traders who are doctors, professional athletes, stay-at-home moms, children of hedge fund managers, hedge fund financial advisors that managing multi-million-dollar portfolios. Choice is yours. What you want to trade. The events of Apple have been a stunning reminder again and again and again. There is no safe haven in anything unless it's your brilliant brain, it's your magnificent effort, and pure price for entry and alpha Fibonacci for exits. You are not buying Apple at 170, 180 level. You are shorting Apple at this level. You knew it well before the news. You knew it well before the earnings. That's the lesson of 2022. And how Apple skyrocketed at the start of the year, it's because Apple reached the bottom, not the place to short into, the place to buy from. This is strategic, intelligent alpha Fibonacci chess. You will never, ever need anything else. Can you trade Forex? Of course. You never spend endless hours in front of the screen. You're trading only at key institutional levels. So what would your trading be like if you traded with institutional alpha Fibonacci levels and thought and traded as a billion-dollar trader, no matter how small or large your account is? So let's see what Euro has done, skyrocketing from the bottom. And you knew this months in advance. So when one of our students leaves Middle East and buys house in France, because Euro was at the bottom, stunning place to buy and invest. And again, as I show in class, with the power of the system, you knew this, not just days, not just weeks, but months and years ahead. That's it. We reviewed so many different instruments. We addressed the crash, we addressed the rally. It's all the same because pure price is identical on Tesla, on Euro, on Apple, on Amazon. And when Theo stops by in class, 2 o'clock in the morning in Australia, he proves every single time that if you make an effort, the sky's the limit. And you can trade it on MT4, MT5. You can look on MetaStock charts and place trades on any instrument you choose with accuracy of at least 85 to 90% over the long run. That's it. And please pay attention. This is extremely important line. Achieving optimum alpha state for both mind and matter. So in this webinar, I'm giving gift with every package that you will find on our homepage. That Theo was one of the very first to take Alpha Brain Bootcamp. That's available as a gift to new students joining us with any of the 4 packages offered on the homepage. So when you come to our homepage, please review, as you will see with every single word, you will find the answers. It's institutional alpha Fibonacci lifetime system. You learn precise entry, step, and target, all instruments, all platforms, all time frames. You trade on MetaStock, or you trade with software for Ninja 8, or you trade across all platforms of your choice. System traded in US and globally. So when you listen to the podcast and you view students' performance, you will see traders all over the world, just like you, trading the system, building consistent wealth. On options, of course you can. On futures, absolutely. On stocks, on forex, on crypto, absolutely. You will find so many answers. And when you make an effort, can you trade with 86%, making $17.81 for every dollar you invest? Yes, you can. That's it. That's how you build a consistent wealth. So again, when you scroll on the home page lower, this is the 4 packages that offered currently. You can always sign up for the invitation to the trading room, where you can ask me more specific questions tomorrow morning. But this week, I have 2 students graduating private mentoring. Private mentoring is the most desirable option. Savings up to $8,000 again include additional Alpha Brain course, which is a video course you can view 24/7. How to optimize your brain, how to become a brilliant, intelligent Alpha Brain trader. Every package includes lifetime system for all platforms, video library modules, trading room. Package 2 and 4 includes software for Ninja 8. Second is the most popular package. Again, every package will include Alpha Brain course. Second package is a group course. Fourth package is private mentoring. Includes also group course and private mentoring and video library modules and trading room in every package. If you do not need software for Ninja 8, package 1 and 3 is appropriate for you. And when you click on product section, more detail on every tab. Any questions for me? Do not hesitate to contact me. Simply click on contact us section and call or email me. I live and breathe what I do. I'm very honored to be here with you. And if you're serious to trade any instrument you choose, with the power of Alpha Fibonacci system, you can do it all. That's it. You can trade forex, futures, crypto, stocks, ETFs, mutual funds. Absolutely. As traders do this all over the world. You can trade any account, you can trade any size. I do not know, Jack, why not everybody does this? It's a good question. Never have said that we never have a loser. Nobody ever said that. All depends on a trader. It all absolutely per individual trader. Any other questions, please do ask. I will discuss so much more in the trading room tomorrow morning. Thank you so much, traders. Any other questions? How to do select candidates to trade them? Again, all depends on the instrument you trade, Brian. Not sure about your question, William. So yes, you apply Fibonacci tool and you identify entry, stop, and target in advance. You identify where to enter and where to exit the trade. So if you come to the trading room tomorrow morning, I can answer so much more, but that's it. When we are in a trading room, we go over charts with specifics. Yes, we will do that tomorrow in the trading room. Kenneth? Absolutely. I walk you day by day. I walk you step by step. We do this all the time. This is live course, and it has video library as well. It states it all here in front of you. All mastery group classes, trading room modules, video library. Classes and video library. That's it. So thank you, traders. Thank you so much. Thank you, everyone.
All right.
Thank you, Jeffrey,
Alla.
for having me. Thank you so
And
much.
the address for that is fibinstitute.com.
I will place it here. And I think what I would like to do is to actually just give you direct link to contact me. And again, we will have a lot more time in the trading room tomorrow morning. So if you sign up for the trading room and log in tomorrow, I can walk you through day by day, instrument by instrument.
All right. Thank you very much, Alla. Really appreciate that.
Thank you so much, Jeffrey. Thank you. Thank you so much, everyone. Take care. Bye-bye.
Bye. All right. Okay, let's go ahead and do this then. We do have a few minutes. We have Anne-Marie is coming in for at the top of the hour. Let me go ahead and make me the presenter, though. Here, let's do this. Go ahead and show my screen. And since we do have a little bit of extra time, let me go ahead and just show you a couple of things that I meant to show you a little bit earlier and ran out of time. I always have some stuff we can do with a little bit of extra time in MetaStock. And as we were talking about earlier, let me go ahead and get in here. And I'm going to talk about the second of my three favorite tools for MetaStock, or one of the hidden gems. So if you guys have questions about MetaStock, now would be a good time. But a lot of time, let me go ahead and come in here. And what I'm going to do right now is actually show you a template that I put together that takes advantage of some of the automated entry and exit strategies that are in MetaStock, or the automated trend lines. So to kind of put it together, some benchmarks for this, in MetaStock, there's a bunch of indicators that start with DT. And what I'm going to do is I'm just going to show you what they are. DT stands for dynamic trend. So there's ones that are longer term resistance, longer term support, shorter term resistance, shorter term support, and then automated trend lines. And this is one of these lines are actually one of my favorite tools in MetaStock, because a lot of times you're looking for stocks that have broken through support or resistance, and you want to be able to find them. So one of the things that I actually did, I asked our developers to include this template in MetaStock, but it actually will draw those lines for you on the chart. Michael asked a question, what is the typical percentage of men to women traders and investors? I don't know. Actually, I don't have any information. I do know that there's a huge percentage. Well, I don't know. That would just be a guess. I'm not going to even say. Let me show you this, though. I'm going to go ahead and right-click here. I'm going to go to Apply Template. And this is a template that comes in every version of MetaStock. So we're looking at the Russell 2000 Index. The template that I'm applying is a Dynamic Trading Tools template. You're going to go ahead and apply it, and then we'll go ahead and click on No. And it's going to draw on quite a few lines here. So there are a number of them. I'm going to thicken up a few of the lines just because some of them are a little bit hard to see on the when they're broadcast. So everything's going to get just a little bit thicker. I'll go ahead and apply this here. We'll go ahead and click on OK. You go to this one. I'm going to make it just a little bit thicker. We'll go ahead and click on Apply. We'll go ahead and click on OK. And I think you get the idea. There's another one right here that are a set of support levels right here. Okay, and so these are automatically drawn. You'll notice that there's a trend line that's coming up and a trend line that's going down, or a trend line that's going down. So there's a trend line that's being dropped, a triangle formation that was we've just recently have actually broken through here back in January. And since then, we've been kind of trailing a little bit higher. The point of this, though, is what the MetaStock platform and what these algorithms are trying to do is actually automatically identify these breakouts of these trend lines and these breakout, or identify these trend lines for you. So here you've got some resistance up here. Here you've got, and these would be the longer term resistance, the shorter term resistance. This would be a long-term trend line down. This would be a long-term trend line up. Anytime any of those levels are found or placed or found by the algorithm, they're going to automatically be kind of put on the chart for you. And so what I really like about this is because this is automatically drawn, it's also scannable. And I might have mentioned it already today, but scanning is one of my favorite things in MetaStock. So if I wanted to find the right here where the Russell was breaking up above this kind of resistance area, there's a scan I can do for that. Obviously today we had a bit of a sell-off and it came back down under, but if I want to find stocks as they're breaking through these levels, whether it's the trend line right here or through a resistance area or through a support area, I can absolutely run it, and so it's some of my favorite scans. So what I'm going to do now is actually show you how to run those scans. So I'm going to open up the Power Console right here, and actually we left it right here. With the new kind of searching that they have, it's easy to find all the scans because there's so many of them. But if I want to find those DT scans, I just type in DT, and it's going to give me the scans that are available. So the scans I can scan for, if I wanted to find stuff that's breaking through longer term resistance or down through support, I can run this one. Let's go ahead and run it. There's also trend line breakouts, okay? And so I'm going to find the trend line breakouts on the longer term as well, running the scan. Now the list that I've got set up in here is designed to go a little bit quicker for when we have kind of a limited amount of time. And what it is I've come into the index constituents. And if I scroll down here, I'm going to scan all of the Dow Jones Industrial stocks. I'm going to find all of the NASDAQ 100 stocks and all of the S&P 500 stocks. And that should give me some reports. Let me go ahead and start this scan running. Again, with MetaStock, if I wanted to scan all of the ETFs, I could. I just select that as the list that I wanted to run through. If I wanted to do all the optional stocks, that's another list. If you're watching us from India or Australia or London, well, that kind of place, so you want to be able to scan your data, you can run this scan exactly the same way. But the idea here is it's going to go in and it's going to identify the stocks that have recently broken through these support levels and giving us a buy signal. So Michael did a Google search. 62% of men trade, 38% of women. But Alla's percentage is likely 90% men. Well, that's actually pretty good. That's pretty interesting information. Thanks for sharing that. Here, I'll send that to the chat. All right. So now the way that this reads is here you're going to have the close. This scan's already done. Now you're going to have a breakup right here, a breakdown, and this is going to list a number of bars ago. So if I scan this by based on number of bars ago, If it's something that recently happened, you're going to have like 0 or 1 right here. So for example, Eli Lilly, CBOE, Campbell Soup, it's saying Campbell Soup broke up through basically longer term resistance yesterday. So let's take a look at that. Here, because it's actually kind of giving us a bar value, if I wanted to go look at stuff that happened within the last 5 days, that would be all of these stocks right here. I can just kind of go in, open up these stocks that had a breakout. Good, but let's go ahead and look at Campbell. Let me go ahead and click on Open Chart. I'm going to go ahead and look at that. And instead of applying the RMO template, I'm just going to right click on here. I'm going to navigate back to that dynamic trading tools. Okay. And let's go ahead and apply that template to the chart. I will go ahead and click on No. And here you can see, I'm going to actually just make this longer term resistance area that it's finding a lot more visible, because this is where it's having. Right here, it has this longer term resistance area that it's identified on the chart for you. And yesterday, or today, it actually broke up above. So that would be on the current bar. Okay, there you go. It's that easy. Again, if we wanted to find the trendline breakups, the trendline breakdowns, those would kind of happen as well. Now, you might pull up stuff that you don't like for example, this one might be breaking through a resistance here, but I see a bigger resistance I'd be a little bit more concerned about right here. But again, this is a very, very quick way for us to identify just a short list of stocks. And that's the nice thing about scanning is we can go in and say, okay, well, out of these 5 stocks, these are the ones that I like, or maybe I don't like any of them. Maybe I just reject them all wholesale. But this is a good way for us to be able to identify exactly what they're doing. Jack says, will the expert advisor tell me how to use this template, or is it an ebook need? So there is an expert advisor. Thank you for the question, Jack. If we look at the expert advisor, there is an expert advisor. I'm going to attach it here. So I'm going to go ahead and click on it. As you might imagine, there are 2 of them actually, but they start with DT. So since we just broke the longer term support and resistance, I'm going to attach it to the chart. I'm going to go ahead and click on the attach button. And then we'll go ahead and look at the expert commentary, because that's what's going to really break this down here. So right here, it's going to say Campbell Soup Company broke above the upside resistance level of 52.23 1 day ago. This is a bullish sign. The previous resistance level of 52.23 may now provide some downside support. Volume on the day of the breakout was neither extremely heavy nor was it extremely light, providing no convincing evidence. So there is a expert advisor that kind of gives you an idea of what it's looking for, but it is just looking for the breakouts of the support and resistance level and telling you where those happened. So really, really good question. I appreciate that, Jack. So there you go. Let me send that to everybody. And hopefully that was, I think we did that in about 5 or 10 minutes. So it's a very, very cool tool. It's one of the 3 tools. If we have some extra time that comes up in the next session, I'll show you kind of the Haguro method, which will take a little bit longer, but that's a nice quick one. I think it's a good, you know what time I think it is, Kelly? I think it's a good time to give away a prize. So are you ready? All right. All right. Let's see. Let's pick out a prize. Oh, you know what I'm going to do? I think I'm going to give away a really good prize. This is actually one of my favorite prizes that we actually offer. Are you ready? Okay. I'm going to give away a 3-month subscription to a software product called MetaStock. Have you heard of the MetaStock program before? Now, I've heard that MetaStock's actually won 30 years in a row best software in its price category. Just heard that. I've heard it a couple times. Yeah. So we're going to give away the real-time version. I'm also going to give away the product called MetaStock Zenith. And in case you haven't heard of Zenith, I'm going to just talk a little bit about it. Zenith is a premier news platform. They spent $1 billion designing it, implementing it, supported by Reuters News. Reuters is one of the biggest brands when it comes to news and providing institutions with news. Just to kind of give you some numbers, they support data for hundreds of thousands of symbols. We have 300,000 symbols in MetaStock. It all comes from Reuters. They have thousands of reporters in hundreds of different news bureaus. It's really literally a very, very comparative service. The Zenith service is very competitive with Bloomberg, similar in terms of what you're going to get. So if you're interested in news or fundamentals, we're going to get 3 months of that as well. And literally, that's the same thing that you would subscribe to if you're a hedge fund. Does that sound like a cool price so far? All right, but I'm not done yet. Just kidding. So in addition to that, we're going to give 3 months of the learnmetastock.com website. Learn MetaStock is a website that was started by the person that hired me and the person that hired Kelly. And basically, it has 3 live sessions that they do every week that talk about different things you can do in MetaStock. There's hundreds of training videos. It offers tons of formula downloads as well as just tons of stuff. It's a really, really good website. It's normally $100 a month. I'm going to throw in that for 3 months as well. And I'm also going to do one more thing. I'm going to throw in the ATM product, the ATM subscription product by Rahul Mohinder for 3 months. So all in all, that's a total value for all 3 of those stock products. For 3 months, it's a total value of $1,341. So we want to go out on a bang right now. So let me go ahead. Let's pick a number. The number that I need from you is anywhere between 1 and 12,209. Oh, you're going high. 1. I think what you're trying to do, and I'm just guessing, is maybe reward somebody that was watching on YouTube that registered over the course of the event. Okay. Charles E. And then last initial C. Charles E. If you have a Charles C, I should say, it's Charles EC. But if you have a Gmail account, there's a good chance that you just won that really, really good prize. So let me make a note of that real quick, and then we will kind of thank our sponsors and get on with the last presentation today. So congratulations, Charles. That's a great prize. I would encourage you to, if you haven't used MetaStock before, I love MetaStock. I use it every single day to scan and trade, and I would encourage you to give it a go. Go through the training, go through the one-on-one. If you have any questions, let us know. Our support team is so good at helping people get started with MetaStock. They really do a great job with it. So, and if you've used MetaStock for a while, play with this DT support resistance and the scans that go with it. It's pretty cool too. So in any case, there you go. Thanks for the help, Kelly. I do want to say thank you real quick to Stocks and Commodities for sponsoring the events that we've been doing. They've been sponsoring us for 11 years now. It's a great magazine. Every month it gets delivered to me. I take a look at it. There's good articles. I learn something almost every month. So, and that's something to be said when you've been doing this for as long as I've been doing it. So in any case, they're a great sponsor. If you do a subscription to MetaStock today, they're going to give you 5 months of Stocks and Commodities for free. That 5 months is going to include access to their entire trading archive of 17,000 articles. They've been making the magazine since 1982. I love Stocks and Commodities. I really appreciate kind of the support that they've given us over the years. Another person I appreciate, or another group that we appreciate, is the CMT Association. The CMT Association is another sponsor of the events that we're doing, and we really appreciate the work that they do. You can find more out about them at cmtassociation.org. Okay, and then of course MetaStock. If you weren't lucky like Charles and didn't win 3 months of MetaStock, you can get 3 months of MetaStock. All you have to do is pay for the first month. We'll give you the second and the third month for free. We will also honor that if you want to learn MetaStock. It's a great companion site to owning MetaStock, because MetaStock's such a big tool, and the more you can understand how to use that tool, the better it's going to work for you. But again, it's been rated #1 30 years in this price category. Our end-of-day platform starts at $69 a month. So for 3 months, you can pay $23 a month and play with the software that's been rated #1 for 30 years in a row. So to do that, give us a call, metastock.com/conf promo. give us, well, you could go to that website, or you could give us a call at 800-882-3040, or you could also chat online with us at metastock.com/saleschat. So with all that being said, let's time for our next guest. And another person, you know, I would recommend, I love having Anne-Marie, and Anne-Marie has been a guest. We do market recaps with Anne-Marie very, very consistently. She's somebody that every time she comes in and starts talking about the market, I kind of get a pen and a paper ready just so I can write down symbols and take some notes. She's so smart. One of the things that always kind of amazes me is somebody will ask about some stock I've never heard about. And Anne-Marie will go, oh yeah, they just did earnings, and here's why those were good, and here's kind of what the company is doing. You're just like, wow, where does all of this? Anyway, Anne-Marie, how are you doing today? Are you ready to start?
I am. I am
right.
quite ready.
All right, let's go ahead and get the presentation over to you. Let's see. Oh, I almost just missed you on accident. Let's not do that. All right.
Wow, I look really tan.
Oh yeah. I don't. Let me turn up the contrast.
Okay, let's see which monitor I want to set.
That's right there.
Here we go.
You can see the difference between Florida and Utah, right?
Oh my goodness, you guys have got so much snow, right?
Yes, we've got a ton of it, and they're expecting another 12 inches tonight, which means
yes.
If that happens, I'm going to be broadcasting from my basement in the morning. I'm not kidding.
You guys have some kind of Alberta Clipper or something like that?
Yeah, it is.
What it is?
Yeah, there's actually a name for it, but I know what it is.
Yeah, I think it's the Alberta Clipper. But yeah, I'm excited today because I'm going to talk about, risk. Wow, that's a big picture of me. I probably want to move that away. Let me share my screen.
Tonight, we can already see it.
Yeah, okay, great.
Yep. So I'll get out of the way. I'm excited. It's your turn. Go.
Thank you. So for those of you who don't know me, my name is Anne-Marie Baiynd. I've been trading for about 20 years, and I love trading, and I was a really bad trader. And when I first started looking at MetaStock and all the great controls that are sitting within the system, I really found a place that allowed me to create structure. And so even though I had all that structure, I was still making a lot of mistakes. And one of the things that I discovered was that making those mistakes is really a matter of how much. I have to tell you, I have a number of screens, and there's one, a very big screen, and it's just got my face and it's wigging me out. So I'm going to make it smaller, send it to the back. All right. So what we want to talk about first is a little bit of price action studies. So we just saw Jeff go through a really great scan. And what I want to do is sort of delve down a little more on that, because sometimes we look at news to say, hey, this is what I want to trade, or maybe I need to trade this, or we're thinking about trade ideas. And a lot of times it's the idea in itself that sends us in the right direction. And so what I want to talk about is a little bit about my journey understanding price action and how we can help work on the risk event. And so what I'm going to talk to you about are trading anchors. And then because we have a system like this, what we really have to do is learn to anchor ourselves to the strategies that we've purchased or the strategies that just come beautifully on the platform. And there are very many of them. So the first thing would be, what makes something a solid performer? And so in terms of a strategy, you're going to find anchors that are attached to pricing events. And so a lot of the very well-performing strategies are all anchored to price points rather than a derivative like a special kind of moving average or things like that. And that, that's kind of hard to maybe stomach, because we think that technical indicators ought to show us the right way every time, but it's sort of a mechanical flow where we put everything together. And so that's really what we want to talk about here. And so the first thing would be, looking at why we have these types of anchors and what the best ones are. And so we have support and resistance. We have our technical indicators that are a little bit deeper than the support and resistance. And then we have fundamental, right? And that's where we get our Refinitiv platform that we get with MetaStock that I literally have up all day long. It is something that I look at every 15 minutes. I'm looking at something on there because there's so much. So between these three things, we can really anchor what we want to do with our positions. Now we know that. We know, hey, I know it's support and resistance. Hey, I know I got my technical indicators and I want to look at it. And hey, it's a good idea to know about fundamentals, but how do I execute? And see, this is something that really gives traders a tough time. They'll see a buy signal and they'll go, oh, I'm just going to go buy it, without taking a look at what is that execution going to do to your balance in terms of what kind of market exposure you have, as well as what does the market say, because every single strategy you use has an element of, hey, you better pay attention to this, because what this trigger might give you is really not what the traders are thinking. And so not only do you have to look at, hey, my trigger said go, and I'm going to go, you have to sit back and go, well, wait a second. If I go and I'm either too early or my risk is very high, what is that going to do to the outcome of my process? And the key element, so Jeff and I, we've been trading a couple of decades, and the only reason that somebody like me that trades to eat, that can get up every day and keep going, is because I'm always super conscious about what I might lose during the day, right? I want my risk exposure to be well defined. Now some of us choose risk exposure that is a standard amount. Like we say, hey, I'm not going to expose myself to a more than a 5% loss. Well, if you have a trigger that actually shows up because a price action has moved strongly, as in the Campbell Soup study just a minute ago, that's very strong price action. Now, my suspicion is that for Campbell Soup to be doing this well, that seems to be a type of stock that might be, what's that term? Risk off, in terms of saying, hey, I'm going to look for consumables that are part of a process that I'm going to have. So I'm going to buy Campbell's every week or whatever that is. And so Campbell's is lifting very hard. But if you said, hey, I'm just going to go ahead and buy it, you have to think about where your risk exposure is. And sometimes your standard 2% or 3% isn't really going to cut it. And so even though you're following the rules, what happens is you end up getting stopped out. So the question is, how do you blend the two pieces together? And that's what we're going to talk about in terms of risk exposure. So price does three things, only three things. Price goes up, price goes down, or price sits sideways. That's all. What we have to figure out is, within the bigger framework, what is price doing relative to the triggers that we're getting in our formations, right? And so I like to use 2 prior candles. Now, of course, hopefully, I think you might interpret that I use weekly charts to tell me what's going on with price. And so I can look at 2 weeks of motion and go, oh, all right, this is what I'm doing. Okay. So the more we focus on price behavior while we're getting our triggers, the better we're going to see what it looks like. All right. So let's understand risk. I would venture to say that most of us don't know how to calculate expected returns. And so what it really means here, expected returns, going to read it, a measure of probabilities intended to show that a likely investment is going to generate a positive return and what that might be. Now, here's the thing. Calculating that expected return is fairly difficult for many of us. Why? Because most of us don't keep statistics of how good we are at trading. We'll just make a trade, it'll work or it won't work, and we won't go back and say, wait, what's my record? Do I trade terribly on Mondays? Do I overtrade during the middle of the week? What happens to me when I'm engaged in the market? And this is something very, very important. If you don't do it, I think you should start. And the reason you should start is because you'll actually figure out how well your strategy works and how much you have to put at risk during that time. Okay? So again, how do we find that? It's the probability of a win times the size of the win minus the probability of a loss times the size of a loss. And that's over time. So it would be trade after trade after trade. So what do you hope? You hope that your probability of wins and your size of wins is larger than your probability of loss and your size of loss over the long haul. But what actually is your probability of winning? You've got to figure that out. If you want to stay in the game for a long time and you use a strategy that's sitting inside of MetaStock, and you find yourself fumbling around, meaning you get in late, you don't pay enough attention, you get in late, your risk is too high, you get out, the chart moves, and then, you're all the way sitting on the other side of the formation, and, you're in a space where you really don't want to be, right? Which is down and then wishing you had stayed in the trade or gotten in the trade earlier or later. So your homework assignment will be find out what your probability win rate is. Okay, so let's jump right to the charts to figure out what that is. Okay, so now I'm going to share my other screen. Whoops. I think you can see my Refinitiv screen actually. So let's see, where's my MetaStock screen? 1, 2, okay, here we go. All right, can you see my MetaStock screen? Yes, hopefully.
Yes, we can. We can.
All right, awesome. So what I did prior was pick up a number of names that I think are very interesting to look at that are going to tell us what a chart is actually doing. So here we have a weekly formation. This is COM. They produce eggs. And so since, eggs are the big meme joke about what people are buying and selling, you can see here that from a weekly formation, we are in a bullish event, right? There's my green, we got bullish event. Here is our volume, and the volume on the pullback is a little bit lower. So that's always good, right? So is it likely the COM might give back a little bit of its price pressure? Yes. So here's our buy setup. It just came up today, right? And so the buy setup says come into the support zone And then you're going to get yourself a chance. So at the very beginning, I showed you something that said, hey, look at the last 2 candlesticks. And the bottom of that second candlestick going to be your risk event. That's $4. That's almost 10%. So if you're sitting here and you go probability of a win times the size of a win minus the probability of a loss times the size of the loss, you have to think to yourself, all right, this strategy gives us about a 75 to 78% win rate. It's a very strong strategy, but it gets even stronger if you wait until support. So where is that? Where is that support zone? It's going to be here near the lines that say, here are my support and resistance. And so if you're looking for this chart, you can see, hey, that's a buy zone. But what is the slope of this chart? What is the slope of motion? The slope of motion is sideways. And so if I'm looking for a chart to take long, I'm going to go, you know what? I like calm. Well, what I'm going to do is put it in order to see if I can get it at 55. And Marie, that's below the support resistance line, right? Actually, no. Yes, 53 is what I would want, right? My support and resistance line comes in right around that area. And all I have to worry about are these wicks. So the big thing for us really to think about in spaces like this, don't be afraid of missing out, because the market is going to have a lot of things, whoopsie, a lot of things for you to look at, okay? So let's take a peek at something else, right? So we looked at COM, it's sideways, it's a very strong chart. They sell eggs. Chances are they're going to lift off the support zone. It's got a buy setup here on the weekly formation. You go 2 candlesticks back and you say, hey, you know what? I'm just going to set an alert here because I want to enter with the least amount of risk. If you enter with the least amount of risk, you can size up and you have probability in your favor. Not that it'll fly out to 65, which it could, but that it will come back to that 60. And if you pick it up at 53, Bob's your uncle, right? So hopefully that, if you're a foreigner and you're like, Bob's your uncle, what are you talking about? That just means it's easy. Okay, so now let's take a look at something else. This one is creating a base, right? And so you might say it was a great big winner. It's coming back. It used to be way up here. Is it ever going to get way up there again? I'm not really sure. But it really was beaten with an ugly stick, right? And so now we have this basing pattern here that could easily give us a nice region to look at in terms of lifting. So we have this on a weekly. We see that it's been basing since October of last year. So that's fantastic, right? So now let's look at the date. It's above the moving average. Now let's look at a daily chart and see if we can get something that coincides, that gives us something that says, you know what? Every time this thing pulls in, it lifts. And we can see that. Let me expand it so we can have a peek at it in a much prettier way, right? We can see that by and large, this trend is moving up. And today we had a gap down that held this support zone, right? And this is automatically put on there for support and resistance on the chart. And so if you see that, you can go, all right, I gapped down, so I'm a little concerned. Let me see what it's going to look like tomorrow. So what do you want to do? You want to see it. It's got a buy setup here that if you went long, and you didn't get out at these resistance zones, notice over here, if we have trends that move like this, you're going to see, where are we? What doesn't tell me that right there? All right, so what you want to do is these little diamonds, when you have buy setups that come in at the open of a day, and you have diamonds or prior weeks that are bringing you lines in like this is a place that you would want to take profit. It just always is. One thing I want to tell you is this market requires a very tactical and involved approach. Take it as a challenge that's going to make you a better trader, but realize this: we don't have an environment that will allow us to run for 20 days in a row like we had, last year or year before last. We simply don't. But DocuSign is really strong, and it's broken back out, and now it's coming in and it's making old resistance look like support, but you have to wait for tomorrow. Guess what? If it opens up higher tomorrow, then, and it closes above this area right here, you're going to go, all right, I've got my support ledge, and it's only $2 wide. So now this is a great candidate. If it comes in tomorrow and it holds this low and it closes above this area, and you get in day after tomorrow at 60, you've got a $2 stop. And that is much better in order to manage that risk. Okay? So that one, really great to look at. Another one, and see what we are seeing is a lot of charts that are trying to base, but are in a little bit of a rough patch. And so this one has a little bit of a rough patch, and I'll tell you why. Okay, first of all, let's move it up and then size it up again. You see the slope of this weekly moving average? It's flat, okay? And although I am holding support, what I'm not doing is breaking higher. I'm trying to hold support, and here I am lower. So although this chart has a very good fundamental reading, right, and it shows bullish, what you want to do is make sure that you can position yourself in the trade, if you choose to, as close to support as possible. So this here is 157. It's sitting at 169. I say, let it dance around a little bit. See if it can come back maybe to, what is this number? 162 instead of the 157. And then you might be able to take that position. Remember, no matter what strategy you're using, at the end of the day, the market must agree with what you're trying to do. And the way you can see whether the market agrees with you is by simply looking at where everybody else is buying. So although I would go, you know what, target rich is awesome, I love this. The reason it's called target rich is because it identifies areas that allow you to profit in wide varieties, right? Depending on what you'll do. And it's a military term. My husband gave me the name, if you're wondering. So here you go. That's what you're looking for. A little bit of a fade to pick up your position and run with it. All right? Very important in this kind of market that when you position yourself, you do it with the wind at your back. All right, here's another one that looks a lot like DocuSign, right? And it also was a beast during the COVID season. Call it a season to be friendly. Okay, so here we are. It had a base that looks like about 12 weeks, and then it dipped lower, and it stayed here from September all the way to here in January, where it began to break out. Now, look at what happened when it broke out. It came right into old resistance. So let's say you saw the buy setup and you took it and you were holding on, but you didn't notice that there's a short setup to the left. You're not going to be able to capitalize like you normally could in this kind of space, right? You can really do a lot if you spend a little bit of extra time looking at whatever strategy you have in place that tells you, hey, this is what I can do. I can go into this area. Notice how many setups are sitting in here. Here's what I want to share with you. Big secret. Not really. It's everybody that trades a long time knows this. All right. When you see yourself sitting, when your candlesticks start sitting above your moving average, and that moving average is moving up, if it says short setup, it's moving into support. Because trend is going to be master and commander of your chart. Okay? So you might say, but Anne-Marie, what about this short setup? It's a great trade and the trend is still up. Yes. So what do? When your setup comes, you look 2 candles to the left and you go, all right, if it's a short setup, that's going to be my first target. If your sell zone comes in and you're sitting right at the edge of support, chances are buyers are going to come in when trend is in that direction. For here's the short setup. It's already making lower highs and lower lows already. So that the moment that this happens, you go, wait, 2 candles to the left, I'm already making lower highs and lower lows. Here's my sell zone. And I'm going to be able to move with that chart into the support as long as it goes. Okay? So the key event is going to be, 1, have I looked at my candlesticks? Am I far away from my trend line? Right? Notice how it just bounces into that moving average, pops up, but then rolls over again. Easily, if you have a short setup here, and this number, let's see what that number is. $68. Up here, the high of that candlestick. Here at 71, and then again at 72, those are going to be your stops, right? They're going to be your stops. If it doesn't touch them at all, you're in great shape to follow your formations down. Using this technique, every single strategy that you have at your disposal on the MetaStock platform will deliver increased power because you're paying attention to what the broad market is doing. Many of us, because we don't spend a lot of time in price action, we don't realize what the traders are trying to do. So here's the next step for Wayfair. This is a very important zone. Look to the left. We can see there were buyers here. They turned to sellers. There were sellers here, and now it's filling a gap. So what's going to happen tomorrow? Tomorrow, it's either going to come in and hit the lower edge, or it's going to try and recover. Now, guess what? See the slope of this line? When it recovers, it's going to run right into sellers until it pulls back and stops heading lower. As long as you see yourself watching these candlesticks and going, what should the traders be doing? Well, it moved all the way down here. It filled the gap. So it's either going to come in and give us more price action here and have a drift down, or it's going to come into the area and then begin to bounce. My thought is if this chart recaptures 50, it's going to possibly run into this 55-ish area. Some more sellers are going to come in. And then if it comes back and holds 50 again, this chart is going to recover just fine. All right. What are some of my favorites? I love cybersecurity. This is Fortinet. And look at the move these guys had in 2020, right? Cybersecurity off the rails. And now look at the different personality this stock has had from here. Very important to consider. So here, people are just moving along, just buying it up week after week. And then right about here, at the end of 2021, we see this collapse. And so this really is an example of what 2022 did to everybody, or a lot of people, which is absolutely destroy them, because they did not realize that everything here is unnatural motion. Now notice what price actions come in to do. It came in, it's been holding support since August. And over the last 2 weeks, it's moved up and over into this space. So what do you think? My thought is it's running into old resistance. Come on, Fred. Old resistance right here. And so what's it going to do? Here's our buy zone. If you see something that's old resistance and you've got a chart that looks like this, you've got to take profit. You have to think in your mind, what's everybody doing these days? And what you'll notice is these days, people are not buying breakouts and holding them. They're not really selling breakdowns and holding them either. What we're doing is sitting in these choppy motions that give us a little bit of price action to the north, and then, you know what, we're in trouble someplace else. Now, the beautiful thing is that you see this right here, this is volume, and it's been on the rise with these increases in price. So this one, I believe, is a beautiful setup that's going to come here in order to get yourself the best risk. You would not go buy it at 59 because, frankly, there's a ton of support near the 50 area. So what you want to do is let it come back and see if it comes into one of these levels, like the last buy zone, okay? So you might say to yourself, well, what if it leaves me? It won't. This is not the environment of stocks moving all the way up and not coming back. It just is not. Absolutely, 100% is not this kind of environment. This is the kind of environment we're in. And when we get to resistance, we have to take some profit. But this is another setup that looks really nice. They hardly fell at all today. So there's strength there. But tomorrow we could shake some trees. And if it comes into any of these lower areas, what you're doing is minimizing your risk. So let's say you come in tomorrow and it fades, but it begins to bounce right around here, right? And so that number looks like it's about, what is that? 56, all right? So let's say you buy it at 56, but you realize that if you're staring down a couple of candles, this area around 53 is important. So what do you want to do? You want to size down, and if it fades into that near support, when it begins to bounce, then you can add to your formation, as long as this group holds that support edge. All right. This one everybody is talking about. Where is it? C3AI. Now, I'm not a big fan of what's going on in here, and I'll tell you why. Everybody's just mad crazy about the AI storyboard. And you've got to remember this. Anytime you look at news, if you watch any news, everybody's got a narrative. And the narrative, you're going to be able to see it. Right now, they're going soft landing, and now, well, that was a few days ago, a couple weeks ago when the market was moving up. Now that it's moving down a little bit, it's no landing, hard landing, back to recession ideas, whatever it is. It's a narrative that flows through the market. If you focus more on your technical indicators and your strategies, and you don't think about the narrative, you're going to end up finding execution that's going to give you a really nice price entry. So what's happening here? We had this sideways action from, again, September, October, and then all of a sudden, like in the end of January, we went off the rails and lifted, let's see, it went from 10 to 28. So that's 300% or 200% gains off of that amount. That is incredibly unrealistic in the current environment. And so now it's starting to pull back. Where should it pull back? My suspicion is the 50% marker. So if it went from 10 to 30, it's going to come back to 15. Why are you saying that, Anne-Marie? A 50% retrace is super common, and you know, it's nearby this number where we were 4 weeks ago, right? $16. My suspicion is this comes in all the way down to here and tries to bounce again. Okay, it's run up too far. If in 1 month a stock moves 200% of its initial value, it's run up too hot, too fast. And so it's going to give back gains. Not only that, take a look at where resistance is, right? Look at all this congestion. 1, 2, 3, 4, 5, 6, 7 weeks touching that price. It came up there, dropped like a stone. All right, so this one, you got to wait until it comes down into this area. If you say to yourself, hey, I want to short it, you can, but it's above an upward sloping moving average. So if you short it, you could get a wick like this, and the short might last 1 day, and then it would pop right back up, right? So you have to be super careful about those sorts of things. All right, what is the last one I want to talk about? And then we'll open it up to some questions. Lennar. Okay, so Lennar, they make houses, right? And they've been running off the rails. Now, this is a harmonic pattern. I won't draw it, but it is a harmonic pattern. And when you think about something like this, if you go, wow, that's really been beaten up, and you go, you know, it's really, really, where did it give up? It gave up gains from 2020, right? Just absolutely destroyed. This chart was just destroyed. And so it double bottomed. Notice, how do you know a chart's changing direction? It stops going in the direction it's going. So how long does that take? It takes a while. And so it took a couple of months for the chart to retrace and then finally have the buy signals to move it up. Okay, now all of a sudden it's sitting in a sell zone, 3 weeks. Now here's where you use some sort of fundamental backdrop. If rates are going higher and new homes are getting canceled and fewer people are buying them, you might say to yourself, wow, I don't know. I think this should be a short. But here's the thing. If you use a strategy, and that strategy, and you put a trend line on it or a moving average, and that's moving straight up, it doesn't matter if you think it's a short. Nobody's shorting it. You have to wait until it breaks down before you short it. And so what happened Friday, it lost its region, had the short set up. It's sitting in this area. You know, my thought is people are going to try and buy it again right around this zone until it fades again. Do I think Lennar should be going up? I don't. I don't think Lennar, Toll Brothers, any of them should be going up. But they were. And so if in your mind you go, you know, that just doesn't look right, don't put yourself in a place where you've got a bias conflict. When you have a bias conflict, what happens is your mind is constantly struggling against the direction of the chart. So if you look at a chart, you go, oh, that shouldn't be moving up. Don't trade it. Look for something else that makes sense to you. All right, so last, I'll talk about Schlumberger because these guys are, you know, I like them. You just have to wait for support action, and I believe that it's coming into play right now. Schlumberger should do fairly well. Notice, what's the trend? It's up. We just got a sell zone, so what would happen, right? The sell zone says, well, I've got a moving average that's up, so I better take profit when it comes into my moving average. It's as simple as that. Where should Schlumberger come back into play? I'm going to look at a monthly chart here. I'm going to see what it does. And if you want to look at anything, any charts, you want to talk about whatever, just let me know and we can cover it there. All right, take a look at this. It came into that wick. Look at this. Monster congestion. Look at how many months here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1 year sitting at this price point. 1 year. So people are going to look at that and they're going to go, oh, I'm going to sell that. Right? Here's a buy zone because of trend. Now remember, our strategies tell us what should happen if the trend remains in its state. But within that space, you've got to step back and go, wait, where are the traders going with this price? And you can see from a monthly perspective, 43 is where the support structure sits. There's a bigger one here at 47, but my thought is you got to wait for this one. Just put an alert on it, wait for it, let it come back, because 12 out of 13, 14 months, 15 months, this chart just could not get out of this range. So there are a lot of people that thought, hey, I'm going to buy this, and then they don't sell and they wait all the way over here, and as soon as they break even, they're like, I'm getting out of here or whatever, right? So we really want to be careful with Schlumberger here. I like the chart, but I do believe it needs to come back just a little bit more. That's just my gut with that one. All right. I'll leave the others. Anybody got any questions? Anything that you want to talk about?
Tesla. I'd like to get your opinion on Tesla. It's had a nice little run up this year.
Tesla. Yeah, it sure has. It sure has. You know, it was so oversold. Yeah. All right, so it's definitely sitting in a bullish place, and look at all the volume, right? That is kind of a big deal. All this volume sitting up in this area, just really continuing to climb as the price action moves. So of course we can see from a weekly formation, the chart is in recovery. The question is, where did the buyers sort of give up the ghost in terms of saying, you know what, I got to get out? And interestingly, you know, it's just a little bit past the 210 area. So, wow, what did I do there? Operator error, as always. This area, about 214, gives us the space that really knocks us into the last time we had a short. Now, it's currently in a buy formation, but because it moved up into here, it is telling us to take some profit for sure from this space. Now, what's running what's making this Tesla move the way that it is? I don't know, other than it was just beaten terribly, just absolutely beaten. The news on Tesla is, hey, they're going to have to open up their charging stations to let other people use them, which I'm like, I don't even know how that's legal, right? They put in the infrastructure, and then all of a sudden the administration comes in and says, oh, by the way, you're going to have to make that usable for other vehicles. So I don't know how that's going to really work. That's the first thing. The second thing is they've dropped all the prices of their cars, which leave the people who just bought cars before the price drop sitting upside down if they want to resell their vehicles. I don't have a great feeling about this bounce holding. If it does, maybe it'll do something like make an inverted head and shoulders or a weird little cup and handle. And so that would mean we'd need to look at about 165 for it to come back into. Now, you could say, well, Anne-Marie, using what you just said, here I am at my moving average. I had something come back. It gave me right into the support zone. Shouldn't I have buyers here? Yes. Tomorrow we could have buyers here, but where are they going to? Notice high, higher high that collapses, lower high, higher high that collapses. So right here, we've got a pocket of supply. Traders are not leaving. As the buyers come in, they just get forced out to the side. And so I just don't have a good feeling here. And it might be more from a fundamental space. But yeah, that's my gut. My gut would be, if I were trading this, because I do use a lot of options, I would sell the 160 put way out in the future, like June. Maybe it'll give it a chance to come back by then. So that would be my thought about that.
All right, one more. This one's been asked for a lot over the course of the last couple of days, and I'll just UNG.
Oh, okay. All right. So nat gas. What do I want to say about that without sounding wonky? So, okay. Of course, we can look at the chart intraday and see that it's a train wreck right now. Okay. So let's take a look at the weekly first, and let's see what kind of wind is at our back. Okay, this, I wouldn't touch this with a 10-foot pole, actually. to be long. I wouldn't touch it. Now, is it eventually going to lift? Yes. And it's going to shred people who are short. But it's literally been basing in this region for, oh heavens, 2019. And so the question then becomes, well, what are the traders waiting for? And what they're waiting for is somebody to hold traction. Now, notice this. You see all this volume and you see price going down? They are running for the hills here. So let's think about why. Back in the winter, actually, it's been a whole year, actually, since Putin decided he was going to rush on in to Ukraine and make a mess of things there. And so I believe that nat gas really started running up on those sorts of things, right? People were also talking about everything going on in the fuel space and how we just aren't going to have enough fuel. We're going to have an energy crisis. Well, turns out everybody's got plenty of nat gas, and the good Lord has given us a very mild winter, except for, those of us living in the Alberta Clipper right now. So, short story, which is impossible now because of my rambling, this chart is not going to hold. It is not going to hold. Why? Because of what this volume is telling us. Now, when will we know we've got a shot? And that is fairly simple. What we have to do for something like this. Now, a lot of us, we would love to be heroes and buy the bottom, but I'm here to say that the bottom is not in sight. As a matter of fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, it tried to hold support and then fell like a stone. And today, we closed near the low. Now, the whole market closed near the low. But if you think, hey, I'm going to buy this here, if you want to do that, here's what you want to think about. You want to make your stop very tight, and you want to take profit at the congestion zone. So how would you do that? Let's say you came in tomorrow and you said, you know what, I'm buying it at 720. The chart is telling us that there are a group of buyers that literally are holding the bag at $8.23. And they're saying to themselves, oh my goodness, as soon as it gets to 823, I am getting out of here. And that is going to bring price down again. Now, if it brings price down again and it doesn't lose 720, then you're in really good shape. But if it does, it's going to run way far. And I just read something that said they thought it was going to go back to $4 and some change. So would I short it? No. I have tried to work with nat gas, but I do it in the futures market, and it's a widowmaker of epic proportions. So I don't touch it because it can be extremely volatile. And that is what's happening. Now notice today's fade is on very heavy volume comparative to the last few days. Not like this one, but this is something you want to be very careful about trying to pick a bottom. There's nothing telling us that this chart is out of the woods.
All right. So tell us how you feel about natural gas. I'm just kidding.
It terrifies me.
I saw that somebody pointed that symbol out earlier, and I looked at it. And what kind of popped into my head is when you said to me one time, "Cheap stocks get cheaper." That's just kind of the first impression I had.
It's true, though, right? And we don't want to think that because everybody wants to be a hero to go, man, you know what I paid for that? But it is always the outlier for it to bounce. And if we live in the land of probabilities, we have to go with the group and how the group is feeling about everything, and just pay attention so we can get in on the cheaper upside, right? We're not paid to be leaders. We're paid to be first adopters or excellent second followers. That's just how the market works. We don't have the power to move the market on our own. So we just have to find the stocks that put wind at our backs. And that's all about trend.
Now, let's see, I'm going to talk a little bit about your add-on, but I want to kind of just, if people want to kind of follow kind of the work that you're doing, would you recommend they go to your website? Do you have social? Like, what's the best way to get you, Anne-Marie?
You know what? Finding me on social media is easy, and it's at Anne-Marie Trades with an E, but no hyphen here. And you can also go to my website. I put up, because I love my signals so much, I don't put them up in the broad markets very much, but I will put up my MetaStock charts for my futures quite often. And see, here's where we are in the future space. I love the futures market. It's absolutely beautiful space to work. It's tremendous. And MetaStock does such a fantastic job of sending me to my old resistances or bringing me down to my support structures. I really, just a big fan of it. But that's, yeah, you can find setups there and commentary there also.
Awesome. We one of the things Kelly was saying is we love what you've done with the new charting engine in MetaStock 18. It looks great. We love the charts.
Thank you. Thank you so much. I am such a big fan. I really just absolutely love how everything works. It's just fantastic. It's been so good to me.
All right, and at Anne-Marie Trades, everybody. Thank you very much, Anne-Marie. I'm going to talk a little bit about your add-on, but I appreciate the insight.
Thank you. Thanks for listening to me, folks. I really appreciate it.
Okay, very good. Thank you very much. All right, let me go ahead and kind of make me the presenter here. And we'll do this, and make presenter. And I really, in fact, I saw like the way she had volume and I had to go make my own take on it right here. But with the Anne-Marie add-on, one of the things that we just did was we spent a lot of time kind of reworking everything and kind of like the way the signals are structured. And I think it looks great. So here's the UNG that we're working at. And I had just pulled it up because it was a simple request. And if you look at it, it's right in the sell zone. So anyway, let's jump over to one of the, I'll just kind of talk a little bit about this chart. It's been a great day. With it, you're going to kind of have the last year's price, the last month's price, the support and resistance that are drawn automatically. You have these short setups, and this sell zone came in automatically today. It's going to give you some really good commentary. I do like the way that Anne-Marie's kind of worked with William to put this commentary together. For example, let's go ahead and kind of zoom in a little bit here. Gives you an idea of what the daily swing trend is doing, the short-term trend is doing. Right here, we've got a sell zone, and it's a trend trade, a level of interest, all kinds of just really, really interesting stuff that's been worked through and put together there. Of course, there's scanning. I've talked about all day how much scanning can kind of help you. And of course, we do have scanning that's available in here. You've got the long entry signals. You can do recent inflections of short entry signals, and you can kind of just dictate exactly what you want to find and be able to go and narrow this down. Again, we just did a major rehaul of this, I think we just finished it like in like January, just last month. So this year, of the target range trades. And it's really, really, in fact, if you own the target range trades, what you'll want to do is come up to our downloads page. We would have dropped you an email saying a new update was available, but just download the new version. It's got the detailed real-time signals, setups, the triggers, that detailed commentary, the full market scanning for the setups, the triggers, the recent inflections, and a really good user's manual. So normally the add-on is just a one-time cost. It's $499. The conference offer that we're going to do today is $399. We're going to include with that a free trial to MetaStock, our white glove installation service if you need help getting it running, training on how to use MetaStock, the Unleash the Power of MetaStock, unlimited technical support. I say this all the time, but I don't think I've said it yet. One of the things we're really proud of here is that we have more people in support than we have in sales and marketing put together. But if you ever have any questions, you can give us a call. You can chat online with us. And one of the things that I'm really proud of is there's weeks and weeks and weeks in a row where we'll get 100% perfect feedback on people that have talked to support, and then they come back and they fill out the surveys and they rank us very, very highly. So I think one of the biggest things that we do is our support. It's just awesome. They're phenomenal. They do a good job. Anyway, to take advantage of this or any of the other offers that we've done today, give us a call. 800-882-3040. You can visit us online at metastock.com/sales chat, and you can give us a call at 800-882-3040. So I hope you enjoyed today. I want to kind of do a brief overview of what's coming up tomorrow, because we have another great lineup ready for tomorrow. We're going to kick off with Steve Bigelow, a good friend of mine and a great candlestick trainer. We had somebody ask earlier today what's the best candlestick patterns, and he's going to actually kind of talk about the candles, and he does a really good job. After that, we're going to do the Trader Chick, followed by Ed Downs. Scott Brown is going to talk about the forecaster. A true market technician, Tushar Shandy, wrote some of the best books on trading. Peter DeLaw, we've got Jeff Killian and Jonathan Rose and Norm Hallett. So another really, really good group of traders lined up for tomorrow. I hope you can join us for it. We'll say really quickly thank you to Stocks and Commodities and CMT for sponsoring today's event. If you do want to take advantage of any of the offers, or even just try MetaStock on our extended trial because it's been rated so highly for so long, get in touch with us. metastock.com/conf promo. You can also chat online at metastock.com/sales chat, or give us a call at 800-882-3040. Thank you everybody for coming today. Another great session. I look forward to seeing you tomorrow for another jam-packed day full of really, really good technicians. So see you tomorrow, guys. Thanks for coming. Stay safe and healthy until tomorrow. See you again then.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.